That music is supposed to go away. Anyway, I hope you guys can hear me. My name is Jeff Gibby. I'm going to be running the control room today. It's a bit of a snowy morning here in Utah. I want to say thank you for coming. I hope you're doing okay today. We have a great lineup of speakers. We're going to kick it off here in just about 2 minutes, 21 seconds. So thanks for coming. See you in just a minute. It's good to see you.
All right, thanks. Hey, good afternoon, everyone. Thanks for joining us today. It's actually our first official MetaStock Euro Traders Summit that we're hosting today, kind of just with a focus on Europe or even just London in general, where we're going to have a lot of our partners on talking about the markets, talking about their different trading strategies and ideas throughout the day here with you. And I'm really excited with all the guest speakers that we have that are going to be with us. And just to kind of kick things off here, I will go ahead and go through our quick legal disclaimer. So this demonstration, it's designed to instruct you on using MetaStock and the accompanying software plugins, and it's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And now that we've got that out of the way, I do kind of want to give just a quick introduction to MetaStock. So I'm Bobby Hiller. I'll be the host today, and I work with MetaStock. I've been with MetaStock for over 6 years now, but the average employee has actually been here about 10 plus years. And that off the bat lets you know that MetaStock's been around for a while, but really we've been around for about 40 years now. And MetaStock can help you to scan the markets. It helps you test your different trading ideas. We've been rated as #1 in our price category for technical analysis for over 29 straight years in a row, according to Stocks and Commodities magazine. You can get like real-time or end-of-day systems with us. And we'll be talking about MetaStock more throughout the day, but almost all the presenters you'll be seeing today utilize our software. So if you haven't checked out MetaStock before, you want to learn more, go on over to our website, metastock.com, or you can ask questions throughout the day. So our first speaker today, I'm actually really excited to have him on. I've been using his trading system that he has with us for a while now myself, and I'm actually, I really like it. It's Colin Abrams, and he's been an active trader since the 1980s. You know what, I'm actually gonna let him too kind of give his own introduction and give you the real bread and butter there instead of just reading to you the bio. A lot of you might have already seen that we posted up earlier, but I know Colin is in with us. Hey, Colin, how are you doing this afternoon?
Hi, Bobby. Yeah, all good, thank you. Thanks for having me on.
Yeah, it's our pleasure to have you on. I'm really excited to have you kind of go through today's demo that you've put together for us. I'm going to go ahead and make you the presenter here so that you can share your screen with us. So you should be getting that in just one moment here.
Okay, can you see my screen?
Yep, I see. It looks like you have a PowerPoint up.
Right, that's it.
And now MetaStock. Yep.
Right. Okay, should we go for it?
Yeah, I'll go ahead and let you take things away, but I'll be here in the background.
All right, great. Well, welcome everybody. As Bobby mentioned, I've been involved in the market since the mid-1980s. I lived through the 1987 crash where I lost almost all my savings as a second-year university student, and I've been through quite a few booms and busts since then on the market. 97, 98, 2000 bear market, 2008, and of course the current one at the moment. And of course, all of these phases provide opportunities for the market. What I do is I'm a trader, short-term, also a long-term trader. You could call it investor, but I see it more as being a long-term trader. I manage funds. I'm also an analyst. I do research. I do a weekly and monthly newsletter. I consult to hedge funds and institutions, and I also train people how to trade as well. So throughout this session, I'm going to be using MetaStock. In fact, I've been using it since 1994. I use it pretty much every single day of my life. Yeah, I'm very familiar with it. I love MetaStock, and that's what I use. So I've entitled this session, let's just put up my PowerPoint. I want to talk about market entries in this session, but before I do that, I want to exits are both crucially important, but I want to ask you, what in your opinion is more important? Entries, where to get in, or exits, where to get out? Which is more important? Must be honest, it's something I've thought about for years and years and years. And I'll tell you what I think, but I think let's just put up a poll. Bobby, if you want to put that poll up, I'd like to hear what you think. What is more important, entries or exits? Or are they both equally important? Again, it's something I've thought a lot about, and don't know if you thought about it, but let's see what the results are. See, not everyone has voted yet. Don't be shy. Don't worry if you disagree with me or you agree with me. It makes no difference. I just want to hear your opinion. Okay, about roughly half the attendees have voted so far. Let's see if we can get a few more people to vote. What's more important, your entries or your exits? So far we have, well, maybe I'll wait until a few more people have voted before. Not sure if you can see the results so far. I can see them here. Let's get a few more people to vote. We're almost done. Okay, well, I think let me continue from here. Just more than half of you have voted. Let's see if we can get a few more votes. So the majority of you have said, so far 53% of you have said that they're both equally important. 33% of you have said exits are more important, and 15% have said entries are more important. So at the outset, let me just say, for sure, they are both important, absolutely crucial. For many years, I thought exits were more important than entries. And again, you don't have to agree with me. Feel free to disagree and feel free to ask questions. I love it when people ask questions. Also makes it more interesting and exciting for me. But for many years, I thought exits were more important. And I now believe that entries are more important than exits. I can see entries were the lowest on the poll over here, but I think entries are more important than exits. Of course, they are both critically important. Don't get me wrong, but entries are more important in my opinion, and for two reasons. Number one, money management, risk management, and number two, the psychological management, managing one's emotions while the trade is on. And I'll tell you why I think, for a number of reasons, why I think the entry is more important than the exit. For sure, by the way, let me just say, the exit determines whether you make money, how much you make money, or how much you lose. That's dependent on the exit. For sure, I agree with that. But I think if one can get the entry right, then 80% of the trade is already won from the start. And I'll tell you why. If you can get in at the right point, let's say you can find the right point to get in, normally most good trades will become profitable almost from the beginning or very early on. So if you can get in at the right point, you can then know very quickly if you're wrong on the trade, and then you can just get out of the trade very quickly and lose as little as possible. So that's one reason on the risk management side. If you get in at the right place, you can know very quickly if you're wrong. So that helps with risk management. And also, as I said, because most good trades, winning trades, move very early on, mostly or very often from the start, that allows you to get that initial boost of a profit. And that allows you to then move your stop up to break even, or to even lock in a bit of profits, let's say about 25% of your position. That is a huge advantage. Trading is all about managing risk, not so much the technicals or the fundamentals or whatever you're using to determine where you get in or out, whether be it flipping a coin or whatever you use. Trading is mostly about risk management, and then of course managing your emotions, which is trading is a mental game. That of course is another topic all on its own. But if you can get in at a point where you know very quickly if you're wrong, so then you can lose the smallest possible amount on your stop loss. And then if you get in, as I mentioned, at the right point and the share moves in your direction, or the currency, whatever you're trading, you can then move your stop to break even very quickly, protect your downside, and even lock in a bit of profit. So another benefit of that is also the psychological side. If you get that boost from the start, that helps the emotional side of trading tremendously. Any of you, all of you that have done trading, if any of you haven't done trading yet, you'll find out very quickly that trading is all about managing your emotions. It's really a mental game. And if you can get anything to help the mental side of trading, that's a huge thing. Just grab onto it. So in my view, getting that correct entry just takes so much emotional pressure off the trade. If you can get that initial boost in your direction, allow you to bring your stop up to break even quickly, lock in a little bit of profit as well, takes a huge psychological pressure off you. So that is why I believe entries are more important than exits. Again, of course, exits are crucial, but entries, I believe, particularly also besides the risk management, that psychological component is just so crucial. I mean, trading is about 90, 95, 99% even psychological. That's how much it is. So anything you can get to help the psychological side is worth having. So with that introduction, let's talk about just some entries that I'm gonna just go through a few different entries in this session. And you'll see some of the entries that I use. You'll see how I scan for them in MetaStock as well. Without MetaStock, I just wouldn't be able to do this, because I can scan, let's say, 500, 600, 700 shares, 1,000 stocks in a minute or two on MetaStock, and I'll then just look at them and use my discretion to find the 2 or 3 best opportunities. I mean, that takes me a couple of minutes. would take me hours if I didn't have that possibility. So in terms of exits, firstly, to make the trade easy for yourself, you need to find a trend. The trend is the basis of all profits. Think about it, the last time you were swimming in the sea. Have you ever tried swimming from the shore out to the other side of the waves? It's very, very hard to do that. It's going to use up a huge amount of effort, and chances are the waves are going to push you back and back and dunk you under the water. But you probably will eventually get to the other side of the waves, as opposed to starting from where the waves are and swimming back to shore. So much easier, almost effortless. The wave just takes you, and so much quicker as well. So that's why we're looking for a trend. Yes, there are counter trend methods as well. They're much harder to trade, in my opinion. But the easiest way to make money in the market is to find a trend and enter in the direction of the trend. So how do you find a trend? Well, really what you want to do is you want to just, you could eyeball it. I could put up any chart here. Maybe I'll just put up the S&P. So, you can literally just put up absolutely any chart. 1 second, let me just get that back. This is a weekly chart, by the way. You can just see clearly there's an uptrend, a downtrend. Okay, we're in a bear market. There've been sideways phases like we've had in the last few months, generally sideways. Before that, we had a big bull market. So you could either just eyeball it. You want to see from bottom left to top right, or top left to bottom right, or sideways is sideways. So one of the things I use is in my what's called a Paragon toolkit, which I use myself and I've developed and made available to MetaStock customers. And again, this isn't to sell you my toolkit. I want to just show you what I actually use. And of course, I've put it together as a toolkit because that is what I actually use. So I've got a number of different criteria here, scans that I look for. One of them I call Trend Finder 1.2. So what I did was just about 20 minutes ago, I ran the scan on the FTSE 100 stocks, because I assume most of the people here are either from Britain or from Europe, as well as I also ran it on the major currencies that I look at and some of the main overseas instruments of indices and commodities, etc. And I've got the results of each of them. It literally took a minute or two. I could run it again right now as we speak. So on my trend finder, for example, if I click on that column, the uptrend, all the ones with the 1 meet my definition of an uptrend. If I click on downtrend, all the ones with the 1 there meet the definition of a downtrend. So, okay, let's look at uptrends. You're probably familiar with all these companies. I'm not familiar with all of them. Let's see this one. 3I Group or 3L Group. So what I do here is whenever it's in an uptrend, it'll be blue. When it's in a downtrend, it'll generally be pink. This is not an amazing example of that. Let's just get that back. And that's why one needs to always visually find the best examples. That's a downtrend over there. This is a daily chart that I'm looking at. Let's look at another one, AB Food. Okay, you can see a downtrend there, and we're starting an uptrend over there. Here was a downtrend, and when you got a downtrend, you want to look at some short signals, and uptrend, some long signals, and I'll show you some of the signals that I use as well. Let's look at Antofagasta. Look at that one. So there we had a nice downtrend over there, uptrend, and we're in a new uptrend over here. You'll note this resistance line here. It breaks out above there, closes above there. We'll have a trade to the upside. So that's just one quick way of finding a trend. Let's look at some of the downtrend ones. BT Group. Now this is just a beautiful example of a downtrend. You can see the whole thing is highlighted purple or pink. And I've got some of my sell signals that have popped up here as well, which we can talk about. So this is the kind of trend you want to look for. You'll notice, by the way, the downtrends are pretty smooth because we are in a bear market. So we've got some really nice downtrends. This next stock is DCC. I don't even know what the company does. Of course, if you're using technical analysis, you don't need to know. But nice downtrend here, and you'd be taking shorts in the downtrend. Look at one more, Everaz. whoa, that's just a collapse, a crash in the stock from 350 down to 53. So you can see there are a few shorting signals over there. Let us look at the currency. AUD New Zealand, Aussie New Zealand. So here we're in a nice downtrend and some shorting signals, giving a shorting signal today, by the way, pending today's US close. There's a shorting signal. In fact, I might be able to find you some trades while we're in the session as well. Please read the disclaimer, but if we can do that, why not? So here's one setting up here, AUD New Zealand, assuming it doesn't rally strongly by tonight's US close. There's a short over there. There was one earlier on. This phase here, a nice up phase over there. You'll see when it's in a sideways trend, you get blue and regular green and red, and I wouldn't trade those phases. You want to see it breaking above resistance, okay, and then you want to see it moving to the downside, breaking below support and moving down, and we've got a downtrend there. So let's look at one more on the downtrend, the Swiss franc, also in a downtrend, some shorting signals over here. So really the point is you want to find a trend. You could just use something like a 50-day moving average, 20-day moving average. And of course, as you know, this is grade one stuff. You get uptrend, a downtrend, or a sideways or trendless market. But something that you should note is that not all uptrends are created equal. Sometimes you get a kind of gently zigzagging uptrend, which is certainly still an uptrend. And sometimes you get a very linear, almost parabolic type of uptrend, totally different type of uptrend, and you generally trade them differently. So you really want to find the strongest uptrends. Those are the easiest ones to make money. It's like swimming in the strongest possible current in your direction, swimming with that current. That's really what you want. So whether you use a scan like this or a 50-day moving average or 50 period, 20 period, whatever you use, you want to find a nice trend. So now let's look at some of the signals that I look for. And by the way, please feel free to ask questions if you have while we're talking. And there's no such thing as a silly question. So please ask whatever's on your mind, and I'll do my best to answer that for you. So one of the things I look at, and let me just preface this by saying that what I found over trading from the 1980s, and trust me, I've been around the block and back. I've gone into the most complex methods to the most simple methods, to looking at absolutely nothing on the chart, just price, trying to build my way up from there to Elliott Wave, Gann, Fibonacci, which I still use, and some very complex things, and then combining them in many ways. And I've tried everything basically, and I still find simple works best. The simpler, the better. So one of the entry methods that I use that I find works really well, and again, all these methods I'm going to show you today work on any time frame. One of them is just a basic Elliott Wave signal. A Dow Theory signal, not Elliott Wave signal, Dow Theory signal. Now, it's really just a zigzag. It's not pure Dow Theory, because pure Dow Theory would use the Dow Jones Transportation Index as well. But really what we're looking at is just an A up, B down, A, B, C, D. Okay, when it takes out the B leg, it's a zigzag, that would be your buy signal, B1. There are more complex variations of this, but this is your basic Dow Theory buy signal. It's also called market structure. Again, as I mentioned, this isn't pure Dow Theory because there's no transportation index that we're looking at, but it's the basic zigzag up. And when it breaks at point B, you've got a higher low. And when it goes above there, 1 cent or 1 tick above point B, you've got a higher high as well. That's your basic Dow Theory buy signal. If we look at the Dow Theory sell signals, it's exactly the opposite. You've got a lower high, C is lower than A, and then 1 cent below point B is your lower low as well. So for a Dow Theory sell signal or market structure down signal, you have A, B, C, D. When it takes out the D point, the B point, you've got C is a lower high than A, and S, 1 cent below B, is a lower low. So you've got a lower high and a lower low. Just a basic signal. And why would you want to sell or sell short there? Is because the fact that C didn't make a new high is telling you the sellers are coming in early. Conversely, with a buy signal, why would you want to buy there? Because the fact that point C didn't make a new low is telling you the buyers are coming in early. So 1 cent above point B is your buy signal. So what I do now, if I go back to a chart, and let's find one that had a really nice trend. Well, this was just an unusual trend, this ever has. Let's see what else we had here. Okay, DCC. I don't know what the company is or does, but once I've got a trend up or down, I'm then going to look for a signal in that direction. So one of the signals will be a Dow Theory sell signal. So in other words, I'd want, as I showed you here, I'd want a lower high and a lower low. As soon as it breaks at point B, that is my short signal. So this is it here, and I've got it labeled over there on the chart. Let me just make sure I've got the right scan. Yeah, so here I've combined the trend, what I call trend finder, and the Dow Theory signals. So MetaStock found this for me in seconds. This is run on an end of day chart. I can run this, of course, on any time frame as well. The trick really is to look for the best trends, the strongest downtrends or the weakest downtrends, or the strongest uptrends. And then you look for your signals. So we're getting a sell signal here as well on the stock. Well, that's all. These are the ones that came up in the scan earlier on, a short while ago. So this stock DCC is giving a short signal as well. If I put it on a line chart, you'll see we've got a lower high and a lower low. Let me zoom in there. That high is lower than that, and we've got a lower low below that point. Likewise, the signal there, that high is below that high, and we've got a low below that low over there. So the software will find it for me in MetaStock and give me a signal over there. Again, it doesn't matter what you're trading, stocks, Forex, indices. I trade stocks and indices mostly and a bit of Forex. It works on all time frames. Also use it on the higher time frames, weekly charts. If I get a signal on a weekly chart, let's say I run a scan on a Sunday, and I get a really nice looking signal based on that, I know there's a very good chance that instrument is going to trend in the direction of that signal. And then I could either enter on Monday morning or look for shorter term entry in the direction of that weekly signal. Likewise, on a monthly chart, you could do it on a 1 hour chart. It's all the same concept. It's a fractal, the same signal works on all time frames. Right, so let's look at the GBP New Zealand. That came up as, okay, it's entering a new downtrend based on the trend finder. Okay, so that's really my Dow Theory. We have combined Dow Theory with trend finder. And this is the scan I ran that came up just before the session today. The euro was one of them. Let's look at that. You can see, by the way, you notice how that window popped up in MetaStock telling me that it's giving me a buy signal for today. This is based on trend finder and the Dow Theory combined. So you can see the bars have turned blue, telling me that it's now in a new uptrend. And we had a buy signal 3 days ago and one today so far, pending today's close. And by that, I mean the US time close. So if I put this on a line chart, you'll see that we've got here a higher low and a higher high at the moment as we speak. Slightly higher high, and that's why it's giving me the signal. Okay, I'll just put it back on the candlestick. So I'm going to wait to see how this closes later on tonight. And if it's still giving me a signal, in other words, that this bar, today's bar, is closing above the bar of, that would be Thursday, then I'll have another buy signal over there and worth taking. You might want to be a bit more conservative and wait for to intraday take out Friday's high. That's also totally fine. You could put in a stop entry order in above Friday's high, 105.88, to enter you into the trade. But this is how I'm finding trades here based on simple technique of a higher high, higher low in the direction of a trend. Another one, BAE Systems. Take a look at that. Right, so this is giving us one today as well. It is off its high of the day, so let's wait and see where it closes. If it does close off its high of the day, I'd be less likely to take that trade. But it has picked that one up. And then the Canadian dollar, Canadian US, looks like it's come off a bit since I ran the scan, so it's not giving it right now. So obviously you'd want to run the scan, a short while just before you put on the trade. Let's look and see what sells came up here. BT Group Okay, there's that one. I think we looked at that one a short while ago. Beautiful downtrend. Look at all these cells. These are all the Dow Theory cells with the trend finder. Each one of them a profit. Okay, now the question is, of course, where do you get out? So again, I'd say keep it simple. What I do, I'll just hold it sometimes, mostly for 1 or 2 bars and just get out. Or hold it for 1 or 2 bars and sell or buy back half if I'm short, and let the rest go with the previous 1-day bars high if I'm short as a trading stop. If I'm long, previous 1-day low as a trading stop. So you can see there was a short, drop nicely. Today's giving a short. We give another drop tomorrow, I would take profit. You know, there are different ways of trading. You could put on a small position and try and catch a large trend, which is good. I like that as well. But also for very short-term trading, you can put on a bigger position and take a much smaller move. So there are, you know, there are many different ways of trading, as long as you are managing your risk correctly every time. So these are some shorts that are coming up here. Persimmon, let's just quickly look at that. That's giving a short as well. So again, these are FTSE 100 stocks that I've run the scan on just before the session today. So this is giving a short signal as well. You can see also got a bit of a sideways base there. So what you should do is just draw a line like that. And if it breaks that line intraday, just get in on short side. If you want to be a bit more conservative, wait for the closing price. And that's where a bit of common sense does come into it. I wouldn't short just above a support level. Wait for it to break a little bit below it. Set an alert on your trading platform to alert you to that level just below it. That level on this stock being 1244.50. And just below that, you'd get an alert and you'd sell short. So again, this is a simple entry, a simple entry. And if it goes back above this line, just get out, just take the trade off. You know, there's so many trades you can take on a regular basis that one trade is and should be irrelevant. If it goes back above the line, just take it off. That's it. Don't even think of it as a loss. Just take it off. Think of it as just taking off the trade. And take it off straight away if it's not working out. And then you'll look for another one. And if there isn't another one for a day or two, that's fine. Or for a week or two, depending on what time frame you're trading on, that's totally fine. That's how the game works. It's about looking for high probability entries in the direction of the trend. Okay. So those are some of the ones that have come up right now. AUD New Zealand, I think I showed you that one earlier on. Very nice, beautiful downtrend, giving a short signal as well. So let's wait and see where it closes in a few hours' time, New York time tonight. If it's still not too far off its low, you'll get a short signal over there. Again, getting out is up to you. There are many different types of exit. You could use a close above a 5-day moving average, for example. You could draw a trend line. You could hold it for 1 bar, take half your profits, tighten your stop to break even on the rest, so you can't lose on the trade. You know, you want to take profits as well. I like to have the cash register ring, so I like to take profits early and regularly. That's how I like trading for short term. My longer term stuff is different. Then I would do that on a weekly or a monthly chart. Okay, so again, there are many different ways of doing it, and you've got to find what works best for you. But I still believe getting the right entry is crucial. It just makes the whole trade much easier from the start. Okay, are you all with me? When I give this course in front of a live audience, it's easier to judge people's interactions, and they can just put their hands up to ask questions. If you do have any questions, please feel free to ask. Don't be shy. Okay, Bobby, I don't know if I'm seeing any questions.
Yeah,
maybe you can just let me know.
I see a couple of questions. If you have the question box, were you able to pop that out? Or I can read them to you.
Okay, yeah.
Yeah, so I have, so Rebecca is asking, how do you determine when to stop out?
Oh, well, look, that's a whole subject on its own. But for my trading, it depends what I'm trading and on what time frame. But generally speaking, as a general principle, I like to put it above if I'm shorting above a resistance level, so if I sold short where we are now, I'd put it above that level over there. Because I've got a bar with a lower high bar on either side of it, that's a natural resistance level, I would put it above there. And I want to try and bring it to break even, my entry point, as quickly as possible when it runs in my favor. Not too quickly, of course, you don't want to choke off the trade, but fairly quickly you want to bring a stop to break even and try and lock in a bit of profit. But there are other ways. So you get your initial stop loss. That would be an initial stop. If it runs in your favor, as I mentioned, you can use a trailing stop like a 5-period moving average, the breaking of a previous day's high or low, or previous 2 days high or low. There are many different ways of doing it. Sometimes I'll just, if I'm trading intraday currencies, I'll just say, right, if it goes, 5 or 7 pips against me, I'm out. That's it. If it goes 10 pips in my favor, I'm taking half my profits. If it goes 20 pips, I'm out. Take all my profits. Something like that. So it does depend on the time frame. The main thing is, again, you want to trade in the direction of the trend. It's so, so important. Half the trade is won if you're in the direction of the trend. You want to swim with the current. That's what you want to do. So generally speaking, just to answer your question, I'll put my stop below if I'm long a support level or above a resistance level if I'm short. Okay, any other questions there?
Mm-hmm. Yeah, so we have quite a few coming in, actually. So SG asks, should we start on the monthly chart, then move to the weekly, to the daily, then hourly, looking for the same trend and signals, and even further, like a 30, 15-minute, etc.?
Yeah, so the answer is no. You're going to completely confuse yourself. That's what's a classic case of paralysis of analysis. What you want to do is look at the next higher time frame, maybe the next 2 higher time frames, but no more than that. And sometimes even just the time frame itself. I like to know what's happening on 1 higher time frame at least, but you don't want to start from monthly going all the way down to intraday if you're trading intraday. So if I'm trading long term, I want to know what the monthly chart's doing. I might go down to weekly, maybe daily, to try and refine my entry, or I might just enter based purely on that end of month signal on the very first day of a new month, if I run the scan the last day of the old month. So no, try and use the time frame you're on, either that time frame exclusively or 1 time frame higher, maybe 2 higher, but generally 1 time frame higher. That's what I find works for me. Otherwise, one gets too confused, because if you go too many time frames up, 1 time frame will be an uptrend, when a lower time frame will be in a downtrend, and you're going to just get really confused. Just try and keep it as simple as possible. If I put this chart on a monthly chart, this is the AUD New Zealand. So the monthly chart is getting hammered to the downside. Fine. If I put it on a weekly chart, also massive collapse, but we had a massive uptrend there, and you'll notice the buy signals that gave in the trend over there. But the weekly is in a downtrend, and we go back to the daily, and we want to be taking shorts as well. Weekly, that's good enough for me. What you might want to do on the higher time frames is look at where the main support and resistance levels are. If I put this on a monthly chart, I can see here, just visually seeing that there's some support in that approximate area, there's some resistance in this approximate area, and that's just worth knowing about. So if it does come back down to here, and support is more zone than just solid, 1 line. But if it comes down to this approximate support zone, I'm going to be very, very careful of taking any shorts. I probably won't take shorts at all down there. So that can be helpful in terms of support and resistance, but for me, only that. But I do want to know 1 time frame higher. Okay, any other questions?
Yeah. Walter wants to know if you could show the S&P and DAX. DAX.
Okay. Can do that. Before we do that, any other questions that I can answer right here?
They want to know, Gary wants to know, do you take volume into consideration?
I think it is important, particularly on upside breakouts. But stocks, I do want to see volume. I want to see the instrument break out on volume. That is important. It's less important than the price, but it is important. But only for me, only on the breakouts. So if I'm using an end of day chart, and you don't always know what the volume is intraday, so what I would do is I drop down to, let's say, a half an hour time frame, see what the volume is on that time frame to see if there's a big volume spike on the breakout or not. If there isn't, probably wouldn't take that trade. So it is worth doing that, but I wouldn't take every single bar here and scrutinize the volume and read too much into that. But if it's a significant event like a breakout or breakdown, I want to see if there's volume behind it, because that's sort of telling you if there's power behind the move. Okay, let's look at the S&P then. Did you want to say another question there?
It looks like we still have a couple more.
Okay, let's carry on.
And yeah, some of them are different topics, but I'll just ask them to you here. So
okay.
They want to know which segment is high volatility, or which segment, high volatility stocks or commodity currency, is best for beginner traders?
So I would say low volatility, and I would say just go for straight stocks. Don't think about Forex, just go for straight stocks, unleveraged, and use that initially just to get a bit of a feel for trading, and use a very, very small position size while you're starting. Very, very small. Just enough so that you can feel a bit of the emotion, but not that it's going to dent your pocket in any significant way. So if you are, well, I just said I don't think a beginner should trade Forex, but if you are, then use the smallest possible lot, like a 0.01 lot. 1 lot. 0.01 lot. But if you're trading stocks, trade, depending on the price of the share, 1 or 2 shares.
Great. And then I'll just ask one more for now and then let you continue. So Chris, he wants to know, he says, we understand that entries are important and we should enter at the earliest. His question is, if the indicator gives more sell signals after a long downtrend, should we still take it?
So you need to use a bit of common sense. Don't forget, the longer the trend has been in place, the closer it is to ending. So that's why you've got to be a bit careful there. And there are ways of assessing if a market is overbought or oversold. So if in an ongoing downtrend, could be very, very extended to the downside. And there are different ways of assessing that. And I do have an online course. In fact, just as an aside, if anyone does at any stage purchase Paragon Toolkit, I do have a whole 6-hour course on technical analysis, how I use technical analysis that comes with the course. So in that course, one of the things I'll show you is how I like to determine overbought and oversold, not necessarily using oscillators. So you need to use a bit of common sense. Keep in mind, the longer it's been going down, the closer it is to ending the trend, and also if it's close to a support level. So on this chart, if this thing was down to here, well, this is the S&P. I hope it doesn't ever go down to here, 2,300. But as I mentioned earlier, doesn't make sense shorting right near an important support level. But just use a bit of common sense there. If it's been going down too long, be careful. You might get bullish divergences on the oscillators. And based on all that, it's just not worth risking your hard-earned cash selling short. Excuse me. Do you want to ask another question there, Jeff?
I think that's most of them. Others, some people are just asking, if you can show more charting examples.
Okay, good. So,
or entry examples specifically as well.
Okay. So let's just quickly look at the S&P. Someone wanted to see the S&P. So here we have the S&P on a weekly chart. This is, again, if I just click there, this is the trend finder and Dow Theory combined. The blue is an uptrend. You'll notice these buy signals that we had all the way here, Dow Theory buy signals in the uptrend. We've been in the bear market. excuse me. Interestingly, because it's a weekly chart, I haven't really got a confirmed downtrend. There was over there a bit, but no sell signals, because on a weekly chart, it's a long-term chart. If I had to drop down to a daily chart on the S&P, probably be different as well. So notable areas of pink over here. And of course, while we were in an uptrend, there were buy signals all the way up there. Okay, so let's look at another type of entry. Again, we're keeping the signals simple. Let's look at reversal days. You probably are aware of these things, and if it is, it'll just be revision for you. Maybe you'll pick up one or two new things. So reversal day, also called a key reversal day, really something that applies to bar charts, but candlestick charts has, for everyone, you have one type of reversal on the bar chart. There are about 3 different types of reversal candles on the candlestick chart. The basic reversal day on a bar chart is you've got an uptrend, makes a new high for the trend in price, comes down and closes below the previous bar's close. That tick on the right is the close. After an uptrend, if it makes a new high, that's looking extremely bullish, everyone's jumping in and buying, suddenly there's a change of sentiment for whatever reason, closes below the previous bar's close on whatever time frame, there would be a reversal bar to the downside. You'd sell short when it takes out the reversal bar's low. And for buying, it's the exact opposite. You've got a downtrend, you've got a day where it makes a new low, so it's looking very, very bearish. For some reason, there's a change of sentiment, the price rallies and closes above the previous bar's close. You'll notice the volume here. Very often you get a spike in volume on those reversal bars because you've got people that are short closing their shorts and others going long as well, or those people also going long, gives you a spike in volume at the reversal bars. So to enter long here, when it takes out the high of the reversal bar, be it the next bar or 2 bars later, whenever it is, that would be your entry. And that's basically a reversal bar. We're looking for a change in sentiment. That's what we're looking for. That's all it is. We want to see that the pendulum has swung, in this case, from the bulls back to the bears, and there from the bears back to the bulls. That's all we want. If you can find it near a support level, it's even better. If you find it near a support level and your stochastics or your oscillators, RSI, is oversold, even better. And with a divergence, a bullish divergence, much better. Then you've got kind of a, I don't want to say it, but a kind of a mortgage or house trade. Don't ever do such a thing. But, when you got a situation like that, it's extremely high probability. But you could even just trade with reversal bars. The highest probability ones are in the direction of the main trend again. You'll get some against the main trend for a pullback, and you'll get some after a pullback to re-enter you in the direction of the main trend. Those are the highest probability ones where you get back into the direction of the main trend. So on MetaStock, again, I ran the scan just before the session. If I click on the key reversal bar scan, these are the ones that came up. So where it says 1, these are the ones that gave you 1 at a market low. And at the market high, it's these ones over here. Barclays, the HUF, which is the Hungarian currency, and then the HSBC, which you all know, right? So they gave reversal bars at a high, and ones at a low, which would be for buying, would be these instruments over here. So let's see this one, Diageo. Let's look at that. Okay, so you can see it's come down since I did the scan. So I did the scan about an hour ago, so it's not valid anymore. You'd have to run it before you take the trade. Berkeley GP, don't know what that is. It's not Barclays Bank, it's something else. No, it's also come down. So there's obviously been a bit of a sell-off in the market in the last while, certainly in these stocks. Another one called Just Eat Takeaway. Let's see here. So here we have one over here. If you look carefully, of course, you then visually want to find the best candidates. So you've got a downtrend, made a new low. That low is slightly below that low, and it's closing above the previous day's close. I want to see it ideally close as high up in the range as possible. The higher up it closes in the range, the better, because it's telling you that the buying extended right until the end of the day. So that's the nice thing about scanning a universe. Here I've scanned the FTSE 100 stocks and a few indices and commodities and Forex. But you want to visually find your best 1 or 2 candidates. Let's look at this one called Right Move. anything there. Let me just put it on a bar chart. See what we have here. Okay, so here's one as well. It has sold off from its high, but made a new low, closing just above the previous day's close. Not sure if the US market's probably closed. I mean, the UK market is probably closing quite soon. Don't think it's closed yet. But again, it sold off from the high, so you might not want to take that. Either way, you'd want to see it break the high of that reversal bar in terms of getting in. And in this case, I would look to take profits in the area of this resistance zone up here. For a short-term trade, we're talking, this is a daily chart. Let's look at some of the shorts. Barclays. Interesting, when I ran the scan before the session, Barclays was right down near its low. Let's put it on a bar chart. Okay, so here we have one. Let me just take some of these moving averages off. So the price rallied on Friday. Today it made a new high and sold off. It's closing below Friday's low, today being a Monday. So it's closing below Friday's low. It is a little bit off its low, which is a bit of a concern. The lower down it closes, the better. But let's see where it closes today. And the entry would be if it takes out the low of that bar. But again, just using a bit of common sense, you can see it's right near a support level over there. Based on that, it's just not worth taking that trade. Let's look at HSBC. Similar to Barclays, they're in the same sector, obviously. Bar chart, so made a new high today. It's closing below Friday's close. Is a bit off its low, and there is support here. I wouldn't chance shorting that. What I would do is draw a support line like that, and if it breaks down below there, then I'd look at shorting it. And let's look at the HUF. Quite a nice currency to trade, by the way, Hungarian. Let's put it on a bar chart. Okay, so here we have, it's really in a sideways range. It's made a new high here. In fact, this is the highest high it's had for quite a while, about 10 bars or more. Closing below, well, it's not yet closing. We'll have to see what it is at the US close later on, but below the previous bar's close. And if it takes out today's low tomorrow, that would be a short signal on the HUF. Then I'd take a bit of profit there and the rest closer to here. Okay, so these are just some of the ones that have come up. If I ran the scan again, I'd probably get more. I just don't want to take up too much time doing that. But what you can do as well is, so what I can do is 1 second. Let me just take. Not sure why that's not opening. Probably need to close that. What I can do is open any chart with whichever of these ones that I want to open up. So let's say I want to see this key reversal bar. So let's open up what's your favorite pet stock? Whatever. Let's say the GBP. Not a stock, obviously. So here it is. And now this will label to me whenever it's given a reversal bar on whatever time frame. This is a weekly chart. So what it does is it tells you the bar and then puts an arrow on the bar where it breaks the high of the bar. So here was a classic one, a downtrend, clearly made a new low hugely. And when it took out the high and closed above the previous bar's close, and it took out that high, that's your entry. And if you were holding it all the way here, you would be absolutely smiling because you'd be making a lot of money. This is about, 1,500 pips or whatever it is, but a big trade so far. So you could get, you could leave this on any instrument that you've got, and it can alert you when a signal pops up. Let me just show you something that just reminds me. Let me show you what I do as well if I'm looking for a trade. I'm going to just put this back on the Dow Theory and Trend Finder combined. So what I've got here is, let me close these charts. So I've set out what's called a layout in MetaStock, where I'm looking for those Dow Theory and Trend Finder signals on 240-minute, daily, and weekly. You can do it for whatever time frame you want, 5 minutes, 1 hour, 2 minutes, whatever you want. And So let me do it on the currency. This is just currencies and a few indices. And it pops up a window if any of them are giving a signal. So in real time, if I just leave this on the screen, it'll pop up a window if that instrument, a certain instrument, has given a signal. So this is the Canadian dollar. Sometimes quite a few will pop up at once. Let's just find the Canadian dollar. Here it is here. Okay, I can see this is taking up a bit of bandwidth, quite a bit of bandwidth being used here. That's why it's not opening up. So let me actually close these. I can see my MetaStock. It's just using up a lot of bandwidth with GoToWebinar. Let me see if I can actually just close the 1 second. Yeah, it's just my MetaStock is frozen just because there's so many. I might have to just close it down and open it back up again. I think this was GoToWebinar. I've got a few other windows open that are using up a lot of bandwidth here. But bottom line is Canadian dollar has given a signal. I can then go and look at that, and that's on the daily chart. So that is pending tonight's close. I'll often run this on a 1 hour chart as well. So I'll be busy with other stuff, and then I'll look at it on the 1 hour when the signal comes, and then I'll decide if I want to take the trade or not. Like, I think what I'm going to just do is close down MetaStock and reopen it. The bandwidth is definitely causing a bit of havoc here. Bobby, I don't know if you want to just jump in and or Jeff, and just bring up some of the other questions. I'll try and answer the questions in the interim while I'm doing this.
Yeah, no problem. If anyone has any questions that they do want him to answer, feel free to enter them in either in GoToWebinar and I can read it off, or into YouTube as well, because we are also streaming on YouTube. Jeff's been doing a pretty good job of answering all of their questions separately, but we can forward those questions over to Colin as well if anyone wants to ask him anything specifically.
So I'm just busy shutting this down and bring it back on again, but shouldn't take too long at all. So again, it's the Canadian dollar. While we're waiting, any questions? Feel free to ask. Don't be shy. So these are just two of the entries I would use, for example. And I should just say that I use a lot of these on the higher time frame. It's my feeling and my experience over many years that one makes more money on the higher time frames than the lower time frames. That's been my experience, and that's where I think one should focus the majority of one's funds, on the higher time frame. By all means, play around on the lower time frames, but the majority, in my opinion, should be on the higher time frames, because for a number of reasons. One, the higher time frame charts are smoother, they're less volatile. Two, it's less emotionally taxing. That you ever try to trade currencies on a 5-minute chart, you want to know about an emotional roller coaster, just try that. So the higher time frames are much better, much easier emotionally. And the other reason is because the higher the time frame, the bigger the potential move. If you're trading on a weekly chart, you could hold it for a good few weeks and make many pounds profit per share. Whereas if you're trading it on a 15-minute chart, you might make 75 pence. For example, if it's US, you might make 50 cents a profit. For example. So obviously, the higher time frame, the bigger the move. It's obviously not as exciting, and that's why people tend to go for the lower time frames, but not necessarily lower time frames aren't necessarily more profitable. Okay, so here we are on the Canadian dollar. This is a signal it's giving right now. So that was flagged when I opened up that layout. I have a lot of charts on that layout, and it looks like it froze together with the bandwidth here on GoToWebinar. But this is a signal here depending to tonight's close of the Canadian dollar. So what I would do as well is I would do this on a 240-minute chart, or even a 1-hour chart I have as well, and also on a weekly chart that I'll do at the end of the week. And what I do as well at the end of a month, I do it on a monthly chart as well. I'll just I'll just open the chart there, and over here I set Paragon, Trend Finder, Dow Theory combined, and I'll just set that to monthly. And I'll just open up whichever instruments I want, and it'll show me which have given signals or which are given signals, likely on likewise on any other lower time frame as well. Exact same thing. Yeah, so that's just one way. It's just a nice way that I keep this monitor, this computer on during the day, and when I'm looking for charts intraday, for trades, I mean intraday, that'll pop up with signal on that time frame. I sometimes do it on a 15-minute chart as well if I've got time to do a bit of intraday trading. Again, I don't take big positions on that. I don't want to take my focus away from the bigger time frames. That's just how I trade. Everyone's different. Okay, so really I've just shown you two entries here. I'll firstly start off by saying you need a trend. You want to trend. Once you've got a trend, half the trade is won. Then I've showed you a Dow Theory entry in the direction of the trend. Just something to put the odds in your favor. That's a buy signal. That's a Dow Theory sell signal. Again, crucial, it must be in the direction of the trend. And then I showed you reversal days or reversal bars. Even though it says reversal days, it could be any time frame. That's actually very important to know. This could be on a 10-minute chart. It's a reversal bar. It's not just something that applies to a daily chart. Okay, so again, as I mentioned, the best ones are in direction of a prior trend. Let's assume this trend was up from there. You get a pullback with a reversal bar. Those are great entries, but you sometimes will get mean reversion ones that you could take as well against the trend, and that would be something like that, or there would be a short signal in the direction of a bigger downtrend. Just want some simple entry to get you in the direction of the trend. Try and trade in the direction of the main moving averages, the 20-day, 20 period, 50 period. That's going to put the odds greatly in your favor, and then use something simple to refine it, like a reversal bar, like the Dow Theory, like a trend line break. There are many different ways of doing it. And without these scans in MetaStock, I just wouldn't be able to do this, because I run scans on the S&P 500 stocks, the NASDAQ 100 stocks, and sometimes a lot more of the NASDAQ stocks. It would take me hours if I had to do it manually. This I can literally do in 1 or 2 minutes. So that's really my presentation for today. If there are any other questions, or maybe I'll just hand it over to you, Bobby. And I hope you found this session helpful, maybe picked up 1 or 2 new things. And thanks for joining. Thanks to MetaStock for having me on. And I'll give it back to you, Bobby.
Great. Okay. Thank you very much. Yeah, really good session. I always enjoy having you on and, going through your strategy and going through the Paragon system with us. So yeah, thanks. We appreciate that. I'll go ahead and, just share a little bit more about the Paragon add-on for MetaStock with all of our users before introducing our next speaker here. So let's see. Just one moment. All right, perfect. So yeah, Colin did a really good job of kind of, going through everything and discussing, some of his different indicators that are within Paragon and the different systems in there, his Dow. I really enjoy his Dow Theory system that he has, as well as the key reversal bar indicator. So we actually have worked with Colin to kind of encompass all of his different trading strategies and put it into MetaStock, into what we call the Paragon Trading Toolkit. And with this toolkit, you'll actually see Colin used many of these different tools, but we actually have 6 explorations or scans for searching for the different criteria. Like he said, it saves him hours every single day being able to just scan through the markets and locate things that are giving him specific indicators or buy and sell signals that day. So we have 6 of those explorations, as well as 6 expert advisors. And those expert advisors are going to give you expert commentary up on your charts. And we worked on putting that commentary together with Colin, so that you have all of this information readily available right on your chart to help kind of guide you through your trade and help tell you what it is exactly that you're looking at, why you're getting these different signals on different dates. We also included 6 templates with this too. So full-on templates that'll incorporate the exact templates that you were saying on his charts when he was doing his presentation. We also have 6 system tests with that as well, so that you're getting, you can back test all of these strategies and see how well they've performed historically. I will say the Paragon Dow Theory has some of the best back testing that you're going to find as well. So this is a really solid strategy, and I was really glad when we were able to get all of this input into MetaStock. And not only that, another thing that I really love about this system, and that Colin was able to do this for us, is he actually put together a 6-session training on this, where he goes through everything in depth, from the market basics, your asset classes, charts and trends, more trends, technical analysis tools. As soon as you order his system, you'll have access to all 6 of these different training sessions to ensure that you're getting the most out of the trading system with him, getting the most out of the Paragon toolkit. So I really like when we include that type of education, especially when it's this involved with our trading strategies. It really makes it a lot more beneficial for our users as if you fully understand it, on top of having all of the tools there. And normally with the Paragon add-on, we actually sell this for $6.99. And that alone is already a really good price, especially considering you're getting, the 6-module training course on top of all of the different indicators and scans and system tests, etc. However, it's kind of a promotion while we're doing the Euro Summit right now. If you guys wanted to try out the add-on, and it is just a one-time purchase, we're giving $100 off as kind of a standalone. So it's just $5.99 with today's Summit special. And that's to own it for life. And you would have to utilize that with your MetaStock service. And if you don't have MetaStock already, you're able to sign up for a trial, and we'll just include that with the Paragon add-on. Or, as you'll see throughout the day, a lot of our presenters today actually have strategies that we've incorporated into MetaStock. And so what we wanted to go ahead and do, if you have an interest in ordering all the different specials that you'll see today, we're going to give you an amazing deal, basically almost 50% off, where you're able to get everything, which includes the Paragon trading toolkit, which you'll see up here on the screen. Also, the upcoming Power Bundle 360 presentation, which we have Daniel Sinnig here is about to present just momentarily, and Steve Bigalow and his candle profit system. They're all speakers today, along with several other speakers we have as well that will be presenting. But we do have a bundled package for those 3, as well as it's going to include 2 years of Stocks and Commodities magazine and our Unleash the Power of MetaStock ebook and training videos and other sessions like that as well. All of that will be included in a bundle, where the normal cost would be $3,841. But with today's Summit special, you can get that for just $19.96. And if you want to learn a little bit more about that or order, you can jump into our chat room all day today, actually. If you ever have questions about MetaStock in general or any of these different trading systems that you're seeing, feel free to visit metastock.com/sales chat. You can also see this offer on our website, metastock.com/Euro deal. That's EURODEAL. You'll see it up on the screen, or give us a call too, and we're happy to help you guys out. So I know we've run just a little bit into Daniel's time here. Daniel, hey, I see that that you're in the room. I'm going to go ahead and make you an organizer with us. Yeah, hi there. So
hi, Bobby.
Yeah,
hi, everyone.
Yeah, I've made you an organizer so you can see the questions today as well and present with us. So Daniel Sinnig, he's one of our newer partners, and he's Dr. Daniel Sinnig, I should say, and he's actually created this system he's going to show with you guys, the Power Bundle. And I'm really excited to have you on today, Daniel. We've got a lot of feedback from all the different presentations you've done with us. Everyone always thinks you do a great job. I think you do a great job. So thank you again for agreeing to join and do a presentation for our first ever Euro Summit.
Great. Yeah. Thanks, Bobby. Thanks, everyone, for joining my presentation today. And before I start, can anyone see my screen or not yet?
I don't think they can, but they'll be able to in just a moment because I've made you the presenter now.
Okay, one sec. Okay, here we go. This should do it. All right. What about now? Is my screen visible? Okay, perfect. Well, all right. As you can hopefully see now, the title of my presentation today is quite a mouthful. It's very long. It's called Next Level Trading, Auto Optimization, Odds Prediction, and Spearhead Scanning. I'm going to try to dissect this title as we go through this presentation. Lots of things to be covered. And yeah, I'm super excited to do this. It's an ambitious endeavor today. So hopefully I'm be able to cover all these topics. I think I can. And of course, most importantly, I hope that every one of you can get something out of this. All right, so let's get started. And just as a bit of an intro, I'd like to start with something off topic. Let's talk about poker. Poker used to be hugely popular back in the day. It's still popular, maybe not as much anymore, but back in the day, you could not find, you could see it on TV all the time. And typically what you see is, a couple of poker players battling it out. So in this case, we have 2 poker players left in the hand. 4 cards have been dealt. The last card is yet to be dealt. Before this card is being dealt, every player has the chance to wager. And depending on how confident he is to win this hand, he will either wager more or less. But you know what? Playing poker, at least at a professional level, is incredibly complicated. Because it involves psychology, reading the player, of course, understanding the game, and so forth. Now, but what is really helpful, for at least for the people on TV, is what you see on the left-hand side. These are odds displayed only to the viewers on TV. These are the odds of, what is the likelihood of each player winning his hand. And we can see here that player number 1 has an 80% chance of winning this hand, and player number 2 a 20% chance. But of course, again, these odds are only displayed for the viewers on TV. The players themselves, they don't know it because they don't know what the other person's hand is. They have no idea. But let's just assume for a second that you're a card cheat, and for some reason you know what the other person's hand is. If this was the case, you would be able to recalculate these odds in your head. And once you know the odds, how would you play poker? Just imagine, or just think about this for a second. If you know what the odds are of winning the hand before the last card is dealt, what would you do? Well, obviously, you would only wager if the odds are in your favor, and you would stay out of the hand or fold if the odds are against you. Now we have tried, and I bet that each and every one of you could become a very successful poker player if you knew these odds in advance, because that makes the game very easy. Now we have tried to apply the same concept to the world of trading. Now, let's say you're a trader. Of course you're a trader, that's why you're here. Imagine, what would you do if you knew what the odds of your next trade are before you enter the trade? So you can see this here. So in this case, perhaps for your next trade, the odds of winning this trade would be 73%, and the odds of losing, of course, 27%. So what would you do if you knew these odds? Well, again, I think it's quite obvious. You would only take this trade if the odds are in your favor, and you would stay away from this trade if the odds are against you. And I say this all the time. Sometimes staying out of the trade is the best trading advice that you can get. Okay, so, but again, is it possible to do this? Is it possible to calculate these odds? And this has been the research topic of our research lab here at tradingindicators.com for the last years. We have investigated this area, and we have come up, I'm going to show this to you in this presentation, we have built a set of, we call it self-aware indicators, which will predict the odds of your next trade before entering it. And hopefully by doing this, you will get some crucial guidance as to what you should do, whether you should take the trade, how much you should bet or trade, and so forth. All right, Now, before I dive into this, let me just talk a little bit about who we are. So my name is Daniel Sinnig, and I'm a managing partner at tradingindicators.com. Now, my background is perhaps a bit different from the background of the typical speaker here at the MetaStock Euro Summit. I'm not a professional trader by training. Instead, I'm a professional software engineer. And back in the day, my objective was to become actually a university professor in software engineering. I jumped through all the hoops. I did my PhD, my postdoc, and so forth, with the objective of becoming a professor. And I've taught multiple classes in software engineering at various universities. I even have a profile at ratemyprofessor.com. So if you want to look me up, just search for my last name, Sinnig, and Wrote My Professor, and you'll see a couple of reviews that the students have given me over the years. Mostly good. Some of them are, a bit out there. But that's used to be my career. But at the same time, I always liked software engineering, of course, but I was always fascinated by trading. And so I started trading on the site. And of course, in the beginning, I made all the mistakes that everybody does in the beginning, or most people do. I overtraded. I took too much risk. I revenge traded. I traded when the market conditions were not right. And after giving quite a fair amount to the market, donating some money to the market, I came to the hard realization, man, trading is hard and I need help. And for me, as a software engineer, needing help meant I need better tools that will help me make better trading decisions. So I rolled up my sleeves and I started programming. And the first tools that we wrote at tradingindicators.com, they were meant for our own purpose, to improve our own trading. And only later on, when we saw the benefit of having these tools, we decided to put them out there on our homepage, tradingindicators.com, and offer them to you guys as well, in the hope that they will also help you guys trade better. Now, over the years, we have built over 500 different indicators and automated strategies for trading. We have clients all over the world. We have retail clients, we have institutional clients, we have trading educators who all use our tools to help them with their trading. And just recently, tradingindicators.com has also been accredited or fully accredited at the Better Business Bureau. This was just something that happened very recently. We're not only building trading indicators, we also build trading strategies, like fully automated strategies. We build trading dashboards, we build trading scanners, and so forth. And with everything we do, we're trying to give it a little twist. We're trying to come up with something that it's not already out there, of course, but also which is truly beneficial for you as the trader. And some of these features and tools that we've developed, I'm going to present to you today. Now, before we start, a quick reminder that trading is risky and not suited for everyone. If you trade, make sure you only use your risk capital. When it comes to hypothetical performance, keep in mind that this hypothetical performance is not necessarily indicative of future performance. All right, so now that the lawyers are happy, let's get back to the topic. So this is my trade for today. I do this every day when the market opened. The market opened a couple of hours ago. And I have my daily routine, which takes about half an hour every day, where I analyze the market. I go through various symbols, stocks, or different asset classes to find the ones that are interesting of me. And this is the one that I came up with this morning as my trade of the day. It's a long trade of IDEX, which is a stock on the S&P 500 in the industrial sector. And I went ahead and went long at market when the market opened a couple of hours ago, with a stop loss placed just at this support level and a 1-to-1 profit target. And in this presentation, I will show you the process that I went through and all the tools that I've used to identify this trade. So this is going to be the conclusion of this presentation, but it's just a bit of a heads up what's coming up next. But before we're going to go through this process, back to our original topic, is it possible to pre-calculate the odds of your next trade before entering it? Now, can this be done? That's a good question, and we've researched this topic for the last 2 years, and our conclusion was that yes, it can be done. It is definitely possible to calculate the odds of your next trade, and the way this can work is to look at what was the historical performance of the trade signals. And once you do this, you can calculate what is the historical performance, and you can display this directly onto the chart or in the expert commentary. For example, here we can see that for our long signal, which are these greener triangles here, the historical performance was at 91%, and for short signals, the red triangles, it was at 87.5%. So, and as you can imagine, this is definitely feasible. Since we know what historical price data was, we can calculate this data. Now, of course, many of you will think, oh, okay, well, this is historical performance. How useful is this? Because it's really based on backtest results. It's based on historical win rates. How relevant is this moving forward into the future? And this was also for us the natural follow-up question. So how relevant is this? So what we've done next is we have investigate this question. What are these odds really telling me? And now we believe, and I'm going to tell you in a second why, is yes, it is relevant. Historical performance is indeed relevant for future performance, and it will allow you to make truly informed trading decisions and only trade when odds are in your favor and stay away when the odds are not in your favor. And again, as I mentioned in the very beginning, sometimes staying out of the trade is the best trading advice that you can get. Now, but why do we think this? Why do we think that these historical statistics are relevant? Well, we have conducted a very comprehensive back test. It's based on a swing trading system that we designed, which was run on the 1 hour time frame, and we've used all of 2022 to run this test. Average trade duration was about 1 week, and over the course of this really comprehensive back test, we had 6,827 entry signals, both to the long and short direction. And you may wonder why so many, that there's not even that many hours in the year. Well, because we've looked at 84 different US stocks, bigger stocks such as Tesla, Apple, Microsoft, and so forth. And so the first version of this very comprehensive back test was, what if we traded every single signal? So 6,800 signal resulting in 6,800 trades. And this was the result. The unfiltered performance, it doesn't look very appealing. In fact, I guess nobody would trust in a system like this. It looks like a losing system. And it was. It did not do well. But then we took it one step further. We added a filter to the system where we only take the trades when the odds, based on historical information, was in our favor. And we did not take the trade if this was not the case. And this was the result of the filtered performance. As you can see here, it's a difference of day and night. So instead of taking all the trades, we only took 2,599 what we call sweet spot trades. Trades where the odds at the time of trade entry, not in the aftermath, but at the time of the trade entry, were in our favor. So for example, if we had a trade, let's say on February 1st, then we were looking at the odds as of February 1st, if they were beneficial or not. If they were, we took the trade, and if they were not, we left the trade alone and we didn't take it. We didn't act on that signal. As you can see here, the performance has significantly improved. And this was evidence to us, or a good argument for us to continue in the direction that our statistics, the way we calculate them, are indeed indicative and indeed beneficial moving forward into the future. Now, so based on this encouragement, we have built a set of what we call self-aware indicators, which use intelligent logic built in to predict the odds of your next trade, and of course, before entering it. And we summarize these indicators as the Power Bundle 360. So the Power Bundle 360 consists indeed of 3 indicators. Why 3? Well, one for each market condition. So we have 1 indicator for trading the trending market, 1 for finding reversals and pullbacks, and 1 indicator for trading breakouts during a sideways consolidation. All right, so what are these 3 indicators? The first one is called a 1, 2, 3 strike. And again, this is our trend indicator or our trend expert. And we'll give you a signal only if all three dimensions of a strong trend come together, which are volume, volatility, and of course, directionality. And if all three things come together, an entry signal is generated. The second indicator is called divergence cloud. And as the name suggests, it's based on divergence, which is frequently regarded as a telltale sign for something is there's a discrepancy in the market, which may indicate a reversal or a pullback. And this is exactly what this indicator does. It's based on divergence to predict pullback and trend reversals. I've based this indicator on our own proprietary form of divergence, which we call volatility divergence. And finally, we have volatility crusher. This is our indicator designed to detect strong breakouts. And for us, a strong breakout is a breakout which will continue for quite some time in the direction of the breakout. And obviously, if this is happening, we as traders can take advantage of this because we could just enter in the direction of the breakout in the hope that price will continue in the same direction. All right, so these are our three indicators. And without further ado, let's just switch over to MetaStock and let's have a look at how these indicators actually look like on the chart. And of course, before I do this, if you have any questions, feel free to write them into the chat, or if you're on YouTube, into the YouTube commentary. And Bobby and also Homer, who's manning the chat, they'll be happy to interrupt me and ask these questions. All right, so let me switch over to MetaStock. All right, there we go. So this is MetaStock, and here I have pulled up a chart, a daily chart of Accenture. And I've also applied our first indicator to this chart, which is called 1, 2, 3 strike. All right, so let me quickly walk you through what this indicator does. So the first thing you may notice is that some candles, they're colored greenish, and some other ones are colored reddish. This is our trend indication. So whenever candles are greenish, we are in an uptrend, and if they are reddish, we are in a downtrend. All right, so this is fairly straightforward. The second thing that you can see are these bigger arrows on the chart. So if the arrow is green, and upwards, this is a long entry. And if the arrow is reddish and downwards facing, it is a short entry. And again, these entries are based on our notion of a strong trend, which is in place if we have directionality, so price is moving up for a long entry. We have an increase in volume and an increase in volatility, and all three things come together, a signal is generated. Now, but it doesn't stop here. We also show you for every entry suggested exits. As you can see here, these are these smaller arrows in the opposite direction of the entry. So here we had a long entry, we had 1, 2, 3, 4 suggested exits. Because once you're in a trade, you need to manage the trade, and eventually you need to get out of this trade. And this is exactly what we've built into this indicator. So for every entry, you will also be notified when it is time to book partial profits or to close out the trade completely. And again, this is based on the indicator's logic, based on what the market is doing. These exits will be generated. And we have these both for the long side and for the short side. So here we had a short entry with 1, 2, 3. This is our fourth exit here when a signal in the opposite direction occurred. All right. So far so good. You can see all these entries and exits on the chart. But this is pretty much standard. Most indicators are built based on this principle. Now, we've taken this one step further. So let me just go ahead and open up the expert commentary. So I'm going to go to Expert Advisor and go down to Commentary. All right, this will open up a little panel below the chart. And the first thing that you can see here is these statistics, which I mentioned previously. Here we can see that for the long side, we had a 74.42 win rate. And for the short side, it was only 56.41%. And again, this is based on historical data. So what does this tell me as a trader? Well, I know, for example, just by looking at these two numbers, that the long direction has been working out better than the short direction. And I can use this information to make an intelligent decision. For example, I could only focus for this particular symbol on the long direction. Why would I focus on a short direction if the odds are not as good as the long ones? So again, this helps me making a smart and informed trading decision for my next upcoming trade. All right, so that's one thing I can learn from these statistics. The other thing, which is just as important, it will also allow me to see how well this indicator, in terms of its parameterization, is dialed into this particular symbol. So what do I mean by this? So like every other indicator, also our indicators, they come with parameters. So let me just open these up real quick. So I'm going to go to the function symbol here. We drag this in. I'm going to open up the parameters of this indicator. And you can see them, just open on a different screen. You can see them here. And you can see all these parameters that are being used right now for 1 to 3 strike. I'm going to cover what these parameters do. We do have a masterclass covering all these this information in detail. But I just want to give you a small example. What if I changed one of these parameters, let's say the volume period, from 34 to, let's say, I don't know, 14. Let's say 14. Okay. Okay, I'm going to say okay. And keep in mind, remember what these odds are right now of the old parameterization, 74 and 56. Okay, so I'm going to close this up. I'm going to have the indicator recalculate. You can do this here. And then let's have a look at the odds, how they changed. Because now we're using different parameters. So once this is loaded, just a second, you will see that the odds are now different. They changed from 74 and 54. They changed to 73 and 52. So they're different now. And this is obvious because I changed the parameterization of the indicator. The entries will be different because of that. Therefore, also the historical win rate will be different. This is another very useful feature of having these statistics, because it will allow me to see what was the effect of the latest parameter change. Was it in my favor? Did it make things better, or did it make things worse? Okay. So again, just by looking at these statistics, you can learn something from this, because in this case we can learn that, well, my long efficiency, I believe it went down. I forgot what it was. I think it was 74. It went down a bit, and my short efficiency actually also went down a bit. So this actually made my trading system a bit worse. All right. So this is basically what we can learn from these statistics. And let me quickly go back to my slides just to make another point. Now, the power of odds, as I mentioned before, they will allow you to see right away, directly in the expert commentary of using a different platform, directly on the chart, how well the current parameterization is working and whether there perhaps is a need to adjust the parameters to improve my odds. This is quite straightforward. But, well, there's a challenge, because, changing these parameters one by one and, seeing what the effect is, reapplying it to the chart, checking out the odds again, this can be a challenge for most traders and even the most experienced ones. And more importantly, it is so tedious. You'd go crazy. Imagine you have to do this for every symbol. And that's because the best parameters, they're different for every single symbol. It's super tedious. It's time consuming, and your time is precious. You don't want to, in quotes, waste your time playing around with these parameters. Wouldn't it be better if there was a way that the indicator will automatically find the best parameters for you? Well, you know what? There is. In our latest generation, which we've just released a couple of weeks ago, we have built in an auto-optimization feature into all our indicators of the Power Bundle. And basically, this auto-optimization feature, it will find the best parameters for you, so you don't have to do it. You don't have to fiddle around with these settings yourself. And it's not only going to save you a lot of time, but most likely, in all likelihood, will also give you a much better settings, because eventually you're going to give up and settle, okay, this is good enough. But the auto-optimization, it's computer generated, computer powered. It will go through way more combination that you can do as a manual, as a human being. And chances are you will end up with a much better configuration than what you would have done manually. Okay. Now, how does this work? Let me go back to MetaStock. Actually, what I had shown you here was the old version of our indicators, old in quotes. Now, let me show you the latest generation. So for this, I'm going to, first of all, switch off the expert commentary. And now I'm going to replace the indicator on the chart with the latest version, which is called 123 strike AO, and AO stands for auto optimization. All right, so I'm going to apply it. After just a couple of seconds, it will be applied to the chart, and at first glance, it looks more or less the same, I guess, yeah, because the visuals of the indicator have not changed. Just the parameter, the selection of the parameters is now auto-optimized. Now, how do we see this? Well, let's go back to the expert commentary, so expert advisor commentary. This will open up the sub panel again, and let's have a look what we can see here. So now in this version, the auto optimization version, we can see that, we can see what is the optimal configuration. For example, here for volume period, that was one of our parameters that we've seen early on. A value of 15 was used. For volatility period, a value of 5 was used. For fast MA period, a value of 5 again was used. For slow MA period, 40, and so forth. But how was this identified? It was done by our auto optimization feature. And we can see what is the historical performance using the auto optimization feature. We have two sets of statistics now. First of all, we have the performance that we yielded in our optimization period. So this can be configured in the parameters. By default, the indicator optimizes over the last 1,000 bars, okay, to find the best parameters. We can see here that the efficiency on the long side was at 81%, really high, and at the short side it was at 68%, so definitely higher than it was with our manual settings. And then we also have the efficiency reading across all the bars, not just the optimization period. And typically what you want to see is that these readings are not too far off from the optimization reading, because that's a sign that while we did not do any curve fitting, or what's also called over optimization, where we basically optimized on historical data to make it as profitable in this historical part, but perhaps moving forward it will not stay as profitable. So in this case, it's fairly close. So we're only 5 or 6% off. That's pretty good. So I'm quite content with this. And what's on the chart here are now the entry signals and the exit signals for the optimal settings. All right. So, but it doesn't stop here. There's more that we've built in. Let me quickly now go to the parameters of this optimization or this optimizing version of the indicator. So again, I go to the function symbol up here. I go down to Power Bundle. I'm opening up the parameters for Power Bundle 360 123 strike with auto optimization. So I click Edit. This will open up the parameters. What we can see here is that we can actually optimize in different ways. So by default, the simplified optimization mode was used. You can see this by the value 0. 0 means simplified. What does simplified mean? It basically means that, it's the fastest optimization. It only tests around 150 different combinations. Why do I say to simplify it by default? Because it makes the chart loading much faster. So if you just want to browse through charts, open up different charts of the indicator applied to it, this I think is the best optimization mode to choose because it loads much faster. But sometimes perhaps you don't want to do the simplified version. You want to optimize over more combinations. So in this case, you could use, for example, the standard mode by simply entering the value 1 here. 1 means standard. Or if you want to go all the way, the extreme mode, which goes through thousands of different combinations. Let's just keep standard for now. We've also built in a trading style parameter, which by default is set to long and short trades. So we want to go both directions. But perhaps if you're a stock trader or an investor, you're only interested in the long direction. And of course, in this case, the optimization should only be based on the long signals, and doesn't really care about the short signal because it's the direction we're not going to take anyways. So we can do this as well. We can set the trade direction as long only, value of 1. All right, so let's do this. So I'm going to say, okay, long only. I'm going to close this, and I will now reload again this chart, which is opening up. And after a quick reload, this will take a little bit longer because now we're using the standard optimization version, which takes a few more seconds to complete, but eventually it will finish and we can look at the optimal settings for the long only version in using the standard optimization mode. All right, so There we go. It's completed. And we can now scroll down and see that we tested now through 1,056 different combinations. And our long efficiency across all bars went up from, I think it was 70 something to 90.91%, and which was at 96.43% even in the optimization period. So it increased even further. And for example, we can see here that we're actually currently in a long trade with Accenture, which was entered about 2-3 weeks ago, mid-November. And we already booked one partial profit here, but we're still in that trade. Okay, so this is how the optimization works. But so far, I've only covered one of our indicators. Let me now move on to our next indicator, which is called Divergence Cloud. So I'm going to go to, I'm going to open up a different symbol. In this case, I'm going to open up Southern. All right. This will now open up. And let me just hide the expert commentary for 1 second. So this is our Divergence Cloud indicator applied to the chart of Southern. Again, it's a daily chart, but our indicator is not only applicable to the daily time frame, but also for smaller time frames like the 50-minute or 5-minute time frame. We're going to have some examples of this in just a bit. So Divergence Cloud is our reversal finder or pullback finder. It's really designed to find trend reversals, pivotal points in the market. And we can see this a little bit here. For example, here we had a short signal just before price was breaking down to the downside. So we were on an uptrend before. The indicator sensed a bearish divergence, generated a short signal at this point, and in this case, it worked out really nicely. Price went down quite substantially. And we had again, fairly recently, again, mid-November, a long entry signal. Again, it was a reversal in the market. The indicator sensed this by sensing a bullish divergence. A long entry signal was indicated on the chart and was still in this long trade. And you may wonder, okay, how do I see whether there was a bearish or bullish divergence? What is actually indicated on the price chart as well? By the bar coloring. If the bar is colored greenish, it means we have a bullish divergence, which may lead to the fact that price will revert to the upside. If the colors are reddish, then we have bearish divergence. And this is a precondition for having a long entry signal and a short entry signal. So a long entry signal requires a bullish divergence, and the short entry signal requires bearish divergence. If you don't like the candle coloring, you can disable this in the settings, and you can only look at this ribbon at the bottom, which basically shows you the exact same information. So if the ribbon is greenish, we have bullish divergence, and if the ribbon is reddish, we have bearish divergence. All right, and similarly to 1 to 3 strike, also this indicator will not only give you entry signals, which are these bigger arrows, but will also give you exit suggestions, such as these ones here. These are the arrows in the opposite direction of trade entry. And this occurs for both the long side, but also for the short side. Oops, skip alerts. All right. Now, let me go over to the expert commentary. This again is also the auto-optimized version of the indicator, so it will pick the best parameters for you. Which parameters have been chosen? You can see it here in the expert commentary, along with the general statistics, which you can see here, the success rate in the optimization period, both for the long and the short side, and for all the bars on the chart. In this case, again, quite nice, very high. At 90% and 73% in the optimization period, and just a few percent points less overall on the chart. And again, as a reminder, if these values are fairly similar, to me, this is a good confirmation that we did not over-optimize. So out of sample statistics are somewhat similar to the in-sample statistics. All right, so let me switch over to yet another symbol. Let's pick Caesars Entertainment. Again, here we have Divergence Cloud applied to it. Just a second. It just sometimes loads a bit slow. Here it's It's just taking a little time to load. I believe it's because of the screen sharing at the same time. Okay, now it's loaded. And let me apply Divergence Cloud again to this indicator. All right, so Caesars Entertainment. Actually, this is 1 to 3 strike applied to it. So let me just switch this over to Divergence Cloud. So Divergence Cloud AO for the auto optimization version. It's now applied to the chart. All right. And again, we can see the candle coloring showing bullish and bearish divergence along with our entry signals both to the long direction and the short direction. And one thing that's really cool about this indicator is that it not only spots trend reversals, but also it's really good at finding pullbacks. So once we have a bit of a pullback and price may continue in the direction of the overarching trend, we may also see an entry signal with Divergence Cloud. All right. So, but let me quickly move on. I know time is running out to our third indicator, which is called Volatility.
Daniel, is it a good time for a question?
Sure. Yeah.
Okay. Mikhail wants to know if you can show the MetaStock system tester results of the bundle AO for Deutsche Börse, if I said it right.
Yeah, maybe towards the end, but for now I would need to go through some of the because the meat of this presentation is yet to come. So I'd rather do this at the end. If that's
right. Okay. And if there's not enough time, Mikhail, you can always email us and we'll get you some information on that.
All right. Great. Okay. So let me switch over to our third indicator, which is Volatility Crusher. So for this, let me quickly open up the chart of Aeon. And here we have Volatility Crusher applied to it. This is our breakout indicator, meaning basically it requires a strong price move either to the long side or the short side for a trade signal to be generated. We can see again these signals by these bigger arrows here with a long entry signal. And the special thing about this indicator is that it comes designed with 2 profit targets and a trailing stop. So in this case, we had our entry here. And as soon as this entry signal is generated, we can see in the expert commentary where are my 2 profit targets and where is my stop loss and how much should my stop loss perhaps be trailed. We can see this in a second. So here we had a long entry which hit both its targets. Let me just scroll back a little bit. Here another long entry which hit both targets. Here we had a short entry which hit the targets. Here a long entry and so forth. And personally, this is my favorite indicator because it has the highest success rates of all the indicators out there. Not because it works so much better than the other ones, it's because the way it's designed. By design, this indicator has the profit target is a bit closer than the stop loss, and therefore by definition, the success rate is a bit higher. But for me as a trader, it just feels good to have multiple winners in a row. Even though they're a bit smaller, it just psychologically speaking, for me, this is my favorite indicator. As you can see here, the targets are hit quite often in a row. Here we have an example of a stop out. So we had a long entry, we hit our first target, and then our trading stop, which was trade to this level here, was hit eventually. So this can happen, of course, as well. Here we got stopped out. This trade was not successful. So of course, not all trades are successful, but in general, the success rate of this indicator is quite high. And let me just quickly go to the expert commentary real quick. We can see, again, the same statistics. Also, this indicator comes with auto optimization, which will find the best parameters for you. And then these parameters are used to calculate the statistics. And here we can see that for this indicator, we had a long and short success rate once this is done calculating. Of 88% or 85% to the long side and 100% to the short side. So as I mentioned before, this indicator really has high statistics. All right, so let me go and close the expert commentary and maybe open up the indicator one more time on an intraday chart just to show you that this is also, you can use all the indicators also on smaller time frames. Here I'm going to open up the E-mini S&P 500 future chart. Again, 1 to 3 volatility crusher is applied to it. And here we can, this is a 15-minute chart, sorry, a 10-minute chart. And we can see again here that the success rate of this indicator, both to the long side but also to the short side, is quite stunning. We actually just recently had a long entry signal to the long side, so hopefully this one will work out as well. Okay, so now that you understand what these indicators can do, let me quickly switch over to the chart, because there's still you know, a couple of things that I'd like to cover. So first of all, as you can see, all our indicators, all three indicators, they come not only with clear entry signals, but also with clear exit signals. They run everywhere. I've shown mostly the daily time frame, but rest assured they can be applied just as well to intraday time frames. I can even apply them to different chart types, such as tick charts, Renko charts, and so forth. Every indicator comes with real-time statistics, which will show you directly in the expert commentary or on other platforms directly on the chart what has been the success rate historically speaking. And of course, we have now built in this latest generation of the Power Bundle 360, our auto optimization feature, which will find the best parameters for you. All right, but you may wonder, now that we've seen it on a couple of charts, you know, signals don't occur that often. How do I know which symbols currently have signals? And perhaps more importantly, which signals of those you know, symbols that have signals, which signals are the most profitable ones or the most probable ones to result in a successful trade? Well, we have thought of something here as well. So let me go back to the MetaStock scanner. All right, so let me just quickly open this one up. Let's drag this over real quick. Okay, so this is a scan that I have run this morning. And it's not just a normal scan, because there's something special about this. As we all know, MetaStock is perhaps the most powerful platform when it comes to scanning. It's super advanced. It lets you scan through thousands of symbols in just a couple of minutes. So here I scanned through 1,127 symbols, mostly in the mid caps and the S&P 500. All right. And we can see, for example, for Divergence Cloud, this is a scan run for Divergence Cloud entry signal that we had, I don't know how many, maybe 10 to 15 symbols which currently have a long entry. And this is typically how a scan is done. You know, you see all the symbols which currently have entries. But we've thought of something else. We're not only showing you the symbols which have entries, but we also show to you what has been, historically speaking, the success rate of the signal. Okay, so here we can see for A.O. Smith, for example, we have a long entry signal. We can also see, if you just go over here, that historically speaking, our win rate has been at 80% for this particular symbol. Or for Amber, again, we had a long signal, and the historical win rate was at 78%. And something that was maybe it's a bit lower, at 76% here for Mohawk, or 79% for Monroe. And why do we show this information to you? Well, the answer is very simple, because this allows you to rank your signals. Typically, I only scanned through 1,000 symbols. Typically, you have 20, 30, 40 symbols of signals. Which one of those should you focus on when you do your manual analysis? Well, the ones with the highest success rate. Okay? This is exactly, for example, what I have done for our IDEX trade, the trade of the day. I have looked at long entries here at a long success rate of 88.88% and a very similar success rate at the out of sample at 86. To me, again, two convincing factors that, well, we did not over-optimize, and the success rate for this symbol has been very high. But there's one more thing. This is not just a normal scan, as I mentioned before. It shows you these statistics. But in addition to this, it's a scan using individually optimized parameters for every symbol. When you run a normal scan, you use the same parameters typically for every symbol, like a one-size-fits-all approach. We have taken this to the next level. We're using individually optimization for every single symbol. So for A.O. Smith, a different parameterization was used than for Amber. And a different parameterization was used for CDW and for IDEX. Basically, finding the best parameters for you first, then see if the symbol has an entry signal. And if it does, we show it to you in the scan along with the success statistics. This is exactly what I've taken, what I've done this morning. When I run the scan, it took a couple of minutes, I don't know, 40 minutes, but I ran multiple scans. So it was done in less than an hour and allowed me to see all the signals using optimal parameters for Divergence Cloud in the long direction. And I've identified IDX as a probable candidate. And now let me tell you what I've done next. So I then went ahead and opened up this symbol on the chart. Let me just do this right now. So I'm going to open it up. So we have, if I can find it here, IEX is right here. So I'm going to open it up. Don't get distracted by this dark background. It's just because I had to take a screenshot of it. And we can see that we did have the long signal here. Now the market has already opened. So I went ahead and went long this morning when the market opened. And we're off to a good start. We're up $1 already on this particular trade. And why did I identify this? Well, I've done a bit of manual analysis as well. First of all, I liked this symbol because it's been an uptrend. And if I zoom out a little bit, you can see that we just recently, just go here, made a highest high, all-time high. Since then, we had a bit of a pullback. And this is Divergence Cloud applied to it. Divergence Cloud is really good in finding reversals, as you can see here, like early on, but it's also good at identifying pullbacks, healthy pullbacks, pullbacks which are likely to resume in the direction of the overarching trend. So here we had a pullback, price went down. We're getting a better entry price because if you're trend trading, you don't really want to chase your trend. You want to wait for a pullback, get a better entry price, reduce your risk because your stop loss can be tighter. It's exactly what we've done here. So I've taken the signal, I put the stop loss directly at the support level. You can see here price bounced off at this level quite a few times. And then was used as support. So I put it here and I used the 1-to-1 profit target, which is up here, as my initial objective for this trade. And let's see how this pans out, perhaps in a couple of days from now. But the important part is that finding this trade among thousands of symbols, and MetaStock can scan through tens of thousands of symbols on different time frames, took me less than half an hour, I would say. I ran the scan, I found the symbols with entry signals, I looked at the statistics, picked the ones with the highest statistics, and then I did some manual analysis just to make sure I'm not trading against a zone of resistance, for example, or when it's a short trade against a zone of support. And that's it. So I identified this trade. I'm confident about this. This is my trade of the day. And identified it using all the tools that we have built along with MetaStock's powerful scanning capability. Okay, and one more thing, just real quick, and I know we're running out of time. This indicator here, I didn't have time to cover it. It's called our trend radar indicator, which will show you at a glance what is the current state of the market. In this case, I can see it's predominantly green, which means we're in an uptrend. Okay, these little reddish spots, these are pullbacks. And again, we're in an uptrend. I want to wait for a pullback because this gives me a better entry price. This is exactly what this indicator allows me to confirm. So we are predominantly green on an uptrend, yet recently had a pullback, these brownish spots here. Really good opportunity to go long at this point because, the overarching trend is bullish and we're having a pullback here. We can enter in the direction of the pullback and hopefully this trade will pan out. Okay, so let me quickly go back to my slides just to wrap it up. So what we've seen here is really, the next level of scanning. It's not just plain old signals. We have supplemented the scan results with our statistics to show you which signals have been proven to be the most profitable ones. And we're using an individual optimization for every single signal. So we call this Generation 3 Spearhead scanning because, we're using different optimal parameters for every symbol that we scan through. And we show you how well it's been working. All this so that you can make a better trading decision and hopefully, zone in on the trades, which will be the winning trades. Okay, so trading when all the odds are in your favor. Now, and this is exactly how I identified this trade for today, long IDEX. Okay, now just to wrap it up, I'd like to mention that our indicators, they are built for MetaStock. We're not only giving you clear entry and exit signals, we're also supplementing our indicators with expert commentary, which will show you the real-time statistics, and we have auto optimization built in. Also having expirations predefined for you, which are basically the scans, so you don't have to define them yourselves. You can just use our scans that we have built in, and we also have system tests built in our Power Bundle 360 package. Now, who are these indicators for? Well, if you're an engineer like me, and if you believe in using tools to make your life easier and to make better trading decisions, I believe these indicators are for you. Whether you're a day trader, swing trader, or investor, as I mentioned before, they work on all time frames, and you can apply them to any type of chart. And again, as a trader, I do want to focus on the market and not on tweaking the indicator. That's why the auto optimization feature is so important to have, because it's really, really a big time saver. And again, the overarching goal is that you as an investor or trader will get better trading results to manage your portfolio in a better way. And our indicators, they're designed to help you with this. Now, we have put together a special for this summit. We currently offer all these 3 indicators that you've seen: 1 to 3 strike, our trend expert, divergence cloud, the pullback and reversal finder, and volatility crusher as a package deal for only $9.95. This is lifetime access. So for a short time, we still have the lifetime access. You're never going to have a single charge from these indicators again. And eventually it will go away as we're moving towards a subscription fee. But currently we still offer the lifetime deal for these 3 indicators. And it doesn't stop there. We're also going to supplement this package with our trend radar indicator and a whole set of training goodies. So trend radar was this indicator which you've seen below my trade of the day, this heat map-like visualization below the chart, which will allow you to see at a glance what is the current market condition. Are we currently in a trending market? If it's predominantly green. Are we currently having a pullback? Do we have a steep pullback if the red lines go all the way to the bottom? Yeah. So this will allow you to see this at the glance, and you can, you don't have to scroll back in the chart too much. You see it right away with this heat wave-like visualization on the chart. Again, another aid for you as a trader to make informed trading decision and to trade when things really come together. Again, as mentioned before, as a trend trader, you don't want to chase the trend. You want to wait for a pullback. This will give you a better entry price, and it allows you to put less risk onto this trade because your stop loss will be tighter. And again, it's just a bigger screenshot of this trend radar indicator, which we'll add to this package deal. And it doesn't stop there. We also add our brand new ebook, Predict Market Moves with Divergence, which is centered on this new form of divergence, which we have discovered in our lab. It's called Volatility Divergence, and it looks for a discrepancy between price move and volatility. And if these two don't agree, we either have bullish or bearish divergence, which can give you very powerful reversal signals in the market. We've also recorded a 5-hour masterclass, which will teach you every single aspect of our indicators. It's going to discuss every single parameter that we have. I didn't have time to cover these in this presentation, but in this masterclass, everything will be covered, and it's 5 hours of training material, which we will supplement this package with. And last but not least, you will become part of our community. And as such, you are entitled of all the free goodies that we threw out there on a regular basis, such as our bi-weekly tech talk, where we discuss an interesting topic, a new innovation about the markets, about the indicators every second week. And it's also an outlet for you to ask questions and to get feedback, or perhaps share your feedback with us. All right. I think this wraps it up. Thank you so much, everyone, for listening. And Homa or Bobby, are there any questions?
Yes, there are. So Mikael had a great question about the statistics. He'd like to know how they're calculated, and specifically for price and day for calculation.
Yeah. So basically, these are win rates, and we calculate these win rates by looking at all the different exit signals that we have and looking and checking where was the respective entry. And this makes it very easy to see, okay, this was a winner or this was a loser. And once we have this information, we can calculate these win rates. So it's basically just looking at the winning trades versus losing trades and the overall number of trades.
And how many days do we go back?
Oh, that's the parameter. Well, actually, two things. So for the optimization part, that's the parameter how long you want to go back. By default, it's 1,000 bars. For the statistics, it will take into account all the bars on the chart. So depending on how many bars you want to load to the chart, again, this can be customized in MetaStock and on other platforms as well. It will show the statistics for all the bars on the chart.
And we have a couple of questions here about updates and upgrades and if they're included. Perhaps I can talk to that, Daniel?
Yeah, go ahead.
So updates within the same generation are included. For example, if it's the same generation of the auto-optimized version, then they are included. Upgrades, depending on if it's a new generation of the product, then there's a small fee for that.
Yeah. All right. Any other questions? Okay.
I think we're good. Thanks.
Seem to be, yeah, and once again, if I know we didn't have time to cover some of the chart examples that you wanted to see, but if you're interested, please just reach out to us at tradingindicators.com. If you go to our homepage, you not only see all our products for all the different platforms, but there's also a contact form. And just write us a message. They come directly to either Homer or me, and we'll be replying to every single message that we're receiving. And we're always looking forward to feedback. And in fact, this is the 3rd generation of our Power Bundle 360. And guess what? Most of the innovations, most of the features, including the auto optimization feature, has been driven by your feedback. Because somebody reached out to us, or multiple people reached out to us and say, this could be a really cool feature to have. I'm tired of manually adjusting the parameters. Well, we listened and we built it into the Power Bundle 360, and as you can see, it works great with MetaStock, but of course we also have it available for other trading platforms. All right, so I think that pretty much concludes it. Bobby, do you want to take over?
Great, thanks, Daniel. Yeah, I'll go ahead and take over here. As always, you did a fantastic job. You were very thorough, and we appreciate spending that time with us today.
Yeah, you're welcome. Thanks, guys. Thanks for listening. Bye-bye.
Bye. All right, guys. Looks like I should be presenting with you again. And as I mentioned, Daniel always does such a fantastic job of covering all the ins and outs and really showing how well the Power Bundle 360 works inside of MetaStock. Just to briefly touch on everything again, because I know we're going a little past time from the start of the day. So with the Power Bundle 360, you do get the Divergence Cloud, the Volatility Crusher, the 1, 2, 3 strike, the auto optimization. I mean, Daniel really covered all of that. One other thing I really wanted to touch in on, if you're new to MetaStock or new to, ordering an add-on such as the Power Bundle 360, I wanted you all to know that with your MetaStock subscription, we give you free unlimited white glove setup and installation service and support and training. So everything you need to get up and running and to utilize our platform and to utilize these add-ons, we're going to help you with. And that can be like a one-on-one session where we do like a full demonstration of all the features in MetaStock and in the specific add-ons. We just like to schedule those more in-depth personalized sessions, but you can also just jump into our chat room anytime at metastock.com during business hours or send us an email. And we also have a lot of recorded training available as well, which that does come with the Power Bundle 360. We did a boot camp session with Daniel a couple of months back, and you'll get access to that with his add-on as well. He did a really good job of covering kind of the promotion that we're handling. I thought I'd put it up one more time for you guys though, so you can get his full Power Bundle 360 add-on, and he's even throwing in the trend radar, and it does come with the new optimization features as well. We're just making those live on the MetaStock website today. So if you have further questions or if you wanted to try that out, yeah, feel free, join our chat room, metastock.com/sales chat. We do have representatives waiting to answer any of your questions from the webinar or about these different trading systems today. You can also give us a phone call as well if that's easier. Or we also have metastock.com/euro deal. And that will give you access to all of today's trading systems that are being demoed that are available in MetaStock at a discounted rate of about 50%. And I'll go into that a little more detail later on. But for now, I want to go ahead and welcome Steve Bigalow, who we should have in here with us today. Hi, Steve. How are you doing?
Good. I guess I'm unmuted. Yeah.
Yeah, we can hear you. Great.
All right, good. Let's see. I'm trying to put the webcam up. Let's see. Where do I hit the webcam? Nah.
Perfect. It might be easier if I make you a presenter as well. Steve's been a really long time partner of ours. He's the creator of one of our most popular recent add-ons, the Candle Profit System 2.0. And Steve, it's always great to have you on. I know you have a lot in store for us today, and a lot of people are looking forward to your presentation. So yeah,
all right.
I'll go ahead and let you just take the reins.
All right. Let me pull the. I tell people let's see. Let me get the. Can you?
I can see your screen. It says connected to GoToWebinar.
Yeah, I'm on. I'm trying to see where there are the questions. All right. So if you have questions as we're going through, feel free to ask them. My name is Steve Bigalow. I came across candlesticks by accident probably over 30 years ago. And back then, I wanted to learn every single candlestick signal there was. There's about 50 or 60 of them. But I found you only need to learn the 12, what I call the 12 major signals. So there are some huge advantages of candlestick analysis. They show you when there's been a change of investor sentiment that allow you to start either researching why that new sentiment is coming in, which we call the RARE process, research analysis, reverse engineering, that if we see a big bully, yes. Okay, let's do, let's see. All right, where is my share the screen, sharing? Oh, share the screen. We do this every time. Yeah, let me see if I can get to it. All right. Okay, sorry about that.
Yep.
And I meant to fuzz my background. You can see I still didn't clean up my office. So anyways, if you've got questions as we go along, please feel free to ask them. But anyways, candlestick analysis is just the graphic depiction of everybody buying and selling during a specific time frame. It works on all time frames. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute combination. Right now I trade commodities during the day off the 10-minute chart, and I trade stocks off the daily chart. I'm a swing trader, so my trades usually last anywhere from 2 to 10 trading days. But it works on all trading entities. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. It doesn't matter what trading entity, stocks, bonds, commodities, currencies, tulip bulbs, anything that has fear and greed in it. But the major advantage of candlestick analysis is it tells you exactly what's going on in investor sentiment. For those of you that might not be familiar with a candlestick signal, it basically says if it opens and trades and closes above where it opened, it creates a bullish candle. If it opens and closes below where it opens, it creates a dark candle. And this is what signals were created by the Japanese rice traders. So again, there's about 50 or 60 candlestick signals. However, you only need to learn the 12 major signals, which are these. And the reason for that is they are the ones that occur 99.9% of the time. And even if you you want to be familiar with the other 50 or 60, but these are the ones that you want to use because they're going to show up most of the time. Now, I always tell people when I first started learning candlesticks, when I first picked it up, I kept thinking, this makes sense. And the more I studied it, the more sense it made. So I wanted to learn every single candlestick signal, so I would study them day and night. But unfortunately, back then, there wasn't anybody around to confer with to get a second opinion. I always tell people the only time I could get a second opinion was when I'd go to the doctor. I'd say, what's wrong with me? And he goes, well, you're fat. I said, well, I think I want a second opinion. He goes, all right, you're ugly too. So I learned that you didn't have to learn all these signals. These 12 major signals are what produce the information that's telling you what's going on in a trend. And they also produce patterns. There's about 6 or 8 candlestick patterns that occur time after time because human nature works the same way time after time. So before we go into the signals and some of the breakouts, here's the most important factor. It's the T-line. The T-line is the 8 exponential moving average. It has Fibonacci characteristics, which means it acts like a natural support and resistance level of human nature. So here's my most powerful statement of this whole presentation. If candlestick signals are the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature, when you combine those two facets, you have an extremely powerful trading platform. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's all the graphics the candlestick signals are doing. So the T-line rule is, if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Why is this important? Because human nature, if you were anything like me, prior to candlesticks being one of the worst investors in the world, would be if I ever happened to be lucky enough to be in a profitable trade, what was my biggest concern? Boy, I better take profits because I sure would look stupid if I let this profitable trade go back to being a loss. So what this does is it keeps your emotions out of your trading. You stay long until you see a candlestick sell signal and a close below the T-line. So while we're here, you can see my charts aren't very cluttered. We've got the 200 and the 50-day simple moving averages on these charts. We don't use those to make our decisions. We're using those because every major money manager around the world uses those to make their decisions. We can see what investor sentiment is doing at those levels. I've also got the 34 on here, and EMA that works reasonably well, but the T-line is your most important trading entity or trend indicator. Works the same way on the sell side. If you start seeing candlestick sell signals in the overbought condition, you can stay short until you see a candlestick buy signal and a close above the T-line. So there is a truism that if you see a candlestick sell signal and a close below the T-line, I stress this word right here, you have extremely high probability that you're now in a downtrend. Conversely, if you see a candlestick buy signal and a close above the T-line, you've got an extremely high probability your uptrend is confirming. And there's a caveat to that. The further away you move from the T-line, the higher the probability it's going to come back and test it. Now, I use a trend indicator. I use stochastics, and my stochastic settings are at 12.33. The Japanese rice traders had a very simple philosophy. If you saw a candlestick buy signal in the oversold condition, you're probably in an uptrend. If you see a candlestick sell signal in the overbought condition, confirming, you're probably now in a downtrend. So everything that was built into the candlestick or the Japanese rice traders' philosophy was just simple common sense. So again, the further away you move from the T-line, the higher the probability it's going to come back and test it. Same thing on the downside. The further you move away from the T-line, the higher the probability it's going to come back and test it. So this allows you to be much more activated as far as covering short positions and going long or vice versa. So the first thing we can do is what we call just kind of winning trend analysis. This was Friday's trading on the Dow. You can see we've had sell signals. It's a hanging man signal, confirmed, closing below the T-line. What's the prognosis? The probabilities are pretty strong that we're in a downtrend. You take that into consideration, you can now do simple scans that tell you which sectors might are moving in the bearish direction, and then you can analyze which stocks in that sector has the greatest price move. So there's a bearish harami, one of the 12 major signals. There's a close below the T-line and a gap down. There's a lot of people that tell people if you see gaps, stay away because you don't know what they're doing with price. With candlestick analysis, you know exactly what they're doing with price. If you see candlestick sell signals and they're gapping it down, that tells you they want to be out of that position with great enthusiasm. That allows you to set up either going short or buying puts or put spreads, knowing that you have a high probability you're heading in that direction. So the doji is the most recognized candlestick signal. It looks like a cross. If it's a small trading range, they call it a doji star. A big trading range, they call it a long-legged doji. If it opens at the top, trades lower and closes back at the top, the Japanese rice traders named it a dragonfly doji because it looks like a dragonfly. And the gravestone doji, the Japanese rice traders said the warriors came out of camp, they went into battle. At the end of the day, they were beaten back into camp, leaving their dead all over the field, thus the gravestone doji. But the dojis have one important factor to it. It tells you there's indecision between the bulls and the bears. So Lulu on Friday had a doji gap down. That tells you there's probably a lot more downside. Anytime you see that doji gap down, that's telling you exactly what's going on in investor sentiment. So we can view the patterns when we're expecting or anticipating breakout moves. We've got the doji rule. The doji rule merely says that the price will usually move in the direction of how they open after a doji. So one of the major patterns is what we call a fry pan bottom, or what the Japanese rice traders call a fry pan bottom. It looks like a fry pan bottom, and you couldn't trade this one way or the other because it's just junky trading. However, right at this level is a breakout. If it breaks out, they usually produce very strong price moves. So this is where you can add candlestick signals and a pattern together to say if this opens positive, it's going to trade positive, which means it's not going to stay in this, or it's going to be a pattern breakout. That puts you in a situation where we know what the probabilities are coming out of a fry pan bottom, a very strong price move. We are in Summit right now because this is what you call the best friend signal. That's a doji followed by a gap up. We call it your best friend because it has two major factors to it. One, it has a high probability of showing you that there's a new sentiment in that trading entity, you're going to have an uptrend. And two, the magnitude of that move is going to be very strong. So I always tell people, this is not rocket science. This is just identifying the patterns that the Japanese rice traders have produced and told us what they're supposed to do based upon human nature after 400 years of analysis. So we can see we've got a morning star signal right here. That's big down day, doji move up off the 50. What is the T-line parameters? It's the 8 exponential moving average. And for some reason, I don't know why it's not on here. But anyways, here's where you can analyze. You see a fry pan bottom setting up, and there's your breakout. This is what we call a J-hook pattern, where it comes up, and we know what normally happens in human nature. If they come up through a resistance level, they'll come back and test it to see if that resistance level is going to act as support. Then it opens positive. Again, there's your best friend signal, and there's one of the patterns, a J-hook pattern. So simple logic says, if everybody sees that it's supporting at the 50, where do you think the next target's going to be? And we know what a J-hook pattern parameters are. Wave 1 and wave 3 will usually be the same magnitude. So again, this identifies when you're now in a good high probability pattern breakout or a pattern confirmation. Same thing on data. This one started off with a kicker signal. The kicker signal is one of your strongest candlestick signals that tell you there's been a drastic change of investor sentiment. Came up through the resistance level, came right back, and now we see bullish haramis. These are telling you the selling has stopped. When it starts back up on this J-hook pattern, if wave 1 and wave 3 are the same, where do you think it's likely to head to? Next target is the 200-day moving average. Anytime we see a pattern set up, and we can apply the doji rule, this is what we call a doji sandwich. It's one of your strongest candlestick signals, a bullish candle, then a doji. Then we have the doji rule. If it opens positive, it's likely to trade positive. If it opens positive, this candle right here usually is the same magnitude as this candle right here. So even if you're a day trader and you see this set up, this puts you in a position immediately to say, I can be buying right here with great confidence, because it does two things. One, tells you you're going to be in an up day, and if this is an up day, what's it tell you about your pattern? Your pattern is breaking out. Expect a lot more upside. So this is what we're looking for. This is what we call the RARE process. Research, analysis, reverse engineering. You can see how it was trading flat for months. And then there was a breakout. Well, we just don't take that for granted. We go and say, all right, what happened here that caused this breakout? So all you have to do is click on the news. And if the news is telling you there's something new happening, that tells you now how long can you stay long in this position until you see a sell signal and a close back below the T-line. If you see a kicker signal, again, your strongest candlestick signal, because it opens here, closes here. The next day, they gap it up above the previous day's open and go the opposite direction. That has two things built into it. One, they've gapped it up, and two, they have dramatically changed what investor sentiment was in here to giving you a very strong price move. If you see the pattern setting up and they break it out with a kicker signal, that tells you exactly what's happening at that pattern breakout. So again, before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. And I got out of the business because I realized that most brokerage firms had no more idea about what move stocks up or down than the man on the moon. And as I started looking at candlestick analysis, everything just made sense. And so what it basically does is anytime you see a candlestick signal or a pattern breakout, you know the probabilities are greatly in your favor. If you have somebody's trading strategy that you're already using, if you change your charts to candlesticks, you're going to be able to see much more clearly whether their recommendations are confirming or not. So this is what we call a trend kicker signal. These are the things that we teach. I've got a website, candlestickforum.com. We've got our chat rooms open every single day. We put out 2 or 3 stock recommendations each day, not to put out stock recommendations, but we do it in a video format so people can continue to learn why those signals and patterns are working. It's like the old saying, if you just tell somebody what to do, they don't learn what to do. It's always reminds me of the cop that's standing on the street corner, and he sees this drunk weaving down the street. He blows his whistle, pulls the guy over, walks up to the car, looks in the back seat, and there's a penguin sitting there. He goes, "What the heck are you doing with a penguin in your back seat?" The drunk said, "Oh, I found him out on the street and I don't know what to do with him." And the cop said, "Well, take him to the zoo." The drunk said, "Oh, that's a good idea. Didn't think of that." Well, the next day, the cop's standing on the street corner, and here's this drunk weaving down the street again. He blows his whistle, pulls the car over, walks up to the car, and there's a penguin sitting in the back seat. And he goes, "I thought I told you to take the penguin to the zoo." Drunk said, "I did. He liked it so much. Today we're going to a baseball game." So if you don't know why you're doing something, it doesn't really do you any good. We teach people what the ramifications are of investor sentiment that's producing new strong price moves. So on something like this, when you can see that little fry pan bottom and then the breakout and the breakout through the 50, which everybody else is watching, what's your expectations? Now they're going to the next price move. Now, does every trade work? Obviously not. But the probabilities are so great in your favor that anytime you see a trade setup, you want to take advantage of it, because it's not because of anything other than the most, most consistent indicator in the world, and that's human nature, investor sentiment. SG, yeah, we've got videos on our website. Number one, that kind of walks you through the 12 major signals. We do training programs. As a matter of fact, we're doing a full day training this coming Saturday on the price patterns. And Jeff, are you going to do the explanation? I've worked with MetaStock now for years, and all our signals and patterns are on the MetaStock trading program or scanning program. So not only does it identify the signals, but it also tells you what that signal is and what it's supposed to do. These work intraday as well as daily. Yes, they work on all time frames. Right now, I'm trading lean hogs today in a downtrend. So this is the opposite of a fry pan bottom. This is a dumpling top. And what do we expect coming out of a dumpling top? A strong down move. So there are patterns. This is what we call the scoop pattern, which you can see how it's setting up. They pull back, and remember, a doji type day is indecision. Well, if you're seeing an indecisive day in the oversold area, that tells you there's probably a change coming. And then they can see the little doji sandwich. And then they break out through this handle. Now, a lot of people would not pay attention to this because they say, oh, there's a resistance level. We look at it as a scoop pattern, because there's the handle, there's the scoop, and what do we expect coming out of a scoop pattern? a strong slingshot effect to the upside. And how long do we stay long on this? The analysis takes about 3 seconds every day. But if I've got 10 positions on, I can look at this chart and say, oh, still long, still long. I don't have to worry about it until you start moving too far away from the T-line in the overbought area. Now you want to become a little bit more attentive as far as watching for a sell signal. Scoop pattern. This is your expectations. And if you see a breakout move, should you be buying here? Should you be buying here? Should you be buying here? Well, very simply, you just flip to your 10-minute chart. Say, well, I can be buying here. I can be buying here. I can be buying here. Did it sell off during the day? No, your 10-minute chart tells you they pretty much held up going into the day or into the end of the day. So this is what we call 2+2 analysis. If you can see a J-hook pattern setting up and you can see your dojis, if it opens positive, the doji rule says we're trading positive, that's going to be confirming that wave 1 is now going to equal wave 3 to the upside. So even if you miss this trade, but you recognize this setup, at least you can now calculate what the percentage return will be on this move. Same move as this. If you see a J-hook pattern right at a level, this is what we call a bobble breakout. Bobble breakout is your J-hook pattern, but more defined. Notice wave 1 came right up to the 200-day moving average. Where would you think everybody was starting to take profits? At a level that everybody else was watching. Then it pulls back, and notice what happens down here at the T-line. Indecisive trading, a bullish doji sandwich. When it comes up through this level, we can see this breaking out. We can be buying here or here because we know what the expectation is. That if they break out through this level, we've got wave 3. Why is this more powerful than just a general J-hook pattern? Because everybody and their brother is watching to see what's happening at this resistance level. If it goes through, they're all confident that it finally went through and they start piling in. We can be ahead of that crowd, either buying down here, knowing that if it failed here, we're out of the trade. If it went through, still much stronger upside. If this is what we call observe the obvious. If you see a pullback and you see indecisive trading, and then a bullish confirmation, what's it telling you? This is where they decided to start buying. What was the bullish confirmation? A candlestick signal and a close above the T-line. You can be buying on positive trading with much greater probabilities that you're now heading into wave 3 with whatever that wave was right there. Again, observe the obvious. A doji sandwich, when to buy. That tells you you have a high probability you're going to be in an uptrend. When do you sell? Candlestick signals give you that information just as clearly. Look how far away you've moved from the T-line. That told us if we were up here and it started trading positive, look how far away you would have been from the T-line. So again, everything is just kind of logic with the Japanese race traders. Where would you put your safety stop? Right there where it opened, because logic says if you're that far away from the T-line in the overbought area and it comes back down through there, the probabilities are that's where the sellers are taking profits. They're coming back to the T-line. So it gets you up here. So it acts just like a roadmap of telling you when to get in and when to get out based upon, again, the most consistent indicator in the world, and investor sentiment. Same thing, that may be the same thing. That was the alert telling you when it's time to sell because of the distance away from the T-line. The best friend signal is using the candlestick doji. So again, a doji followed by a gap up and a close above the T-line, you can be buying. Now, how long do you stay in this one? You can see this one kept right on going, never closed below the T-line. Now, in the old days, without the T-line, I saw that and said, oh, I'm pretty smart. I know that's a candlestick sell signal. I'm going to take profits. Well, now I know, since we've added the T-line to our chart, which we did about 15 years ago, my strategy becomes different. I'll stay long as I don't see a sell signal and a close back below the T-line. This is what keeps your emotions out of your trading. First of all, the candlestick signals tell you when to buy and give you signals when it's time to sell. So if I see something like this, where we can see there's a breakout, we can be buying, because that illustrates, after this little best friend gap up, that there's been a major change of investor sentiment. Same thing on the downside. See a doji gap down, tells you there's a lot of force to the downside. Tells you when to maybe take your short profits. And then if you see a doji gap down through the T line and a level everybody else is watching, tells us we got wave 1, wave 2, going into wave 3. The message is just kind of a hidden trade. It opens up here and closes here. Not a pretty chart. However, there was a message there. The message was they came into this with great enthusiasm. There was profit taking. So what do? We wait to see when the profit taking is over. That will continue your uptrend. Doji sandwich through this resistance level, through the 50, tells you you're now in an uptrend. Tells you when to take profits. And there's your bullish engulfing signal. Again, one of your 12 major signals on a positive open. Now what do we recognize? Wave 1, wave 2, wave 3 of our J-hook pattern. There's your J-hook pattern coming out of a little fry pan bottom. Again, each time you see these pattern setups, the probabilities are greatly in your favor that you're doing what investor sentiment indicates it usually does time after time. So the candlestick logic is, if you see pattern breakouts, it's telling you right away there's a new major change of investor sentiment. What do most investors do? They say, oh, this looks good. I'm going to wait for it to pull back so I can buy at a better price. Well, that's what we call the immaculate execution. Meaning, first of all, if this is doing what we expect it to do, we want to be buying on strength. If it's pulling back to where you think you should be buying, that tells you that the bulls aren't that strong, number one. Number two, it's also telling you that you think that as soon as you buy that on the pullback, it's going to turn right around like you expect it and go right back up. That's very wishful thinking. We buy on strength because that's exactly what these breakouts tell us is happening. The bulls are taking control. And they also tell you, if you've got a pattern that's working, you don't want to see it close back below the T-line, because remember, anytime it closes below the T-line, the probabilities have gone dramatically against the bulls that the bears are in control. You close it out so you don't get caught in something like this. The dumpling top. Again, closing back below the T-line tells you got wave 1, wave 2, going into wave 3. The kicker signal out of the 12 major signals is your strongest signal. It tells you there's been a dramatic change of investor sentiment because they've gapped it up, number one, and then they went in the opposite direction of what the previous trade was doing, which gives you a very strong uptrend until you see sell signals and closing back below the T-line. Kicker signal just tells you there's a dramatic change of investor sentiment. So we recommended here a few weeks back, because you can see it could have been an earnings, anything that would moved it up big, that started your uptrend until you saw a sell signal and a close below the T-line. Again, this is not rocket science. This is just learning what the graphics of investor sentiment is telling us when there's a major change of investor sentiment. This is what we call a bearish flutter kicker signal. where look how it gapped down below the previous day's open. Logic says if you're in an uptrend, they shouldn't have enough selling technique or selling strength to take you down back below the previous day's open. And then what's your doji rule? If it opens lower the next day, it's going in this direction. Basically, if you took out this little flutter, you've got a bearish kicker signal. So the analysis of candlestick signals is merely identifying the reoccurring signals and patterns that are produced by human nature. Again, I always tell people, if you've got some sort of trading strategy that you're working with, if you put candlesticks on your chart, you're going to be able to see much more clearly what's actually happening in those price moves. So why do these work? Because the Japanese rice traders have had 400 years of actual trading. The family that produced candlestick signals, they didn't become wealthy. They became legendarily wealthy in Japan for decades or for centuries. And they were trading the most boringest commodity in the world. They were trading rice. So I tell people you don't have to overanalyze candlestick signals. The graphics tell you exactly what's happening. It's kind of reminds me of the lady that brings her parakeet into the veterinarian and lays it down on his table and says, "Can you help my parakeet? He's been my best friend for years and something's wrong with him." And the vet looks at him and said, "Ma'am, I think your parakeet's dead." She goes, "Oh no, isn't there something you can do? He's been my best friend. I'd hate to lose him." And he said, "Okay." So he goes out to the back of his clinic, brings a big cat in, lays the cat next to the parakeet on the table. The cat looks at it, kind of looks up at the vet and shakes his head. And he goes, "Ma'am, I'm sorry, your parakeet's dead." She goes, "Oh no, are you sure? Isn't there something just to make sure, please?" He goes, "All right." So he goes out to the back of his clinic again and brings in this great big Labrador retriever, comes bounding in, puts his paws up on the table, sniffs the bird, kind of looks up at the vet, shakes his head, and he goes, "Ma'am, I'm sorry, your parakeet's dead." She goes, "Oh no." So they go out to the front desk and he goes, "All right, that'll be $250. She goes, "You're charging me $250 to tell me my parakeet's dead?" He goes, "No, ma'am, I would have done that for 18 bucks. Then you wanted a CAT scan and a lab report after that." So you don't have to overanalyze candlestick signals. They are telling you exactly what's going on with what's going on in investor sentiment. Oh boy, Eliza. If you will email Abraham at candlestickforum.com, he can give you the details of that training. Okay, so Bobby or Jeff, do we have any questions out
Steve.
there? Yep, go ahead.
Okay, someone wants to know how they can attend the class that you mentioned that's this Saturday.
Yeah, that's what I was saying, is if they will email Abraham at candlestickforum.com, he can get them the information. Okay,
and then, yeah, that looked like it was the last question that had come in. But we could wait just another moment to see if anyone else has questions. And then I did put together some slides so that I could go in and kind of show on the MetaStock side as well.
Okay, that's what we usually do, is show that all the signals and patterns are already built in now by in the add-on, showing you the signals, where they're occurring, and then they'll describe what those signals and patterns illustrate.
Perfect. Well, okay,
right,
thanks.
that's it.
I can go ahead and take over and show them a little bit more inside of MetaStock. And then if there's other questions after that Jeff and I can't answer, we'll direct them your way to email or your website.
Okay, great. All right. Thank you, everybody. Hope gave you some good information today.
Yeah. All right. Let me go ahead and just turn off this light over here. That might be a little bright. Oh, and now that might be a little dark. So I was messing with some of my settings earlier. I'll turn that back on for you guys and we'll kind of jump into this. So yeah, Steve's been a great partner of ours for quite a long time now. And we've released the candle profit system with Steve Bigalow, where we put a bunch of his different candlestick patterns inside of MetaStock, and we applied templates to these. We created scans and much more. And it was by far one of our most popular new releases when it first came out in version 1.0 many years ago. And a few years back, we added an additional like 30 different patterns into the candle profit system 2.0. So now you'll have not only individual candlestick patterns, but you also have several multi-day patterns, which I've put those up on the screen here for you to review all the multiple day patterns that are included. And then you can also see it has many different single bar signals available within the add-on itself. And with all of these, not only does it help identify these on your charts inside of MetaStock, but you can also get commentary on them as well. So it helps kind of guide you through what the different signals are generating in MetaStock. And with this candle profit system add-on in MetaStock, you also get 6 explorations. And I'll go ahead and jump inside of MetaStock and actually show some of this to you. But I just kind of wanted to review everything here. We also have an expert advisor. You have multiple different layouts, over 36 different patterns, and it comes with multiple different training sessions as well. We've done a number of different trainings over the years with Bigalow that you can receive, including some full day sessions as well, where you can really learn everything there is to know about the different candlestick patterns, the analysis, and using them inside of the add-on that we've created with MetaStock. And let's go ahead and just take a look at some of those real quick here. So what I've done is let's open that back up again. Sorry, guys. Where's my MetaStock? Here it is. Okay, there we go. So I've opened MetaStock back up here. And just as kind of an example, this is actually, it looks like I have an expert advisor from the Power Bundle 360 on right now, but let's go ahead and go in and let's just apply the candle profit system template. So I just right click and I hit apply templates. And now you can see here, I've scrolled down and I have the CPS Bigalow chart view futures, chart view with volume, and then just chart view. I'll go ahead and apply the candle profit system with volume here. I'm going to click yes. Oh, actually didn't want to do that. Did not want to save that last chart. And I'm just going to zoom in quite a bit because I have a lot of data loaded. So you're seeing a lot of signals. But now that I've zoomed in further, you can see, okay, this is identifying. Here's a bullish engulfing candlestick pattern, another one, the T-line crunch here, a bull kicker, the bear kicker. It's applying all of these to my chart for me. And another added bonus here, if I go in and I attach the commentary for this, now you can see the commentary is on today's bar right here, but let's go ahead and move it back to one that had a signal. So when I have this bear kicker symbol on my chart, if I have the commentary turned on, this will tell me this bearish kicker presents excellent shorting opportunities. The signal is even more powerful when it forms a major support level, like a major moving average, trend line, etc. Exit on any trading above the green, or sorry, above the open of the white body of the previous day's candle body. But you can see you've got that signal here, and then you know, it started to go downwards afterwards. So this is a strong signal here. And you can go back and go through all of these and it'll explain them to you. Like here, I've selected the doji candle and you can see a doji has formed on the current bar. And it gives you all the information about the doji and helps kind of teach you how you would utilize that inside of MetaStock. And now there's more than just the templates and all the indicators, but I guess I will actually come in here and, sorry, let me just, let's go ahead and open the expert properties. I just wanted to show you guys this. So here's all the different signals that it's generating, or all the different highlights that it'll put on. And I can actually go in and take some of these off if I don't want to have all of them. If I only want to look for specific ones or have certain ones show up on my chart, I can select whether different options for that inside of here. And then another thing that's very useful are all the different scans. So I've opened up my Explorer here for MetaStock, and you know, I'll just type in like CPS here. So now you can see there's 6 different explorations that I can use. He has a universe where you can just kind of create a universe of stocks so that you're scanning against a smaller universe that hit certain criteria that Steve likes to look at. And then we have scans for the major patterns, as well as power signals, the price patterns, etc. And I've actually ran just one for the major patterns earlier today. You can see here 12-12-22, just to kind of show you what this looks like. So the major patterns it's searching for the doji, the engulfing, the hammer, hanging, etc. And once you ran this scan, and I did this across the London Stock Exchange, and about half of the London Stock Exchange has one major pattern or another. And I can actually sort them here. So by clicking here, I can sort to look at the dojis. I can look at engulfing or hammer, etc. And if it has a 1 here, that's saying this is true. So this does currently have a hammer candlestick pattern showing. So that's kind of how the scans work to help you search for them if you want to look for certain specific ones for your trading analysis, or there's other things you can do with those explorations as well. But we have them available, and this is just for the major patterns. But note that all these explorations often have multiple things within them. So it's not just 6 different patterns that you can scan for. It's actually a lot more than that. Or there's also ways to scan for other things that aren't just the candlestick patterns themselves. So with all of that, let's go back in, clicking the wrong buttons here. So yeah, it does have the 36 patterns. Like I said, you have multiple layouts you can apply, and it comes this is just standard getting the 40-minute training session with the Candle Profit System 2.0. But as part of the offer that we're doing right now, if you get the full trader bundle, is that you can also get his latest full day. It was like 6 or maybe even went up to 8 hours of all day training where he goes through all the different patterns and all of that, plus just the basics within MetaStock and how all of that works. And you can get that as well as part of our main bundled package. But if you were looking for just the Candle Profit System 2.0 add-on in MetaStock, as I've shown, the normal price for that is $4.99, but we are doing a summit special, making that just $3.99. So you can get 100 off if you go that way, or you can bundle it in with his full training pack that does everything. And that training we value at about $699 plus the add-on of $4.99. However, to get them both, we're doing that for just $598 right now. And you can learn more about that or ask questions about it by visiting us at metastock.com/sales chat, or you can also call in. This is an 800 number, 800-882-3040. There is also a number, 801-506-2000. If you're not in the States, you can try that as well. And then this kind of brings me to really a big point here, because we've gone through most of the main add-ons that we have available for MetaStock. We still have really good speakers yet to come, so make sure everyone sticks around. But if you like what you've seen so far, you can actually get the Steve Bigalow Candle Profit System 2.0, his full training course that we discussed, the Colin Abrams Paragon Trading Toolkit, Daniel Sinnig's Power Bundle 360, the latest optimized version, as well as 2 years of Stocks and Commodities magazine and our Unleash the Power of MetaStock module book and trainings as well. The normal value to receive all of that is $3,841, but we wanted to be able to give you guys an amazing price point to get all of this at just $1,996. That's $1,996. So you're saving almost 50% there on 3 of our most popular and best reviewed trading systems within MetaStock. And if you need to pick up a copy of MetaStock as well, we're willing to offer you like a buy 1 month, get 2 months for free on MetaStock and data, either for MetaStock daily charts or MetaStock real time, whatever it is that you would need, you can get that as well. And yeah, like I've mentioned, you can chat with our team if you have questions about this or want to add it to an existing account or create a new account, just metastock.com/sales chat or order online at /Euro deal. That's metastock.com /Euro deal. All right. And just real briefly, before we move on to the next speaker, I want to thank Stocks and Commodities Magazine as well as London Investment Week. They're both sponsoring today's presentation. I mean, with Stocks and Commodities Magazine, they've been a partner of ours for going on several decades now, and we've actually been rated as the #1 technical analysis software in our price category for the last 29 years running via them. And then we have London Investment Week, Simon Campbell. He's been sponsoring the event with us as well, and he hosts a lot of live and online events in London. And we want to thank him for helping to sponsor today's event, and you can check out his site at londoninvestmentweek.com as well. And yeah, so I've kind of touched in on some of the things you can get with MetaStock too. If you did need to sign up for our services because you want to try out one of these add-ons, we can help you out with that as well and give you a 3-month trial on it. You can learn more about the trial of MetaStock by going to this listing that you see on the page here, metastock.com /Euro-summit, and we can get you signed up with a trial or just chat into our sales team. They're happy to help you guys out. Now, with all of that being said here, I want to, looks like, yeah, we have just a couple minutes, but I see Brannigan has come in, and I'll try and get us back on track now because I know we've been running a little bit behind. So I want to introduce our next speaker. So he's been an independent professional for coming on 11 years, and he does a lot of trading in the futures, derivatives, and large cap US equities. Brannigan has made several different trading courses and programs, including a market profile course, footprint course, and his latest, the prop trading code. I've actually been working with him quite a bit lately because we're working to add his templates for MetaStock Zenith. We're looking to make them available for all users that sign up in a more easy to do formatting. And we've actually pretty much finalized all of that. And I've been going through his templates and they actually look really good. And I'm excited to have him on today to show us some of the different things that you can do in Zenith and to show us some really unique ways of utilizing the platform. So hi, Brannigan. Nice to have you on.
Hey, Bobby. Thank you very much for organizing today. I'm looking forward to this. It's going to be fun.
Yeah, great. Well, with that said, I think I'll go ahead and make you an organizer so you can see questions, as well as make you the presenter so that you can show your screen here.
I just want to share the right screen, yeah? There we go. You should be able to see that presentation there.
Yes, I see Trudello trading process flow.
Yeah, everything's good. The size is okay, because obviously I'm on a 34-inch screen, but that's okay for you, or is there a preference?
Yeah, it looks good.
Okay, brilliant. Well, welcome everybody. Obviously, good evening to London, and good morning, afternoon to the US, and thank you for the opportunity. This is going to be quite a bit of fun. I've had a good listen, obviously not to the full last couple of hours, but what I've really been hearing in some of these presentations is It's this idea of accessing your trades. And I think that'll become very clear as I go through the presentation I've got for you, because what I'm going to do is I'm actually going to take a slightly different sort of approach to what the previous three presenters have taken. And I'm going to move more towards we've got the signal, now what do we do with it? How do we optimize on the signal? How do we manage the risk? How do we, take advantage of it ultimately? So let's get straight into it. Now, obviously, I'm not going to spend too much time about me. Just to give you an idea, I am currently a trader at Trudello. Trudello is a trading solution. And what they're trying to do is solve common trading problems. So I come from a prop trading background. I've been trading props since 2011. And over the years, I've experienced a number of different problems and issues within my trading. And that's ultimately what Trudello is trying to do, is trying to solve a lot of these trading problems. Now, one of the things just to mention, I have been with Zenith for a number of years. I'd like to think of myself as one of the early adopters of the product. And you'll understand why today, why I use it so extensively within my trading. So I'm going to show you a lot of interesting little tips and tricks there. And then just a quick note on trading tools, because something I get often asked from traders is, what tools should I adopt as a trader? Now, it's a very simple answer, and it's probably one that's good that I sort of give you an answer to right at the upfront today. There are a lot of very good trading tools out there, okay? But you've got to adopt tools that are going to solve problems for you. Right? Every tool must solve a problem. When you find a tool that adds value for you because it solves a problem, adopt it and go with it. Okay, so that's kind of the answer I always give to that question. Now, where we're going to go today, this is the index. What I've tried to do for this presentation is incorporate something for everyone. But by and large, our topic matter today is the trading process flow. And you'll understand what I mean by that in a moment. Now, I'm going to give you 4 strategies. Okay, 4 strategy ideas. One's called the month-end strategy, another one's an overbought strategy, an inflation strategy, and then a VIX 3-month, 1-month spread strategy. Over the course of this entire presentation, I'm going to show you a lot of MetaStock icon tips and tricks that we, the professional traders, use. Okay, so we use this very extensively. This is not a tool that we just use for charting. We use it for everything. Okay, anything we can find an edge in, we utilize the tool, and I'm going to show you some of those edges today. I'm then going to discuss the access methodology, and this is a relatively new methodology. It has hit professional trading floors in London. Probably, I'd say, since COVID times hit, this became quite a popular technique. So I'm going to show you what the access methodology is and use a few examples. And then I'm going to move on to showing you some automatic risk management tools, strategy cards, and how to manage a performance review. So that's by and large what we're going to do. Now, keep in mind, I'm always preparing these templates and probably preparing too much. Okay, so a lot of what I do today, I may have to skim over. Don't worry, if you have any questions, you can simply just email. Okay, this is not about you having a very good understanding of the access methodology. I just want to give you an idea of it to see if you can implement it in your trading. Okay, so objectives. This is what I want to achieve. And this is hopefully all of you can take something away from the session. But I really want you to be able to set up your icon tools to solve specific problems. If there's one sort of driving message I can give you today is, don't just have a tool as an observational thing. Have a tool set up so it solves problems. Okay. For example, an example I love to use is that of moving averages. Don't simply have a moving average on a chart. Have a moving average on a chart because you want it to show you something within your strategies. Okay, so make sure you set up your tools to solve problems as opposed to just to show you data. Right? Otherwise, you kind of, you're not quite getting the full power within each one of these tools. The concept of mastering one strategy, hopefully that comes out of the session. You do not need 10 strategies. You do not need 20 strategies. You need one strategy and you need to maximize on that one approach. Okay, don't think more strategies equals more profit. It doesn't. It just means more noise, more problems for you. One strategy is all you need to be a master trader. Recognize that strategy development is a continuous development process. Okay, too many traders want a strategy and then they think they can be profitable from that. It doesn't work that way. All right, strategy development happens over time, through time, and you'll get an understanding of that by the end of the session. I want to move you away from this idea of executing all day as a trader, and I want to move you into analyzing all day as a trader. So we call this the 90-10 concept. I then want to introduce you to the access methodology and hope that you can adopt it, all right? Because it is an extremely powerful methodology that is giving a lot of traders ultimately consistency. And then lastly, I'm going to give you a taste of Trudello. I'm going to give you a taste of some of the tools and ultimately what problems they solve. Okay, so that's what we're going to do. Let's get straight into it. Now, I love to start off with this quote: patience breeds performance, because it's a really fantastic summary of where we're going to go today. And I think where holistically a lot of traders need to be positioning themselves. Okay, what do we mean? Well, I don't mean the literal sense of it. What I ultimately mean is that trading is not a sprint. It's very much a marathon. Okay, and the moment you can recognize that, you know, trading is going to take you 1, 2, 3, a couple of years to develop the skills and then start seeing the performance. The moment you can adopt that and be holistic about your roadmap, at that point you're going to start to see the performance. Right? The problem nowadays is, you know, we're all coming to this game, you know, seeing the social media and the marketing of it, and unfortunately, trading is not that simple. It never has been. And it never will be. So just recognize that if you can be patient and take the time to develop the skills that you need to be a good trader, the performance will come as the byproduct. Right? And that's a real driving point behind today. The traders of today, the traders I see on the prop trading floor, they are not focused on performance. They're very much focused on the inputs that are going into the decision making. Right? They let the performance ultimately answer the question of whether or not they are being effective. Right, so a really, really fantastic quote, and it does really summarize where we're going to go today. Okay, so what is the trading process flow? Now I'm going to summarize this for you. The trading process flow ultimately is a continuous automated flow that follows a structured, measurable methodology. In other words, think of it as like a pilot getting onto a plane. He's got a checklist in front of him, and he needs to tick off everything on the checklist before he can initiate the engines. All right. When he's done flying the plane and he's put it back on the ground, he then goes through a checklist again. That's the process of a pilot. Now, a trading process flow is no different to that. It is ultimately just a checklist of things we have to do to ensure that we are going to trade optimally. Okay, not to ensure we're going to be profitable or making a loss, but to ensure we are making good decisions all day and trading optimally. All right, that's the ultimate purpose of a trading process flow. Now, a lot of what you've heard today, and this is why I was quite interested to hear, you know, some of the guests, is a lot of what you've heard today is dealing with this idea of access signals. Okay, these are objective signals that are parameterized, and they're going off based on objective facts. So things like volume, things like engulfing candles, we call these access signals. Okay, now what I'm going to do today is I'm going to take you through 4 different strategy signals, contextual strategy signals. And from there, I'm going to teach you the access methodology, which is nothing more than an access signal. And then from that point, I'm going to take you through risk management, trade execution, strategy cards, data capturing, and performance analytics. In other words, I'm going to take you through the checklist that a professional day trader will follow on a day-to-day basis. Now, what's very important to understand and recognize, as a trader, I'm not sitting here executing 90% of the day. In other words, if I trade for 10 hours a day, I'm not sitting there clicking around all day in the markets. Okay, the reality is I need to be spending 90% of my time within this idea of preparing and developing and, you know, making sure I'm learning through the repetitive nature of trading. 10% of the time, I'm simply just executing. Okay, in other words, 10% of the time, I'm observing these strategy signals, I'm observing the access signals, I'm executing with risk management, I'm managing my trades, using strategy cards, and then I spend the rest of my time, 90% of my time, capturing the data, quantifying it, observing, and then going through performance analytics and coming all the way back to the next day. Okay, so that's the trading process flow. Now, where day traders, where professional traders are using the MetaStock, and this is ultimately what I'm going to show you, is in developing these strategy signals, okay, in developing the context, in developing the macro landscape, and all the various different strategy ideas. We're using it in terms of the access signals, okay? So the software is giving us the signal that now's the time to get long, now's the time to get short, okay? Then in terms of the Trudello tools, that's where we start to use risk management, trade execution, strategy cards, okay? So 2 different tools, but both very important in terms of the trading process flow, as you'll come to understand as we get through the session. Okay, now, as a basic example, before we get going, I want to give you 30 seconds now. And what I want you to do is I want you to illustrate what you believe your own trading process flow to be. Okay, so take a piece of paper, get a piece of paper and write down when you get to your desk in the morning, what is your process from the time that you are now ready to trade? How do you actually physically do the process of trading? Have a think about that and just take 30 seconds and then we'll go from there. Okay, so just while we're waiting, if there are any questions, the most important thing, get them in the box. I will answer the questions at the end. It just it makes sure that I can, get through everything. But if you have got any questions, do just save them for the end. Okay, now I'm going to illustrate you an example of the trading process flow using a strategy called the 52-week high breakout. Okay, so you might have heard of this. It's quite extensively covered. You can go read up about this. We call this a price discovery strategy. Okay, so what does a process flow look like for a professional trader? It's simple. I come in the morning, I sit down, and I've got a signal on my chart that says we are breaking out to 52-week highs. Okay, now at that point, I don't have a trade. What I've got is I've got a context in the market that suggests a trade could be valid for me today, because the problem traders have is they're fantastic at developing trade ideas. Okay, we can all look at a chart and go, you know what, I actually think I want to be long this market or I want to be short this market. But the reality is the professional traders are finding a way to access that trade where they can manage things in a consistent manner. And this is where we're going to get to the access signal in a moment. Okay, but the first thing to notice is that we have to have some form of context or a strategy pattern or an idea. Okay, and we call this the price discovery strategy. Now, if the market gives us an access signal, and we're going to move on to this next, I'm going to show you a few different types of access signal. But if the market gives us an access signal, and the access signal I'll use an example is we've got a high volume, high delta access candle. If it gives us that signal, we've then got a trade. In other words, we are then able to play for the breakout because the market has signaled to us that the timing for this trade is now on. If we don't have a signal, guess what? We don't have a trade. And I know this is going to sound a bit different to what you're used to in terms of trading, but it's ultimately not taking these trades that is saving us. And you'll start to understand why when I go through the access methodology. Okay, one of the big mistakes a lot of traders make is they assume every single time they have a pattern in the market that they need to trade it. Okay, the moment you adopt the access methodology, you're still taking your patterns, but only when you're getting the signaling to take that trade. Now, once we've got that signal, so the market says, yes, you've got this trade, you may now access it. At that point, we are simply just inputting our stop size, and it's all automated. Okay, we've got an automated risk system that says you can establish a position of 300 shares in Apple stock. Okay, none of this, in terms of the trading decision making, there is no thinking at this point. Okay, when we're in the trading process flow, we're not thinking, we're executing, right? Because the moment we start to invite some form of thinking, that's when we obviously start to get our monkey brain take over. That's when we start to make mistakes. That's when we become suboptimal. Remember, trading is not a game about right and wrong. This is something you really must get, very, very clear. Trading is a game of optimal conditions and taking advantage of those conditions. Now, when you are performing suboptimally because you haven't taken care of risk management, because you haven't taken care of, whatever it might be, you are going to have suboptimal decisions and the result will be detrimental to your P&L. Okay, now, so our risk management is automated. At that point, we execute in the market. Now, we have to manage our trade. And again, trade execution is automated. It's not, oh, I think this is where my stop is. Oh, I think maybe I must take this target, or maybe I must trail the stop. No, no, no. None of this is discretionary at this point. Everything is automated. And again, I'm going to show an example as a little bit later on when we get onto some of the Trudello tools. Okay. We then use our strategy cards, right? And I'll talk a little bit about this concept of trade characterization. Again, a very new principle on trading floors, probably not something you've heard of because it is very much powerful on professional trading floors. But trade characterization in a very, very simple sense. If you look at the same pattern play, okay, so take your favorite trade strategy, call it a breakout, and you look at the last 20 breakouts in your market. Trade characterization is simply just characterizing what you are seeing based off of actual parameters. An example, if I'm looking for a breakout, one actual parameter that I can characterize is something called one-time framing. In other words, I look at all my breakouts and I go and assess, is there a process where there's 3 candlesticks in a row with a higher low and a higher high? If yes, then I submit this characteristic because it's evident in all of my breakouts. Okay, so that's all trade characterization is. We go and we take the pattern that we're observing and we put a specific variable on it because, and here's the power of trade characterization. If you have 20 trades of a breakout and you observe that in 12 of those 20, there is this one-time framing, and those 12 of 20 all led to what we call a textbook play. In other words, the perfect picture trade opportunity. What you'll start to see is certain characteristics lead to a trade succeeding and certain characteristics lead to a trade failing. Now think about how powerful that is for a second. Imagine, again, through this process of trade characterization, you learned through your 20 observations that in every instance where there was low volume on the breakout, that trade always led to failure. Imagine what's going to happen when you take that 21st trade and there's low volume on the breakout. You are instantly going to exit that trade, possibly for a small loss, possibly for a small winner, but you're going to recognize the characteristic ahead of the trade failing. And what that does is it means you start to be able to manage risk a lot better. You don't have to take full stops anymore. Equally, conversely, let's say in the next trade, you see that one-time framing, you see that high volume, you see all those textbook characteristics coming together. In that trade opportunity, you can now utilize leverage. You can now effectively maximize on that trade opportunity. Okay, so trade characterization just allows us to understand the trade opportunity as it's playing out, right? The days of, and again, I'm going to say this respectfully, but the days of just putting a trade on and walking away, that's not how professional traders trade. No ways. And there's a very good reason for that. If you want to use leverage as a trader, you've got to be watching and managing your trade because every tick matters. Take, for example, if you're trading just a 10 lot in the S&P, every tick is $125, every single tick. Now, if you just walk away and come back and you've missed out on 10, 20, 30, 40 ticks, think about the math of that over time. Okay, that's why day traders sit at their desk all day observing the market, observing their pattern plays, because it allows us to utilize leverage effectively. Okay, now we then go on and we capture data. Okay, this is a quantitative analysis. I'm not going to go through too much of this. I'll show you this at the end, but we capture all our data. We go and do what we call a debriefing. Okay, you should know what this is by now, but the objective of that debrief is to understand what we actually did versus what did happen. Okay, we need to always understand what was our approach versus what should we have done. Because this is something traders don't do. We tend to execute, come back at the end of the day, and then just write down our thoughts. We don't tend to say, well, in that moment, this is what I should have done, and this is what I did do. Right? So this is part of that quantitative analysis review. And then finally, we do the performance analytics. Right? We go and look at that chart. What are the charts telling us about our trading? Are we good or are we not? Do we have edge? Do we not? What is ultimately going to get us that next marginal gain? Now, all of this together, now I know this is a massive topic and I'm fitting this in a space of 5 minutes. The trading process flow is something that'll take 6 months for me ultimately to get, to really kind of explain and teach the nitty gritty to you, right? The reality is I'm just giving you a taste of it. The point is the same as a pilot needs to follow that checklist to guarantee that he's going to make optimal decisions. It's the same for us as traders. We go through this process flow so that we are guaranteed to make optimal decisions, not right decisions, not wrong decisions, optimal decisions. Okay, so the trading process flow is a predetermined, automated trading process. Now, let's get on with it. Why do we do the trading process flow? 100% control. Who wouldn't want control, right? If you're ever feeling like you're not in control of your trading, you're not 100% sure what you'd be doing, you're not 100% sure where your stop should be, where your target should be, okay, then you need to adopt your trading process flow. Trading process flow, as I said, is for optimal decision making. It gives you structure. It's the structure. It's the checklist. This is what I'm doing. This is how I should be trading. This is what I should be thinking. Emotion-free trading. At the moment you've got a trading process flow, you're not thinking at the heat of the moment. You're simply just executing. And when you come back later and do the analysis, then you're not emotional. Okay? It's a continuous progression through evolution. In other words, trading and developing strategies is not about, oh, I got this idea, this is how I'm going to execute it. No, it's about, I've got this idea, today I execute it like this, then I learn from it. Could I have done it better? Should I have done it better? How could I have done it better? Learn, and then come back the next day. Do the same again. Should I have done better? Could I have done better? Will I do? What can I do next time? It's a continuous progression with evolution. And eventually, when we have 20 observations, 30 observations, 40, 50, 60, 100 breakouts, you then become a master of trading breakouts. Not because you're guaranteed to be profitable, but because you understand that pattern better than any other person on the planet. That is what trading is all about. Okay, you become consistent, right? If your decisions are optimal and they're the same every single day, naturally your decision-making outcomes are going to become more consistent. And lastly, we eliminate volatility from the equity curve. Now note, at no point are you ever going to hear me say adopting a trading process flow makes you profitable. It doesn't. A process flow is simply just a structured approach to trading so that you can learn from the decisions you're taking, make better decisions next time, and at some point in the future, you're making more good decisions than bad decisions. That's the purpose of the trading process flow. Now, I'm going to give you 4 strategies today. I'm not going to give them to you. I'm going to start off with, and I'm going to give you a free strategy because this tends to do very well in marketing circles. Hey, he has a free strategy. It's called the month-end strategy. Click, 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 click. And all you have to do is go and click on this and you get a free strategy. Okay, jokes aside. The month-end strategy is simple, and I'm going to show you an example of it. Now, this trade's been around for a very, very long time because it is based on month-end rebalancing. How it works, what you have to do, I'm going to give you the exact trade from my strategy cards. I'm going to tell you how to do the trade. 3 days before the month end, 3 days, precisely 3 days before the month end, at the close. Okay, now in London time, the close is 9 p.m. In the S&P 500. At that close, you go and buy the S&P 500. Just buy it. Don't think, buy it. Okay, now 2 days after the new month has started, in other words, day 2 after the month end, the first 2 trading days of the month, you go and exit that position at the close. What do you think the profitability of that trade would be? Okay, now obviously I wouldn't be showing you this if it wasn't profitable. Why does this trade work? Before I show you the results, why does it work? At the end of every single month in the richest countries around the world, we have something called pension fund adjustments. In other words, you've got bonds that are maturing, you've got equities that may be up or down, and ultimately pension funds must rebalance. In other words, they are forced traders. They have to go into the market and execute, and they are not price sensitive. Right? So this trade works because of that reason. That's what the chart looks like. So, by the way, this is the start of me now incorporating the charts. I'm going to show you all the little tricks and all that. If there's any questions with regards to what I've done, even these funky little dotted lines, there's very good reasons why I use these dotted lines and why I use these, price changes. Okay, but what you're seeing here ultimately is my icon charts. Now, what you've got your S&P 500 for the entire month in for 2022. You've got the close where you buy it, and you've got the close where you get out of it. So you buy and you sell. Okay, and that's what you've got. The first line's a buy, the second line's a sell, and you're going to do that throughout the process. Now you can go through this in your own time, but you can see the performance there: 3.49, 3.81, 0.18, 2.78, 1.25, etc., etc. Okay, looks fantastic, by the way. You should all be going, wow, he's got the holy grail. Okay, but here's the catch. So there's the performance fee. That's the entire 2022 so far, if you followed that strategy. Too good to be true. 100%, I agree. Too good to be true. But the facts are, if you go and run the back test on that trade, you'll see the exact results. Okay, now, the only reason August was such a big down month was because Jackson Hole was the Friday before. All right, so the Jackson Hole created quite a significant sell-off in the markets. As a result, that position took a slightly bigger drawdown. Okay, now, I've put a few question marks here for December because I know instinctively a lot of you are going to look at this. But here's the caution, here's the caveat. If it's so simple and the trade is so perfect, because if you gave me these results, I would say to you, why not leverage that and go all in? But here's the catch, okay? Why isn't everyone, including me, rich from the strategy? It's very simple. Trade strategies evolve. This is how it's worked in 2022. If you go back to 2012 and you run this exact same strategy, you're going to get very different results. In fact, I'll share something with you. When I started trading in 2011, end of 2011, The single biggest profitable trade on the trading floor for 2012, 2013, 2014 was the very last trading day of the month. I kid you not. Why? Well, because what happened back then, fund managers were not that clever at executing these rebalancing flows. They didn't have the same sophisticated algorithms that they had as they do have today. All you had to do, I kid you not, all you had to do was you could literally go and trade that trade on the final day and you could make some significant sums of money. The point is, it's evolved. All trade strategies evolve. If you're trying to adopt a trade strategy that someone put up on the internet in 2010 and you're trying to adopt it today, the reality is that that trade strategy may have had relevancy back in 2010, but things have evolved. The markets are dynamic. Now, if you haven't evolved with that trade strategy, the reality is it's no longer going to be profitable. Okay, and that's the key. That's what I want you to learn from this lesson. Trades evolve, and you have to keep developing that strategy over time so that you evolve with it. And that's really, really important. The other reason you will not profit from this is because you don't have an execution methodology. What you've got is an idea. You've got a construct. I've shown you the probabilities, and you can go run that back test. What you don't have is, well, how much is my stop? Where's my target? What am I doing in terms of my stop? What should I do if I go 5% down? So you don't have an execution methodology. How do you develop an execution methodology? Do this trade for a number of months, go through the iterative process of learning how you execute it, improve, and at some point you'll have your own execution methodology that you can profit from. Lastly, the reason it won't work for you is because of strategy fit. I'm a day trader. If you asked me to sit in a trade for 2 weeks, I would really struggle. It's not natural to me. It's not what I do as a day trader. If you ask me to sit in a trade for a whole day or possibly 2 days, different story. Okay, so different strategies are suitable for different trading styles. Now, and this is the key. This is one of the most important takeaways today. Traders need a process to develop their own understanding. In other words, you've got to stop looking for someone to tell you how to trade, and you've got to start learning to trade for yourself. And I think this is a crucial, crucial message. If you are listening to this today and you want to be a trader, stop asking someone to show you how to trade and start learning to trade for yourself. And it's simple. How do you learn to trade for yourself? You take a trade today, you interpret how you took it versus how you wanted to take it, and you come back and you do it over and over and over again. And at some point, you're going to learn how best to execute that trade. Now, that may not be profitable, that approach you're taking, so you have to keep going and going and going until you find something that works. We call that edge. Okay, now, it's very important that you learn to trade for yourself simply because if you just want to go and take someone's signal and execute it, the problem is it may work in the near term. But in the long run, you have to adapt it to your own style. You have to adapt it to your own execution methodology. Otherwise, you're going to fall prey to the month-end strategy like I showed you. Okay, now, I'm not going to go through the rest of this, but we're going to move on. At this point now, we've got this idea. Okay, so I've told you about the month-end trade. It's an idea. It's a trade. How can you go and be profitable from this trade? That's the question you should be asking. You should be saying to me, Brannigan, look, you've given me this idea. Can you now give me an idea how I can go about learning my own execution methodology for this trade? That is ultimately what we call access methodology. Okay, now this is where we are. So what we've done so far is we've gone through the strategy signal, and we are now going to move on to 3 types of access signals. And I'm going to go through this a little bit quicker because you've heard a lot of this today from a lot of the other the mentors that were on here, and they did a fantastic job of it. I really love the automated idea of signals. I think it's so powerful and so important. Okay, so what is access methodology? In a simple sense, I've got a breakout. You can all see this pattern. We all call this resistance. We all know what technical analysis is. Now, access is just telling me ultimately when the timing is right for me to execute my trade idea. So I've got this idea called breakout, but now I need a timing mechanism. Now I need a trigger that says to me, Brannigan, you can now go long the market. Okay, until then, all I've got is a preemptive approach. And this is the mistake traders make with breakouts. They'll see this chart, and we all see the same thing, and suddenly they'll buy it there and get out there, and they'll buy it there and then perhaps get out somewhere over there. When in reality, You simply just wait for the market to give you the access, and then you execute the trade. Okay, that's ultimately what access methodology is. Now, traders are very good at this, by the way. Every trader I always mentor Trudello, the new traders are fantastic at idea generation. They've got some incredible trade ideas. When it comes to trade strategy and how they execute, less so. They're not always sure how they want to execute. They know they need to be long, but sometimes they maybe want to buy it here. Sometimes they buy it there. Maybe they use the stop. Maybe they use that stop. So they get a little bit more discretionary and less automated in terms of how they execute. And then where they're terrible is the timing mechanism. Okay, if you want to become more consistent, just develop your own timing mechanism. Develop your own access methodology. Okay, so what is access methodology? It's simple. It's a precise, objective, measurable price action. Example, if I told you that you have this breakout trade, okay, so we have our breakout, we have our resistance. Okay, excuse the drawing. We have the resistance. Now, if I told you the moment you see 3 high volume candles in a row ahead of that resistance in an up move, if I tell you to then go and buy it, is that a precise, objective, measurable piece of price action? The simple answer is yes, of course it is. We can all observe it. We can see it's precise because it's exact. There's no discretion involved. It is a precise piece of price action. Okay, is it objective? Of course it is. Okay, there's no subjectivity there. It's either 3 candles or it's not. Is it measurable? Yes, it is. I can see the distance from there to there. I can see the price open, the price close. It's measurable. Okay, now the moment I see that precise, objective, measurable price action within a trade strategy called breakout, at that point, I've got a trade opportunity. Okay, at that point, I simply want to be long the market. Now, note, I'm not saying 3 green candles in a row is a form of access methodology, and you can use it in breakout trading. What I'm saying is that is an example of the access methodology. It's simply just a timing mechanism to take our trades. Now, what are we ultimately using this access methodology for? Okay, we want to use it, like I said, in conjunction with a strategic play. So we have a strategy and we have access, right? Access brings the trade strategy into play. No access, no play. Just because you have a great idea doesn't mean you have a trade. Access reveals mass participation, and this is ultimately why it's so powerful. What do I mean by mass participation? The reason access works well is because ultimately it's telling us when there is a significant amount of trade volume coming into the market. In other words, there's a lot of participation coming into the market, and there's some form of agreement in terms of the price direction. That's why it works well, because we are simply just relying on a mass participation to take price to where we believe it should go. Okay, now mass participation is not necessarily just with the trend. It can also be counter trend, and we'll discuss that in a moment. You can use this methodology if you're a day trader on 1-minute time frames, 5-minute time frames, 15-minute time frames, and you can use it particularly successfully on daily time frames if you're a swing trader. The market is irrelevant, and you'll see now when I show you an example of Bitcoin. Lastly, and this is very powerful, this is why day traders like it, this is why professional traders are using access so much now. It ultimately allows you to define your risk up front. In other words, if I told you the same example with my 3 green candles, if I told you that the moment you see that, you simply enter the trade with a stop below the base of the 3 green candles, do we all agree that we have a precise risk management approach? 100% yes. Okay, that's why it's powerful, because if I know that distance, then I know how much I can use in terms of leverage. If that distance is whatever, 20, and that means I can use 10 contracts in the S&P, there's no discretion yet. It's pure certainty, and I have confidence then that I can leverage into this trade and take advantage of the potential opportunity. Right? That's why access is something that every single prop floor is talking about. Now, they're all trying to understand this concept, trying to understand the different types of access. Okay, there are loads of them, and that's what I'm going to show you now. Okay, why access methodology? You can take a picture of this, but in a simple sense, it's a discretionary methodology, discretionary in how we develop it, but ultimately it's automated in how we execute it. But what it does is it's solving very, very big problems traders have. The big mistakes. Think of moving stops. Think of not having a stop. Thinking of under-risking and over-risking. Okay, the access methodology simplifies everything. It gets rid of all the unnecessary noise and keeps a very simple process. It's a risk management solution. Okay, a lot of traders don't know how to manage risk, and with the access methodology, they've got a risk management solution. Precision timing. Right? Again, Our job as traders, as day traders in particular, is to time those moves, time those bottoms, time those tops. And for that, we have to have a methodology. We can't just, oh, I think it's going up now, and then sit for the next 6 hours, with a position going up and down, because that doesn't add value. Momentum, okay? It allows us to go with the big time frame participants. In other words, we're going to feel less heat on the downside. We're going to have less exposure in terms of risk because we're going with the mass participation. Pattern mapping. Okay. Ultimately, when we use access methodology, because it's precise and objective, we can pattern map very effectively. We can load those charts, see the same pattern over and over again, and develop very quickly the skill of pattern recognition. It's 100% objective, right? It's objective, no discretion, no ifs and buts, no, oh, I think it was 3 candles. No, it's 3 candles or not. It's black and white. We can use leverage effectively. And lastly, this is the summary. This is the one, if I had a highlight here, I'd go and highlight. It's a consistent, precise, emotion-free, controlled, measurable approach. All the things we desperately, desperately want as traders. Okay, this job is so difficult already. It's so emotion-filled, this job. Remove it with a consistent approach. Remove it with a precise approach. Remove it with an emotion-free, controlled, structured approach. That's why access methodology is powerful, because it gives us all of that. Okay, let's get on to it. Now, Bitcoin, you all love Bitcoin. The perfect example, go back to 2020. What we had in Bitcoin was the breakout of 20,000. Now, if you go and look at the prior couple of weeks, it was a good 6-7 weeks before where we just sat in this horrible sideways range, okay, you would have lost a lot of money trying to go for the fake breakouts. We had one there, we had another one there, and a lot of people got stopped out there, and then they got stopped out there. All you had to do was wait for the axis. Now, this actually gave a 3-axis event. I'm not going to go through it, but you can see them all highlighted there. Signal number 1, signal number 2, and signal number 3. In other words, it gave a 3-axis signal that a breakout was occurring, and we had a price discovery opportunity. Right? Just, I always love to throw that example because it's a very much a textbook example. And by the way, Bitcoin did 106% in 24 days. Okay, unheard of. I know that's not normal. The point is, though, it was a significant price discovery opportunity, and access methodology was the early indication of that. Okay, you've got loads of types of access. I'm going to show you 3 very quickly because I'm aware that time is ticking away. Now, there are a number of different ones. I'm going to show you a high volume engulfing candle, a high volume equal and opposite, and a consolidation axis. All right. Like I said, there are many different forms of access. This isn't a case of, oh, there are 10 axes and that's all. No, access is, remember what I said, it's an objective, measurable, precise approach. It's any piece of price action that's replicable. Okay, all of the signals and a lot of the signals that the previous mentors and presenters have shown you, those are all forms of access. Okay, because they can be signaled on a chart, and you're simply tying up that signal with your trade strategy. Okay, now important, different access methodologies will work differently and better in certain instances, and that's that whole concept of strategy development. When you observe breakouts, 20, 30, 40, 50 of them, you'll start to very quickly realize that actually the best breakouts typically occur with high volume, high delta volatility candles. Okay, high volatility delta axis candles. Typically, I'd say 2/3 of all breakouts, you will see this candle. Now think about that for a second. If all of a sudden you have this big breakout in your market, you're aware that it's about to break resistance or support, and you suddenly see this candle, what's the probability that you're going to get a very solid, strong breakout? Well, it's high. It's not to say it's going to be profitable, but it's high. And you also know what your risk is. You know where your stop is. And you are now timing the market almost perfectly. You're getting in at the opportune moment. Okay. So there are a number of different axis candles. Gaps, for example, initiative, one-time framing, extreme delta, loads of different access methodology. The point is you must develop your own automated access signals. Okay. Engulfing candles, you all know what that is. In a simple sense, the only reason these work very, very well, okay, and again, what I will say is there is an art form to building out your access candles, okay? It's not just a case of, oh, the high is above there and the low is above there, therefore it's an engulfing candle. No, there is a little bit of an art to it, and it has a lot to do with where positioning is, okay? For me, an engulfing bullish and bearish is coded based on the following. I need trapped positioning over here in the bearish. In other words, the market's gone bearish into the close. It gaps lower, so it traps positions in, and it doesn't allow them out all session. And I know it doesn't allow them out because we pretty much open at the low and close at the high. Okay, now for me, that creates an engulfing candle. It's the process of close on an extreme, 1, 2, we have a gap, and 3, we close on the opposite extreme. I need those 3 things to then automatically signal a bullish engulfing. Okay, the bearish is obviously the opposite of that. Equal and opposite, similar kind of thing to an engulfing. However, I need ultimately one directional price action for the entire session. Okay, and this is also called initiative or an open drive. It's in essence where we get initiative throughout the day, one direction, and then in the opposite direction the next day. So it's very trend-like, one directional, price pressure to the downside followed by the upside. When we get that, we've got equal and opposite. And lastly, consolidation access is where we have a significant amount of two-way trade where a market is run into liquidity before it then needs to move on with price discovery. Okay, now I'm not going to go through this in great detail, but when a market enters this accumulation liquidity phase, at some point it needs to resolve itself. And as a result of that, because we know that at some point it resolves itself, whenever we get these accumulation liquidity phases just ahead of certain trade strategies, it acts as a very significant entry point. Okay, it gives us very good risk reward and access opportunity. Okay, there it is. There's your breakout. So to summarize what we've done so far, we've got an idea called a breakout strategy. You all have your numbers to break it. You all have your strategies, and you've got that idea in mind. Now you need to tie in access. Okay, in this example, we've got what we call consolidation access. Ultimately, the market's consolidating. We know that consolidation access is a very good indication of continuation of breakout. When we get that consolidation access, we're simply executing with a stop below that consolidation zone, and we're then looking for continuation. Okay, it is as simple as that. But if we don't get this consolidation, if we don't get this access, all we've got is a market that's range bound. And that's important to stress. Just because you have a pattern doesn't mean you have a trade opportunity. You need the access. Now, I'm going to show you 3 strategies very quickly, and then we're going to get on to a few other things because tick-tock, tick-tock. Okay, so the overbought strategy, the inflation strategy, the US inflation strategy, and if we've got some bonus time, I'll show you a 3-month, 1-month spread inversion. Okay, now this is where we get onto the charts, by the way, and we're going to start off with this concept of the Fed. Okay, the story of the Fed this year, if you've been trading this year, it's been all about the macro landscape. It's been all about the Federal Reserve and the hiking rate cycle. Now, what you can see here is a chart called the Fed Fund Futures or the Euro-Dollar Futures. And by the way, if you ever want to know what any of my codes are from my charts, just look in the top left-hand side corner. Okay. Again, note the annotations. This is why day traders are using the icon tool so much, because ultimately we can annotate our charts very cleverly, whether it's dotted lines, whether it's color lines, whether it's annotating. For me, this is important because when I go and capture this chart into my Trudello software, I've got all the annotations there. Okay, it's done. The homework is done. I can just simply do a snip and go and save it for later reference. Okay. Now, ultimately speaking, what makes these lines very powerful is that we can do something called fundamental mapping. Okay, and this is ultimately the process of I've got an entire trading year and I can see the story of how the Fed became more hawkish and dovish. Now, I'm not going to go through it, but ultimately in late 2021, the Fed said we're going to retire the word transitory. Okay, that was on that date. And you can see from that point, Euro-Dollar futures started to sell off. We then got into March and all of a sudden we had a significant sell-off as we headed into the Fed, and they revised up their terminal rate. In other words, the Fed said, hey guys, by the way, we're going to have to hike a lot more than everyone thinks. And all of a sudden, we got a very significant move in the markets. Okay, so ultimately the story plays out throughout the year, and I need to, as a trader, I need to be able to very quickly reference where we are relative to that story. Okay, so it really does help to be able to do this fundamental mapping so that you can also understand the cause and effect relationships. What's making the market trend at the end of the day? Because if all of a sudden we're going into Fed on Wednesday this week, we've got CPI tomorrow. If all of a sudden we see inflation start crashing, we know that the Fed and everyone's waiting for this idea of a pause and pivot. As a result, we'll start to see this move up. As a result, everything will start to trend off of that. Okay. So it's the story of the Fed this year. Now, with our charts, we can go and do the correlations. Very, very important. This is something you'll see on a lot of day traders' icon terminals, is we are correlation with everything because correlations blow hot and cold. This year, it's been all about higher rates, the rate hike cycle. As a result, NASDAQ's been very highly correlated to the rates curve. Okay, again, we go and map it. I'm just showing you some mapping here. We can see how when the Fed was talking about a terminal rate between 2 and 3%, this is how the NASDAQ reacted. Okay, when all of a sudden we moved out, so all of a sudden we moved to a 3 to 4%, what did the NASDAQ do? It had a significant move again. Knowing this fundamental landscape doesn't give you a trade strategy, but it starts to give you an idea of what's driving the trend in your market. That's why we do this. Okay, so what is the overbought strategy? It's very simple, a great simple strategy. And it's the one time I do use moving averages, okay? You get a 5-day moving average of price and you get a 20-day moving average of price. And you create a spread between them, okay? So you're basically showing where's the 5-day price average versus where's the 20-day price average. What you then want to do at that point is when we have a trending market, and I'm going to show you, in fact, I'm going to show you a chart, then I'll show you the rules for the strategy, okay? This is what the chart looks like. Now, again, you've got the NASDAQ here in yellow. In the red, I've got the 5-day moving average, and in the blue, I've got the 20-day, sorry, other way around. Blue, I've got the 5-day, red, I've got the 20-day moving average. Okay, now you can take a picture of this and go look at it later, but the basic construct of the strategy is that when my market is trending, okay, and I get an overbought territory on my moving average. In other words, if my market is trending down and my 5-day becomes overbought relative to my 20-day, I then want to fade the market. Okay, at that point, in other words, I believe that short-term price is overreacting in a downtrend. And at that point, I want to fade the market. Okay, so what are the rules? It's very simple. One, I need to determine what constitutes a trend. Okay, so that's the first rule you have to develop. What constitutes a trend? For me, it's very much got to do with lower highs, lower lows. When my market is in that construct of lower highs, lower lows, this strategy has the potential to be executed. Okay, now, the next part of the strategy is when the spread widens beyond a certain amount. In the NASDAQ, I use 2%. At that point, what have I got? I've got a trade strategy. Have I got an opportunity? Am I executing this every single time? No, because what do I need? I still need the signal. Okay, and this is where Axis becomes so powerful. So what I've just given you is another strategy. You can go and map this. Go put the 20-day versus the 5-day. Go and look every time the NASDAQ goes 2%, the 5-day is 2% higher than the 20-day, and go and look ultimately what this trade strategy does. Remember what I said to you, the power is in accessing this trade. How do we actually get involved in this? What's the signal that we can now take that trade? It's very simple. The signal, the access signal, is when we get, one sec. Sorry, I just need to get my thinking here. Okay, so let me come back. So we're going to use the 3 different access candles I showed you in a minute. But the signal ultimately, how we execute this, the management of this trade, is we want to enter on the close of the access candle, and we're going to use a stop at the extreme. In other words, let's say we have an engulfing candle. Okay, so we have a bearish engulfing after an up day. Okay, so something like that. So we have a bearish engulfing. At that point, we're simply going to enter at the close over there, and we're going to place our stop at the high. Okay, a very basic management strategy. This is not how I do it. I'm giving you a basic approach to access methodology. Okay, just as a brief understanding, why does this work? Well, it's very simple. We've got a number of reasons for a 5-day suddenly going very aggressively, spread widening against the 20-day. Typically profit taking, typically CTA momentum when the VIX decreases in the case of the S&P, and liquidation. Okay, so forced liquidation, buyers getting run out of the market. Sorry, sellers getting run out of the market. Okay, so let me go show you this. That's the chart, and you can see that every time we get around 2%, okay, I'm just going to draw this, 2%. Sorry, I see my mouse is doing something funny. 2%, 2%, and 2%. Okay, so every time we go 2% wider, we are now in overbought territory, and we're now looking for an access candle. Okay, and this is why access is so important, because 2% is somewhere over there. If we blindly just sold it, we have to sit with all that risk. Okay, again, if we blindly sold it, we have to sit with all additional risk. If we blindly sold it, yeah, we had to sit with almost 3 weeks of additional risk. And again, if we blindly sold it, yeah, we would have had to sit for quite some time with risk. Okay, so the access ultimately reduces the amount of time we have to sit in trades because it's a timing mechanism. Okay, now very quickly, another very, very interesting chart, and I love the rebasing charts. This is something I use a lot. Why do I use NASDAQ for this trade and not the S&P? Well, very simply, the NASDAQ's more sensitive to rates. So because of that, it is in a much stronger downtrend. So, and we can see that on our rebasing charts. Okay, you can very clearly see so far in 2022, Nasdaq's down just short of 30%, and the S&P's down 17%. Okay, there's the chart. Now, again, I'm just showing you a few sexy features. You don't need to monitor these things or watch them. You can set your alerts. Nice and straightforward. When we cross over, alert me to it. So these things can be done all in the background, okay? You can also go look at news. One of the features I love to use, particularly for central banks. You can simply right-click on the candle, show me the news, show me what the Fed said on this day. Was there anything from the Fed? Was there a Fed speaker? Okay, so we can look at news at date. Okay, but here is now our axis candles. Okay, I'm showing you the number of different axis candles that you could have taken within this trend. Okay, we have our bearish engulfing over there. Okay, so we can see our bearish engulfing there. We're simply entering there with a stop above. And yes, okay, it looks sexy on a chart. It looks like I'm showing you the absolute textbook. It's not always the case. Okay, you'll see this now in a moment. We then had an equal and opposite. Again, very, very well timed. Market gap down the next day. So a little bit more of an aggressive move off of that. But that's the nature of this trade. When the market's short-term trend suddenly is going opposite to the actual long-term trend, you do get these significant reversals. That's why this trade works particularly well. Okay, we then have a consolidation axis example in June of this year. Again, similar kind of thing. When we had the breakout, we got short, and notice what happened. Gap the next day. Okay, it's not always this straightforward. If you go and look at this on other markets, I promise you it's not as clean as this. The reason this has worked well this year is because a lot of these moves have coincided with certain economic data from the US. Okay, so it's more volatile than what it typically would be. We then have, again, another bearish engulfing. This time, however, not as much of a profit, and this trade actually did get stopped out for a loss. And then again, we can see that that trade opportunity presented itself, but no real access later on. And now, again, we're in a range where we are above 2% and no access as of yet. Okay, so when you're using an access methodology, recognize that you're going to get less false signals, but the signals you are going to get are more powerful. Okay, that's the construct of the access methodology. Now, you can use any form of access. You can use reversal tops, you can use one-time framing, you can use gaps. They're all forms of access. The point is we need to use the same access, because then I can go measure it. Then I can actually start to go and say, okay, well, show me every time there's a bearish engulfing within this overbought strategy, and I can go and see how powerful that access candle is as a signal, or how ineffective it is as an access signal. Okay, that's the key to it. We use an exact signaling approach ultimately to give us a much stronger signal within the context of an overbought strategy. Okay, the next strategy I'm going to show you is all about this concept of inflation. Okay, it's been the year of inflation. Now, as day traders, every single day trader I know is talking about this. All right, why? Well, because the Fed was talking about it. So they were telling us this year that inflation is at the highest reading since 1981. Now, with the Fed telling us they're watching inflation, it means that there are tradable opportunities around the inflation data. Now, again, I know a lot of you are saying, oh, but I'm a bit scared to trade inflation. Oh, it's not really my thing. I'll leave that to the algorithms. I think that's a bit of a falsehood, and I think that's a bit of a waste of opportunity. The way I like to assess any opportunity is if a market moves a significant amount, and significant is different to everyone. If a market moves 5% for me, I don't care what market it is, and I don't care what time frame it is. I want to partake in that opportunity. I want to try and understand it, okay? Because every opportunity can be capitalized on, including inflation. And I'm going to show you with inflation 2 strategies you can adopt. One is a day trading strategy. The other one is a swing trading strategy. Okay, so again, we can use our icon tool. Very, very handy for looking at eco data. We call this the eco calendars. Okay, wonderful. You can go drop down. You can sift through all the economic data points you want. It's a fantastic tool for understanding when we've got peaks in. Why? Because the market has been so fixated on peak inflation this year. Okay, so what's the trade opportunity? It's very simple. If actual inflation that comes out on the Reuters, okay, so you're on your icon, you can see this data print live. You've also got the ability to watch it live, so you've got that option utilizing the tool. The moment that number comes out, you've got a day trading opportunity as well as an end of day opportunity. In other words, you don't have to forego it completely. You simply just need to know how to take part in the opportunity. Okay, so we're looking at actual versus the forecast. And when we get a beat to the upside or a beat to the downside, we've got a trade opportunity. Now, I know what you're thinking. It's not just a case of playing with the algorithms. Let me show you. So I'm going to start off with the swing strategy first. Now, again, one of the things I love about this tool is the ability to filter, the ability to highlight, the ability to go and track various central banks. Okay, so how do I know inflation is important? Well, if I go and read what the Fed's told me, okay, I can go and read every single word they say. You don't have to watch CNBC. You can just simply get your icon tool up and go and look and read what they've said. You can highlight what's important. You can go back in time. Okay, the calendar function is hugely important when it comes to preparing for central banks. There is a very good reason prop traders have got this tool, okay? And I don't need to keep bigging it up. It is a very valuable tool for us because it solves various problems for us as traders, okay? Now, ultimately, Powell told us that, and this was from May, June. He told us in May, June that the Fed wasn't considering 75 basis. They weren't actively. There he says it. I'm not considering it. And 6 weeks later, what did the Fed do? They hiked 75. Why? Because we had a significant inflation reading from May. In other words, in June, we got the May CPI data, and it was significantly higher than expected. It forced the Fed to hike more than they wanted to. Okay, so when we got into June, we had a significant beat to inflation, and all of a sudden, the market began this process of trying to predict when peak inflation came. So what happens is very simple. When you have got a beat, in other words, we go to July, and if the actual inflation is higher than the expected inflation, we would expect equities to sell off. We all agree with that. Okay, why? Because if inflation's higher, Fed has to go further. The correlation is that equities go down. Simple as that. Now, at the end of the day, this is your strategy. It's very simple. At the end of the day of inflation, if the market holds the gap, okay, in other words, this is the gap down. So if our first example is this is the day before inflation, the day of inflation, the market simply holds. Okay, now if the gap holds, we have our first potential clue. Okay, so we need the gap to hold. That's rule number one. Rule number two, if the gap does hold and, like I said, the inflation print is higher than expected, we simply come in and we sell the open the next day. Okay, and again, I'm not going to talk about upside. I'm just going to take you through the basic premise of this trade strategy. Now, in this instance, our access is the gap. In other words, if there's no gap, there's no trade. Okay, let's look at the next example, which was July. In July, again, the market gapped lower, but this time it retraced the gap. So we had no access to the trade, so we didn't take the trade. Okay, we then go into August. Again, August, the inflation came out, and you can look at, yeah, the inflation came out less than expected. So this time we expect equities to rally. Market gapped up. By the end of the session, it held the gap. We simply get in at the close, and we then go on sides. Okay, same thing. So we're using this gap as the access. Again, if we go to September, all of a sudden, the market dropped very aggressively. It held the gap, so our access was in play. We simply executed the close, and again, I'm just going to go through these returns: 8.86%, 2.56%, 6.75%, 3.61%. Okay, in every instance where we've got access to this trade, we've got a very profitable trade strategy. My point is not that you must go and do this now. Please be very cautious. Tomorrow's inflation, by the way. Be very cautious going tomorrow and suddenly wanting to execute a trade. That's not how this game works. First, you need a trade strategy. That's what I'm showing you. It's called the inflation gap strategy. Second, you need access, which is the gap. Okay. If you've got that, then you need trade management. Then you need risk management. Then you have to continue, with the entire trading process flow. It's not just a case of you take this idea and suddenly run with it. It doesn't work that way. Why? Because what happens if tomorrow suddenly this trade starts to evolve? Are you going to be able to evolve with it if it's your first opportunity? Simple answer is no. Okay. So what I would say, though, tomorrow's Tuesday, and I would definitely want to go and watch this inflation and see if we get a beat or we get a miss. That's the first rule. Then the second rule, if we get a gap, that's our access to the opportunity. Okay. At that point, watch what it does over the next couple of days. It could be a fantastic tradable opportunity. Try and learn this approach. Try and understand this approach. Okay. Bobby, I've still got quite a while to go. Do you want to give me a heads up on what I must do?
So I'm the presenter after you, and so you're welcome to just keep going until you're done. I can shorten or lengthen mine however much is necessary.
Okay. All right. No, cool. Thank you. everybody that joined in for an hour, sorry, apologies, it's going to be a bit longer, but we're having fun, so we'll just keep going with it. Okay, again, I just want to illustrate to you the rate curve, the Fed Fund futures. Right? This is why we're using these charts. I can very dynamically go and prepare for this inflation print. Okay, so what do I mean by that? Very simply, what has happened since we had the November inflation? Now, cast your mind back. I'll show you this quickly. In November, okay, inflation came out 6.3 versus 6.5. And everyone started talking about what? Peak inflation. Why? Because if we look at the chart, I'm just going to scroll back. Okay, if we look at the chart, all of a sudden now inflation has started to peak. So everyone's talking about it, and everyone's now starting to price in a pivot from the Fed, a dovish Fed, a Fed that's going to pause sooner than expected. And what do we see equities do from that point in November? Okay, if I show you the NASDAQ, they rallied. Okay, from that point, NASDAQ has never come back. It gapped up and it stayed bid ever since. Okay, so now we can use these Fed Fund futures to start to prep for the CPI, because what we see is that the market is expecting the Fed is going to stop somewhere around 4.35%. Now, why does this matter? Well, because the Fed has told us that they're going to go at least 4.6, and some indications are they need to go to at least 5. In other words, the market is setting itself up. It's skewed itself, and this is the next strategy. It's skewed itself towards a miss in inflation. Okay, now here's the next strategy for day traders. Understanding as we go into not just CPI, but key data prints, one, is there a market skew? Because there isn't always a market skew. And two, which direction is the skew? Now, a skew in a very basic sense is which way is the market hedging itself? Okay, now, if you go back to June of this year when we had the first inflation miss, the market had this belief that the peak was in for inflation and that the Fed wouldn't have to hike as much. So going into the July and August inflation prints, all of a sudden, the market didn't have any hedging on. The market said, well, it's fine. Inflation's topped. There's no worry. And then all of a sudden in July, what did we get? We got that really, really bad inflation number. Okay, it came out much higher than expected. And everyone went, uh-oh, the Fed's going to have to hike more. Then when we went into the next meeting, everyone was thinking, okay, well, you know what? Inflation started to tick up again. It's getting quite aggressive. In this instance, we need to now hedge against an inflation print higher. So everyone went into that meeting short. Okay, they were short the equities in case of another beat to the upside inflation. They were hedged. What happened? The number came out less than expected. And so the first thing that happens when these skews are on is that positioning, that skew has to unwind itself very quickly. That's the day trading opportunity. Okay. Why? Well, because if the entire market's positioned hedged one way, and all of a sudden the print comes out counter to that hedge, all those positions want to scramble to try and take off those hedges as quick as possible and get some of the premium back. All right, so it's what we call a non-price sensitive move, where the market just goes, let me out, let me out, let me out, just get out, just get out. Price doesn't matter. That's a great opportunity for day traders. Okay, I'll show you what this looks like. The typical pattern play is something we call a 1, 2, 3 push. Okay, so it's 1, which is the algorithms. Very quick. You're typically not going to get involved. They're too fast. Okay. Now, again, if you're a day trader and you've got your icon terminal, you can trade this, but you're going to get in somewhere around there. And if you miss that, you're going to get in somewhere around there. Okay. You will always get that first bounce. Why? Because these algorithms that hit the market typically take a bit of profit. Okay. You then get the second punch. You then get a bit more liquidity coming into the market, and that's why we get a bit of a deeper bounce. But the deeper bounce gives us a second bite at the apple. Now, what I will say to you, when you have got these skew events, these repricing events, be very careful fading the market. Not worth it. Why? Because if every single big institution is not price sensitive getting out of their options, if you're going to stand in the way and provide liquidity to them, okay, you are going to go a substantial way offside and you're going to take a lot of risk. Right? So it's not worth it. What does the pattern play look like? That's what it looks like on a 1 minute chart. Okay, so that's what it looks like drawn out. That's what it looks like on a 1 minute chart. So this is September. Now the market went into this and it was pricing in peak rates. Okay, so the market went into this saying, oh, okay, everything's okay, don't worry, inflation's now peaked. And all of a sudden, what happened? We got a significant dump initially, which is the algorithms, and you've got very little chance there. Okay, what's typically happening now on this trade is that markets are actually white boxing. In other words, you can't even get in on that first move, but you can get in there. Okay, you've got 4 or 5 minutes to initiate your short for the second move. Right? You then get a slightly deeper and longer bounce. In other words, the market spends a bit more time trading between 2 points, at which point we then get the continuation move. Okay, The same thing happened in November. Why? Because what happened in November was we went into it, everyone was thinking, oh no, inflation is going to be higher than expected. There was a skew. In other words, the market was positioning for a higher inflation print. The hedges went in, and all of a sudden, bang, the inflation print came out lower than expected. Market smashed up, 2 minutes pulls back, goes again, and then continues the pattern higher. Okay. Now the question for you, a fun little fact question. Tomorrow's CPI in the US. What do you think the skew is? And the best way to interpret the skew, I'm just going to show you this inflation table again. The best way to interpret the skew is just to look at what the market's expecting going into the print. Now, what makes this one slightly more difficult is that on Friday, we had a very high PPI number. Okay, so some participants are leaning on the idea that inflation tomorrow could potentially come in high or a little bit higher than expected. Okay, however, which way would the market want to hedge itself? In other words, which direction would the market not want to be caught out on? Is it to the upside or to the downside? The simple answer is right now, the market thinks peak inflation is in. The market believes the Fed is going to be able to pause very early next year. Okay, so right now, the market is very much hedging itself for effectively, it's expecting almost a down print in the inflation. So the skew is leaning slightly towards an inflation print that comes out lower than expected, okay, because of the miss we had in November. So the market's leaning on this idea that we could perhaps get another miss come Tuesday. But like I said, the PPI on Friday is going to test that a little bit. But now what happens? Again, as a day trader, I've got an opportunity. And then don't forget, as a swing trader, wait for the close. If the gap is maintained, come in the next day, take the trade opportunity. Okay, that's then the inflation tradable opportunity. Now, I hope you're starting to get an idea as well that trade strategies are not necessarily what you think they are. They're not engulfing candle, then I just buy, or support, then I buy, or liquidity zones, then I buy and sell. A trade strategy is anything that you can contextualize, that happens frequently enough, that has some logic ingrained into it. It's got a number of rules that ultimately determine it, and that you can ultimately access. That's a trade strategy. Now, some strategies are very topical, like I've showed you. The inflation strategy will not be there likely next year. It'll be gone again. Why? Because inflation will probably settle down and calm down. The Fed won't be so reactive to it. They won't be data dependent anymore. Right, so very, very important you understand and recognize that strategies go through phases, the same as your strategies. Okay, and that's why we're always keeping up with them. That's how we're always logging them, learning from them, and completing the trading process flow with them. Okay, now I'm not going to go through the 3-month, 1-month spread, but I'll show you the chart of it. Okay, the basic construct of it, how it works. Okay, again, on your icon, spreads are great, by the way. Spreads is something I use quite extensively for currencies in particular, if I want to understand interest rate differentials, if I want to understand the spread between the 2 10-year bonds, if I want to understand the VIX 3-month, 1-month spread. Okay, so spreads is something I use quite extensively on my icon. And ultimately, what you've got here is a spread between 3-month VIX, in other words, the price of 3-month VIX, or where VIX is 3 months from now, versus 1 month. Now, in a basic sense, how this works, when the demand for 1-month VIX, when the demand for insurance, think about it this way, when the demand for insurance in the immediate near term is substantially more expensive than insurance for a longer term, say 3 months, it's because there's so much panic in the market that there becomes a bit of mispricing. Okay, now, effectively, when the spot or the front end VIX becomes inverted relative to the longer maturity, what typically happens is market participants would prefer, or there's a preference, to simply just go out into the outright market and execute the trade. In a basic sense, if it's too expensive for me to hedge the risk because the VIX is at 30, 40, 50, okay, the reality is I got 2 options. I can't trade the options because they're too expensive, so I'm just going to get out in the outright market, or I'm going to hedge myself outright. In that instance, there's a very strong correlation when the spread is negative and continued downside moves. Now, it's not a trend strategy. This is not a, oh, because it's negative, therefore the market's going to trend down. No, it's very much a, when it's inverted, at that point, I want to look for access signals to downside. So I'm looking for breakouts to the downside. I'm looking for, any kind of head fakes that are going counter to this trade opportunity. That's how we use this trade strategy. So it's very much just telling me that there's a very strong probability that we are going to have price moving in the downside direction. Okay, that's a 3-month, 1-month spread. Again, strategy idea, we need access in order to execute it. Okay, that's where we are. We've done that now. We've done the signals. We've done 4 trade strategies. I've given you 3 basic access signals. There are loads of access signals. Anything can be an access signal so long as it's objective, it's measurable, and it's precise. Same thing every single time. Okay. The way to think of an access signal, you've got to be able to automate it. Right? If you cannot create an automated signal on your icon for your access signal, you don't have access. Okay. What you've got is you've got an idea. You need to make it so that it's precise. If you've got that, you've got something very powerful. Now, what I'm going to show you, I'm going to run through briefly through the rest of the trading process flow, because all we've done now is prepare. All we are at this point is we're sitting at our desk, the clock strikes 9 o'clock, the cash market's open in the United States, and we're now ready to trade. At this point, we've not done anything yet. We're still waiting for the signals. Now, once that signal goes off, we have to make sure that risk is taken care of. We have to make sure execution is taken care of. None of this stuff happens during the trading day. Everything is predetermined and automated. What do I mean? It's very simple. And this is where the Trudello tools now take over. They switch over. I've got my icon for developing my strategies and for ultimately signaling them. But now I need something to take care of risk. Okay. What you've got in front of you is a Trudello risk management solution, 8 different strategies. And all I do is very simple. I go in and I say, I want to execute in the DAX. I have a strategy called the open drive, and my stop is 38 prices. My risk manager then just simply tells me, there's your position. I want you to execute 2 contracts. And that's it. There's nothing else to risk management. Now, if I have a second trade because the second signal's gone off, it's very simple. I want to execute Apple. It's my price discovery trade, and my stop is $3.75. What does the system say? It says buy 525 shares. As simple as that. I'm not thinking, I'm not having to worry about, oh, is it the right position? Am I over-risking? Am I under-risking? What happens if I lose? None of that is a consideration during the process flow. And this is so crucial. If you ever find yourself emotional or nervous or scared or worried or fearful, it's because you haven't automated your risk management process. And I would go as far as to say you probably don't have a risk management process. And if you do, you're probably not comfortable with it. Okay, so it is as simple as automatic risk management. We've got to have automatic risk management. From that point, and this is where, automatic tools become quite powerful, because it's a data crunching algorithm. Ultimately, what it does is it's feeding me live information. Okay, this idea of what target should I use or should I trail my stop? None of that is a consideration during the trading process flow. I'm following the rules. The Guardian says to me, hey, look, you know what? Your target range for this trade is 60 to 78 prices. Not should I get out, shouldn't I get out? Oh, I'm worried about it coming back. No, you're simply following data. You're following an objective approach to executing your trade strategies. This is where data starts to become powerful, because now we're starting to make optimal decisions. Not perfect. I'm not getting out at the extreme. I'm not taking the absolute maximum, but I'm starting to make consistent optimal decisions. That's why we automate this process. Okay. Equally, how do we know when we're in a no edge environment or when we're in an edge environment? How do we know when we're in prime time? How do we know when our breakout strategies are optimal? Okay. If you're trading a breakout strategy, outside of cash hours, the reality is the probability of you succeeding is going to be substantially lower than if you're trading it in cash hours. Okay. And you need to know these parameters in order to make optimal decisions. Okay. So risk management is taken care of. Trade execution is taken care of. And I know this all looks crazy. I know this all looks, wow, when did traders become so automated in the decision-making process? Well, they had to become, because everything nowadays is about optimal decision-making. So we do the same thing with execution. Okay, where do I enter? Where do I stop? Where do I target? None of that is thought out during the trading session. All of that is pre-planned, predetermined. My entire strategy sits on what we call a strategy card. It's the entry, the exit, the stop. Okay, it's what percentage, what should I be risking on the next trade? How many dollars? And it's all based on probability, not based on your feelings and your intuition and, oh, I think this is a good trade. No. Okay, we use these characterization. I told you about this earlier. Certain characteristics drive a trade to be more profitable and less profitable. So we can see our execution notes that lead to textbook trades. We can see our execution note that lead to a trade failing. All of this is available at the click of a button. It's just data that's there at our disposal so that we can make optimal decisions. Okay, what execution signals? So which access signals are ultimately leading this trade to be profitable? Okay, what is getting me in the trade? All of that data ultimately can be stored and logged. Okay, the other one I really like I showed you earlier, all of my icon charts, I want to be able to very quickly reference them. Okay, remember what I said to you. If I've got 100 breakout trades, I want to be able to quickly look through those breakout trades. More importantly, if I told you, show me all your textbook breakout trades, you've got to be able to filter quickly and say, I only want to see the breakout trades so that I can go and do some observational pattern analysis. Okay, so again, that's our execution and our strategy cards. We then have our performance review. And again, a lot of traders have got really good debrief processes, and something that, you know, when I see this with young traders, I feel really bad for them because I recognize it in myself. When I started trading, we had a journal. We all did journaling. And you know what we did? We typed out these amazing notes. I'm telling you, we spent an hour typing out everything, and we became better for it. But you know, the real problem with that approach is, if you cannot quantify those notes into data, you are wasting an absolute golden opportunity. Think of the age we just entered now, where your watch has got data, your phone has got data, everything is data. Why? Because when you take that data and you can convert it into something meaningful, it can lead you to making optimal decisions later on. Okay, so that's ultimately what we're doing in our performance review in Trudello. We're taking the data and we're optimizing it by quantifying it. Right? When I say that, you know, where did I get in? How did I get in? What trade did I execute? Did I get aggressive? Did I get passive? Etc. All of that is simply just put into ones and zeros, and it's used by algorithms at a future date. So at that point in the future where you really need that information at the click of a button, the algorithms can provide it to you. Okay, so that's what I've said here. With your reviews, make sure that, one, you're asking the right questions. Okay, a lot of traders do a lot of good work in their journals, but they're asking the wrong questions. Two, make sure you're asking framing questions. A framing question just simply means you're putting your mindset into a specific frame of mind. Okay, so you're thinking in a specific way. And then lastly, make sure your data is quantifiable. Go and take that data of yours and use it in your future decisions. Okay, don't waste that opportunity. Lastly, like I said, chart analysis. Okay, this for me is crucial. I've got to take all those icon charts. I've got to log them. I've got to capture them. I've got to annotate them. I've got to find those inversions, find those correlations, log those axis candles, make sure that I've got my 50, 100, 200 breakout strategies. More importantly, I've got to be able to go and see the classification. Was this trade textbook failure? What led it to failure? What was my risk variance? What are the metrics around that trade strategy? Why? Because at some point in the future, when I come back to this trade strategy, I have to answer this ultimate question. Do I have an edge or not? Okay, unfortunately, as traders, trading is one of those things, and I started off by saying this. We spend 90% of the day executing, 10% thinking. Okay, now the problem with that is we've only got 10% to actually answer the question, do I have edge at the end of the day? Most traders seem to think they have edge. Without data, it's impossible to know. Okay, and that's why all day traders, doesn't matter what trading floor you go into London right now, they've all got some form of analytics software. They are looking at the data and making sure that they're aware of certain things. Where can I improve? What can I improve on? What can I do to get better? Because that's the game we're in now, guys. Trading is a professional pursuit now. It's no longer this business of I log on for 1 hour a day and I simply profit. It doesn't work that way. Right? If you want to be successful, a trader, it's a long-term game. You've got to be holistic. You've got to put the hours in, work out your trade strategy, work out your edges, and make sure you're constantly evolving from that point. Okay, that's a summary of it. I'm not going to go through that. And that's what we've done today. That's the summary. That's the trading process flow. That's the pilots of trading. It's what we do on a day-to-day basis. We simply have a trade idea. We wait for the access. The moment that signal hits, bang, we follow that automated process. Follow the risk management, log those trades, and then they learn from them, progress from them, come back the next day, do it all over again. Okay, when I have 100 trades, then I start to become that master of that trade strategy. And that's all you need. That's where I'm going to conclude today. You only need one strategy to be successful. Bobby, I will hand back to you. You may have the platform. If there are any questions, Bobby, do you mind feeding them through? I don't know what you want to do. If you want to hit the questions. I'll leave it up to you because obviously I know I've gone completely over time.
Oh, you're fine. I really enjoyed watching your presentation today, and there were a few questions that came through. I'm happy to do a back and forth
Okay.
and kind of just let you know these if you want to go through them.
Yeah, let's do that.
Great. Also, just to mention, I tried going to Trudello.com and it's not loading for me.
Yes. So currently Trudello is a product that's available for professional trading floors at the moment in London in particular. And it's technically not a retail product yet. Okay.
Okay.
There is a website under construction. It's one of those things that's been kept very secret, under wraps, because it is the proprietary technology of professional traders. So that's why there is no website. There is, however, a launch coming probably in the next week or so. So yeah, if traders are interested, they can there's a demonstration available of the tools, how they work, all that kind of thing. They can just email the team at Trudello. Okay, great. Well, with that covered, let me get to some of these questions here. So someone asked earlier, could you give advice on scaling for a trader who debriefs, journals, quantifies trading data, and maps during the day using the tools you teach in your Edge courses? Okay, so by scaling, I suspect you mean position sizing. How do you get bigger at your position sizing over time? And again, this is something I think a lot of traders struggle with, is this idea of how do I go from a $10,000 account to a $100,000 account? The reality of the situation is you've got to do it methodically. And this is, again, why a lot of traders like some form of a risk management protocol. Because, and again, I know I'm going to reference Trudello because that is the answer, but ultimately what they do is very simple. When you log onto the tool, in fact, you can see it here. Okay, when you log onto the tool, that's your account balance. Now, your risk management is automatically determined off of that account balance. Okay, so when you start improving as a trader, when you, for example, you have a 10% month and now you've gone from 1,000 or 15,000 up to 16,500, that additional 1,500 is ultimately being reinvested into future decision making. Okay, so you are growing organically, and that's crucial to understand because the typical behavior of a trade in the beginning is, I want to go from 10K to 20K. That's what everyone wants to do. The reality is that in the beginning, you need to go from 10K, learn different strategies, start to find consistency, and as your strategies become better, the risk manager will automatically increase your amount of risk because it's all based off of your account balance. Okay, now coming back to just the normal trader, it's not to say you have to have an automated risk protocol. If you are just wanting to build a risk strategy for yourself, you need to have your risk strategy determined, one, ultimately on what are your objectives, what are you trying to achieve, where you're trying to go. But then it must all link back to that account balance. Okay, the perfect example to use, if you're a trader that risks 1% per trade for every trade, then as your account balance grows, you need to make sure that you're increasing that position size with that account balance. Okay. The other thing that, and again, there's a couple of ways you can do this. Some of the risk strategies are dependent on probability of outcomes. In other words, as your trade improves, as it becomes hot, you're risking more. That's another way to make sure you're leveraging on your best players versus you're not. Another way they do it is there's an option to what we call reinvest daily proceeds. So if you're a day trader, typically day traders are a little bit different to swing traders in that when we get hot, it means we're executing well, we're seeing the market well. Now, because of that, typically I want to make sure when I'm seeing the market well, my profit on the day, in other words, my realized profit on the day, I actually want to reinvest that into the rest of my day. Okay, so that's again another way to leverage profit. So there's a number of different ways you can do risk management. There is no right way, and I cannot stress this enough. There's no right way to do risk management, but you have to have a way. You have to have a structured way, because what typically traders will do, they'll start off one way, and then all of a sudden they'll change it. And the moment you change that risk strategy, what's going to end up happening is you're either going to lose more, or something's going to go wrong, and then you're going to sort of take 3 steps forward, 3 steps back. Okay, so position sizing, to summarize your question, it's a methodical process. It will come, and it must come as a byproduct of that account size. Hopefully that answers the question. Okay, great. And then
something that might actually go along with that. They also asked, how does Trudello management know how much risk to assign if I trade different markets? As in, does it have the same rules for each, or does it vary if you're trading different markets?
Okay, so Trudello is not connected. Trudello is a standalone application, and it can connect to, for example, I use Trading Technologies. Okay, so it connects to my execution platform, which is Trading Technologies, and all of my information is coming via Trading Technologies. So what it sees is it sees that for example, the S&P 500 is $12.50 for a one lot, or it's $1.25 if I'm trading micros, or whatever market you're trading. So it knows the ultimate contract size. From that point, then, depending on the strategy you take, depending on the risk strategy you take, it will allocate risk to different strategies. So the basic example, if you're a day trader, the most simple day trading risk strategy you can have is what we call an equal weighted system. And that's exactly what it says. It says, I want to equally allocate risk to all of the trades I do on a day-to-day basis. Okay, now, if I'm a day trader and I typically do an average of 10 trades a day and my daily stop is $1,000, it means I'm allocating $100 to each trade. Okay, so it's a very simplistic, equal weighted trade strategy. Okay, so the moment you select that strategy, all the calculations and everything it's not done on your risk manager or your account manager, it's done on your application linking to your execution platform. Okay, hopefully that answers the question.
Great. And then I'm just going to ask one final question from here, and I'll request everyone else to just email them at info@trudello.com for anything after this question, just so we can move on with the other presentations. But Rebecca wants to know if they can get a demo of the Trudello platform, even if they're not a professional. Okay.
I think, yeah, if you're interested in a demo, what I suggest is email the team info@trudello.com. They will send out a demonstration in terms of a video demonstration, so you can get an idea of what the tools are. And I think if I'm not mistaken, Bobby, maybe you can correct me. I think you can sign up for that demonstration. I do believe Trudello offered the demonstration, if I'm not mistaken. I think that was included in the pack.
Yeah, and the sign up offer. I think that's what they're referring to.
I think so it's in the sign up offer. So you can go and you're going to do the basic introduction to the tools. One caveat I will say, and I'll say this by the way for Icon as well. Icon is a fabulous tool. It's incredible, but it's like any tool. You have to take the time to set it up. Okay. Now, Bobby mentioned that my templates have been created, and I did that for a very specific reason, because I started using Icon in 2014. So this is now 8 years of using the product. I didn't know how to use it effectively on day one. I know how to use it effectively now because I've spent the time learning the product, and that's crucial. It doesn't matter if you get with Icon, which as you can clearly see is very important for day traders and swing traders, or if you get with Trudello, you've got to take the time to come to understand the product. So if you're going to take the demo, yes, it's available for you there. You'll get a very good feel of what the product is. And like I said right at the beginning, do not take a tool because you think it's going to magically print money for you. It doesn't work that way. Tools solve problems. Okay, the same as I've shown you a number of different charts, a number of different ways to use the Icon, and I've shown you how I use them to solve problems for me and to answer questions for me. It's the same for every single tool you take. Get the tool, see if it adds value, see if it solves problems. If it does, guess what? It's part of your arsenal. Okay, if I listed off the number of tools I've got as a trader, I think it would shock some people. But every tool does solve a unique problem for me as a trader. So yeah, I'll leave it at that. I won't promote any other tools because the reality is I think they're all well-known tools anyways.
Okay. Hey, well, yeah, thank you for coming on today. It was great to see your demo. And, we hope to have you on again soon. But I think that kind of covers up all, kind of in my presentation. I'll let everyone know how they can also sign up to get our MetaStock Zenith under your guys' promotional code, where they can get a trial to try it out as well.
Brilliant. Thank you, Bobby. And thank you very much, everyone, for your time. And I look forward to seeing you in the chat rooms.
All right, guys. Let me get back into my slideshow here. So yeah, that did end up going a little long, but as he said, you know, we were having fun. So, so we wanted to keep that going, and I'm glad we did. And I can go ahead and shorten my presentation today so that I can still show you guys everything, but just kind of at a higher level overview to get through it. And, you know, what I'm actually hoping to do today is go through showing you guys how you can actually utilize everything we've seen from all of our different presenters today, while also answering the questions that were initially posted in my in the description for today's talk. One thing that you'll see here on my chart, let me make sure I am sharing my screen. Yeah, it looks like I am. So what you have up right here, this is one of the Trudello templates for our MetaStock Zenith, which is what Brannigan was using. And so we actually have these available so that you can download them and get his templates inside of Zenith. And we're very close to having a new video out on how to do that, but we do have them available. And this just goes to show some of the different mappings that he has in there. If you were to get that. Also, if you want to try out the MetaStock Zenith, which is basically like a retail version of Refinitive's icon platform, but this, we do call it MetaStock Zenith. You can get a special offer for that, where you get 3 months for the price of just 1 month at metastock.com/Trudello EK 3-for-1. And that'll let you get an offer to sign up for that promotion. Of receiving the 3 months there. Also, with that being said, I wanted to touch in on the traders pack that we have available. We've already kind of covered everything on here for the most part today, where we had Steve Bigalow. You know, he has the Candle Profit System 2.0, and we're also including his extensive training course as well. That alone is valued, you know, both of those over like $1,200. You have Colin Abrams' Paragon trading toolkit, plus his 6 different training courses that he taught. You'll notice with a lot of this, we try to include all the information and training and support that you guys need to get you through everything. So we also have Daniel Sinnig's Power Bundle 360 and our sponsor, Stocks and Commodities Magazine. They're going to give you a 2-year subscription to their magazine, as well as we'll give you additional modules with our Unleash the Power of MetaStock workbook and videos. All of that normally close to about $4,000 retail. And that is the everyday price that we offer if you were to come any other time. And if you bought all these things, you'd be paying $3,841. But we're giving a promo right now, just $19.96 with our Euro Summit Traders Pack. So we were trying to give you guys the best deal possible, and we maxed out all the discounts we could to get you this rate. If you're interested in receiving that or learning more, metastock.com/sales chat, and you can chat with someone from our team. If you need to sign up for a trial of MetaStock, as well as Zenith or anything like that, they can help you with that as well. Or if you just want to order online, metastock.com/Euro deal. Real quickly, I want to say thanks again to Stocks and Commodities Magazine and London Investment Week for promoting and supporting and sponsoring our presentations today. I have some more screens on MetaStock, but I want to kind of try and jump through this so we can get to my meat and bones here. So I'm Bobby Hiller, as I said, kind of at the start of today's presentation, in case you weren't there. I've been here for about 6 years. And currently I handle all of our international business development. So I have a really unique and wonderful job where all of our international partners, which we have dozens and dozens of them, I basically work with them and help bring their systems into MetaStock, help set up these demonstrations. So I am often around people that I consider to be, you know, much smarter than me, which is how I love it. You know, I like to surround myself with people like that. And I've been able to learn a lot from all of our different partners and all these different speakers, from doing all these presentations and creating systems with them in MetaStock. And I may not be an expert like all of them are. I wouldn't consider myself a trading expert by any means, but I definitely do like to trade, and I love utilizing all the tools that I'm able to get access to from my unique position here. And because of that, you know, I think that I do have a lot of information that I can share, at least. I might not be an expert, but I can help share what I know, and I think it can help a lot of you as well. Before I jump into things too deeply, now that I'm getting on to my specific presentation, just real quick, I want to say that this demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. This is not a recommendation to buy or sell, but rather I'm going to be showing you guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. I kind of spoke about this earlier today as well, but I just think it's good to touch on again. I mean, MetaStock, we were founded in 1982, back when you had to have floppy disks to get our software. So we're truly pioneers in technical analysis software. So, you know, we've been making technical analysis programs and charts and things of that nature before a lot of people even knew what a computer or what the internet was, I'll say. So we've been around for quite a while. We released our first real-time feed back in 2005, and in 2012, we were able to release MetaStock Zenith, and that's what you saw Brannigan showcasing a lot of, was our Zenith platform. In 2013, we actually divested from Thomson Reuters, now known as Refinitiv, or now owned by LSEG, but we divested from them just so that we could move a little bit faster. So we're still all the same people here at MetaStock. The average employee's been here over 10 years. However, we're able to move a little bit faster, release new things, do more partnerships by not being underneath Reuters anymore, that we're still partnered with them for our data and services. So today, what I'm gonna try to do in just a quick demonstration is I wanna show you guys tools that you can utilize to help you know, to help you find what securities you can trade. Sorry, I could kind of hear myself with the headphones, so I took those off. I'm gonna help you learn when should you get into a trade and when should you get out of a trade. We have tools specifically to answer that question for you, to help remove the emotion from your trades and help you with that. Also, if you're curious, what system should I use? You know, there are so many out there. We have a way for you to test what different strategies are going to work best for your trading style, your level of risk, your account size, etc. You can really specify everything that's unique to you, because it's not going to be the same for everybody. And I'll help show you guys how to do that today. And yeah, via testing. So, and also, yeah, we'll teach you how to test these systems before getting into a trade as well. So with all of that said, let's go ahead and jump into our MetaStock software. So I've been in here a couple of times today demoing some things. Now we'll change it up a little bit. All right, so currently, actually, we'll even just start here just to kind of keep things going fast. So with MetaStock, just like many other charting platforms, you know, you can have your pricing chart, but then, and your volume on here, and you can add indicators to your chart. But MetaStock is really unique in the fact that we give you several additional tools, one being like our expert advisor, which I have up currently from one of our earlier presenters. This is Steve Bigelow's candle profit system, and this is his expert advisor and commentary attached onto my chart here. And what this is doing is this is signaling all the different candlestick patterns that are showing up on my chart. And then with the expert advisor inside of MetaStock, this is helping to teach you how to utilize this information, so I can know, like, hey, during a bearish kicker, this is what this signal means, and this is how you can trade that signal. So this is just kind of like a basic here of, you know, maybe if you do have a system you want to follow, I just want you guys to be aware that with MetaStock, we'll kind of help guide you through these trades once you have gone through and selected your systems and things of that nature. You're going to get a lot of additional guidance with MetaStock versus another platform. And now to kind of jump in and answer some of these questions that I posted in my previous slide, I'm going to jump into the MetaStock Power Tools, because this is where all the magic happens within MetaStock. This is going to give you access to all the main tools within our software that are going to help to answer these questions for you. And you'll learn throughout today's demonstration that you can combine these tools to utilize them together to help you with your analysis. So one of the main tools or questions we had too is, how do I find my trades? So say that, this is a system that you were wanting to use, and we'll go over different ways of how you can find a system to use, but maybe you did want to utilize Steve Bigelow's candle profit system. And we've kind of talked about this earlier today. Or let's include everything from today's presentation. So I have the candle profit system from Steve Bigelow, and I've said, hey, I want to search up major patterns from the candle profit system, and I want to find something that I can take action on today or this week. So I can say that I'm going to search for these major patterns, and if I hover over this here, it's going to show you a list of all the major patterns that are within that. There's also many other explorations here for me to select, but if this is the system I know I want to utilize, this makes it really easy for me to select that. I can tell it I want to look at about 1,250 records. That's about 5 years worth of data when you're looking at just trading days. And I can say, I'm going to search this on a daily time frame because I like to take swing and position trades. So maybe that's what you want to do. Or if you're an intraday trader, you can go in and select an intraday time frame or even a longer time frame if you're more of an investor or long-term swing trader. That's definitely an option available. And just to give this demonstration a little more just to give a few more tools here, sorry. So instead of just showing you guys that, okay, I can scan for the candle profit system, say you ordered today's trader pack, and you also really like the Power Bundle 360 systems that you saw Daniel Sinnig present. I can also say, hey, I also want to know what securities are giving me the Power Bundle 360 1, 2, 3 strike. So I could select this as well, or any of the other Power Bundle systems, anything of that nature. And then the other presenter we had on today that has a system inside of MetaStock that you can scan for is going to be Colin Abrams, and that was with his Paragon toolkit. So if I type in Paragon up here, it's also going to give me a list of all of his different signals and things that are available, and I've selected one here. And so now what I could do is, now that I've had these all selected, there's a few different options here, and something that's kind of cool that I want to show to you guys as well. So I can use the selected instruments for all explorations, but say, and that's basically going to give me 3 different scans running across all of, currently I have the London Stock Exchange selected. It's going to say, all right, these are the systems in the London Stock Exchange that have the Paragon weekly buy setup. Here's everything with the Power Bundle 360 1 to 3 strike setup and the major pattern setups, etc. Or if you wanted to combine different strategies to give you, a second opinion on those, you can also combine these and say, hey, I want to search for the Paragon weekly buy setup, and then I'm going to use the results from that exploration. So whatever is in a weekly buy, then I want to see which of those has the Power Bundle 1, 2, 3 strike also signaling as well. So this is giving me a double confirmation. And then maybe you actually like to trade specifically off of a candlestick pattern. So then you could add in the CPS. So all the results from those two, it's filtering it in this way if I select use the results from the preceding exploration. But just for today's demonstration, I'm going to just run or show you what the scan looks like if I did each one individually instead of combining them. I just wanted you to know that option was available. And for time's sake, I actually ran this in the background earlier, just today during these presentations, because I knew that I was going to have a little bit less time today. So if I ran that scan, it would take a few minutes. But then these are the results that I would have received here. Oh, actually, that might not have been the scan I was looking for. View all reports. Here we go. So here's the CPS major patterns. So now look, and the major patterns work so little uniquely. It's letting me search for very specific patterns. So if I just wanted to look at the dojis, I could filter by that, or the engulfing here, I could filter by that. But you'll see about 50% of securities within the London Stock Exchange didn't have any sort of major candlestick pattern showing today. If I go into the Power Bundle 360, you'll see this one. It rejected 5,460 securities. So that saved me from looking at 5,400 charts with, potentially the expert advisor up there that's showing me buy and sell signals. So that alone saves me a ton of time while I'm looking at my chart, because it'll just direct me right to where the buys and sells are. And then I can turn on the commentary to learn more about it. But you still don't want to have to look at almost 6,000 charts. So really, if you just want ones with signals today, you can run this scan, and here you go. This will help you find something that you can trade today based off this strategy. And then I can filter in here too. It looks like, a lot of these are coming from short signals, but then also this gives you the ability to look at the short signals as well as the short efficiency, and maybe you want to match those up. So you only want to take something that has a short signal and a very high short efficiency rating with the Power Bundle 360 123 strike. And then kind of the same thing earlier, like I showed too. So we rejected about 5,300 securities on the Paragon weekly buy setup, and there's about 226 that did give a signal. So this is a way to kind of just filter things down and help you identify what securities you can trade today, or which ones you might actually want to take a further look at, because it's it's generating signals based off criteria that you want to search for. Now, maybe you have another question though. Maybe your question isn't, okay, not how do I find them for today? You're familiar with the scans, or you just have 10 charts or symbols that you like to look at every single day anyways. Well, the other side of this is we have our system tester. And what the system tester can do is it allows you to back test strategies based on your own account information and your own risk parameters to see how they've performed historically. And you can choose the markets that they're back testing on, so you can make sure that it performs well on the securities that you want to trade or in the market you want to trade. This allows you to match the personality of a system to different securities and find out which ones perform the best. So if I take kind of the same aspect as I did earlier, all right, well, I want to test the Paragon system. You could select as many as you wanted in here, but just again, for the demonstration, I'll do the Paragon Dow Theory signal, and we'll search up like the Power Bundle 123 strike. And it looks like there's actually a report here for the Divergence cloud and the Volatility crusher. We'll do those. With the candle profit system, that one doesn't have a system test just because there's so many different candlestick patterns and there's so many ways of trading that it's not easy to create a system test with buy and sell signals based off of all of those patterns. So that one's not in here, but we can test these just so I can show you guys. And there's a couple of ways to go about this. You could either select a bunch of different trading systems if you're still not sure which trading system you want to use, and run a scan across your entire market. Or another way of doing it is if you know or have a general idea of the securities that you do want to trade or something of that nature. Sorry, reverse this. If you have like a whole market that you want to trade and there's just a few systems you want to test, you can do it that way as well. Really, the book is open for you to make this fit what you want it to do. There's no one specific way of going about it. So what I've gone ahead and done here, actually I think I did. So I selected just those systems, the Power Bundle 360 and the Paragon Dow Theory, and I went ahead and I ran this. Well, you can actually run it against your last exploration results. That's one thing I wanted to mention. That's a way that they combine. So if you search like, hey, these have a signal today, all right, let me test those strategies from my exploration that have signals today and see how they've performed historically. And there's an easy way to do it that way. Or what I'll be showing you guys is, let's just go ahead and run this test against like the SPY. And I thought I had some FTSE indicators selected as well. Let's go ahead and just grab a couple. Oh, I did have some indices started down here. So another part of this that I wanted to show you guys, how I've been saying you can kind of customize this to meet how it is that you want to trade. So If I go into the trade options right here, it allows me to go into an account and I can put in my own account size. So I can say if I have $10,000, $100,000, et cetera, whatever it may be, I can enter that in here. And then I can say, you know, how much of my account I'm willing to trade. So currently it's set at 50% of available equity, or I could do, I always want to buy X number of units, or I want to spend $1,000 a trade, whatever it may be, you can set that up for yourself. You can also go into your broker here, and if you are still paying commissions or if you have margins or anything of that nature, you're able to input those into this tab here so that you know that this is going to match up with your personal broker that you're utilizing. Another tab here is trade execution. So we can come in here and you can say, all right, I always buy at the close. Like I wait until the end of the market and I buy in at the close. So you can say your buy price is the close. Maybe that's the same for the sell, or maybe you like to sell on the open. You can go in and select what you want with those, or simply pick the realistic market prices. And what that's going to do is once a bar closes, it gets you in on the entry of the next bar or the next day. So we're going to go ahead and leave that selected because that's, you know, just easy for demonstration purposes. Another thing to note is you can also select whether you trade long or you trade short or you do both. So you can select, maybe you only like to take long trades, so you can choose that option. And you can also choose how many records of data you want to load. So saying, hey, if I traded this for the last 5 years, et cetera. And now we're going to go ahead and take a look at that. And I will say that because Sinnig utilizes with the Power Bundle 360, he has his auto optimizer. I did run some optimized scans for his system. And then with the Paragon Dow Theory, this is just the standard Paragon Dow Theory, not optimized, that I ran here. And you can see of these strategies, which I did select, you know, these are going to be some of our very best performers. They all have really high gains, you know, over the last several years. And we can actually see more information here too, like the amount of trades and the average trade profit versus loss. You can see the best profits, the worst profits. We can also go into these. So like the 1, 2, 3 strike that I scanned for earlier, I can actually go into that. And this, keep in mind, I was just doing like an overview here. I wanted fast scans. So I have like the SPY and a few different FTSE indices or ETFs. And if you were to trade those with the 1, 2, 3 strike, these are your results. With that $10,000 account size, you know, you're looking at an average of over 23% gains utilizing these. I can even go into it another step by double clicking here. And this is showing the Power Bundle 360 1, 2, 3 strike. And it's letting me know, okay, we took, we had a profit of 26.44 here. That's a 26% increase. And the annualized performance of it was 5.33%. And this is against the SPY. And, you know, the SPY is one of the best, or, you know, it's basically the S&P 500 index, but this is the ETF for it. And the buy and hold annualized performance was 4.66% over this 5-year period because, you know, it's been rough this last year or so. However, this tells you it beats the SPY by trading with this Power Bundle 360, which is really big. A lot of people are looking for systems they can use to beat that. And if you were to trade this to just long only and enter in your own additional risk parameters or settings that you might like to utilize, you can improve on this even further. So that's something to keep in mind. But this is a great tool here. The system tester will let you test hundreds of different strategies that we already have built into MetaStock, or you can very easily go in and create your own strategies within our software, and then you can back test those and optimize those as well. And then once you know what it is that you want to trade, you can basically take that strategy and then you plug it into our Explorer or our scanner tool and then match that to the market that you like to trade. So whether it's the, you know, the London Stock Exchange, the FTSEs, the SPY, whatever it may be, then you can match it into here and run your explorations so that you get a list of stocks that are signaling today on the system that you already know works with the market that you want to trade it on. And then it'll reduce the amount of charts that you actually have to look at. And then when you are looking at those charts, you can utilize our expert advisor and our templates that we have available so that you can have a very visually appealing chart here that's going to show you exactly where these signals are and give you the commentary on them, letting you know exactly how to trade them. And I'll put on like another example here too. Let's go ahead and put on the Power Bundle 360 because we've been talking about that one a lot. I do not need to save that. We'll close that. And so this is just to show that it also works with these other strategies. And this one's not showing candlestick patterns, but this is showing me actual long entries and short entries, and then where I'm getting out. And you can see just how well this performs. You get a short here, and these are taking partial profits on the way down, and then you get a long entry here. So yeah, you really have some really good looking charts that you can use with this. MetaStock's going to give you all of these tools in order to, so I'm trying to click on this short entry to give you the commentary here. And then it's going to give you these tools like telling you, hey, this is what you're looking at. And this is how you should go about trading this. I keep missing here. I'm going to just use these arrows to make it simpler. Yeah, right here. So a short entry signal has been triggered. A short position should be opened with appropriate sizing, etc. And you can use our other tools to also help you know that the exact account size that you'll be doing with that as well. So those are just 3 of the main power tools inside of MetaStock, which are, well, I guess kind of 4. So you have the charts with the expert advisor, and then you have your Explorer to help you scan the market to save you time and find the securities that are giving you the signals you want right away. And then you have the system tester that lets you first or afterwards test those strategies to make sure they're going to perform well with the securities that they're on. And it's really easy to combine these so you can utilize multiple different trading strategies and find things that are giving buy signals off all 3 of them at the same time or whatever it may be. Really, the options are endless here. And then just, I guess, to kind of take this one step further to show you tools and features from everything that we've gone through today. So say, excuse me, say I have my list here from like my exploration, and I'm going to go ahead and pull this up here. So I wanted to take these 21 results here. You can copy these results that you had from an exploration here, and we could take it into MetaStock Zenith, which is the tool that Brannigan was using to show you guys a lot of things. And Zenith will allow you to look at like the news and the fundamentals, and you can also do charting within that platform. And this is a service of ours. And you could actually put this into a monitored list here and then look up the different news and information from it there. So I actually have the Trudello templates that Brannigan was using earlier today available. And so if you come up in here, he has a quote list that he has here. So if I wanted to add those into a quote list so I could more easily watch them inside of Zenith, and then easily jump in to find different news, because I can grab them from up here and look at them into the news, or you can even link things together in Zenith. So if I actually linked these real quick, and then I clicked on Euro here, it's going to show all the news located to the Euro, or whatever symbol it may be. Maybe I put in, the SPY from earlier, like I mentioned, that gave me a signal. So I added the SPY to my list up here. Now I can go in, check the news from the SPY, look at the other different charts and things, the rebasing chart on it, and things of that nature. So that's kind of just a way of combining all of these strategies to help you get the most out of all of them in one go. And with that, we are actually coming up on the hour again, and I don't want to take up any time from our next presenters, because I'm always around, and you can find additional videos from me too, just on our YouTube and things like that. So I'm gonna just open myself up to questions, if anyone has any quick questions, and then I'll jump back into my slides and then introduce the next speaker. I'm looking here. I'm not seeing anything in GoToWebinar. Checking YouTube. Yeah, great. So I'll just go ahead and jump back into my presentation, or the PowerPoint, I should say. Yeah, I guess one thing I should be covering is, hey, how much is MetaStock? Well, if you just want a subscription where you can get MetaStock daily charts with one region of data. So including end of day data, that's just $59 a month. We also have lifetime purchase options available. And if you purchase the software outright, you can like use local data with MetaStock DC or get data starting at $27.95 a month. So there are some really cheap options available with that. With MetaStock real time, that's going to give you all the intraday access. That's great for day traders or, you know, more fast-paced traders or people that want the additional news and fundamental data that comes in Zenith. If you're on a subscription of that, you're looking at about $265 a month. Or you can purchase MetaStock real-time outright, and then you can get your data for as low as $110 a month for the MetaStock real-time in Zenith. I should also mention that with the MetaStock subscription, we always give you guys free unlimited support. You can get white glove setup and installation service. We can help you install the platform, kind of set everything up inside of it so that you're looking at the markets you want to look at and give you a full demonstration of how all these different tools and features work. So that always comes included with your MetaStock. As well as we have a ton of recorded trainings available that we can get you access to as well. You get those when you sign up, as well as our YouTube, youtube.com/MetaStock is going to have a lot of information for you there as well. As part of today's special, you know, if you like everything that you see, but maybe you don't want to take advantage of the full traders pack, you just want to try out MetaStock on its own and the hundreds of built-in indicators and systems we have, you can do that. We'll give you 3 months for the price of one, so as low as $59 at metastock.com/Euro Summit. You can also just join in to our chat room and they can answer any questions, help you find out which package would work best for you at metastock.com/sales chat. However, what I would recommend to most of you, if you want to get the most value for your money, would be to take advantage of the Euro Summit Traders Pack we have put together for today. I mean, with this, we literally went in and we maxed out the discounts we could give on every single product to make this bundled package to give you everything you need to succeed. You're looking at the Steve Bigalow Candle Profit System, his full training course, the Paragon Trading Toolkit, his full training course, Daniel Sinnig's Power Bundle 360. You get his boot camp training and our support, as well as 2 years of Stocks and Commodities magazine and all of that for just $1,996. I mean, the value of that is normally north of $3,800. And that's a lifetime purchase on all three of these add-ons. So you'll own them outright. You wouldn't have to pay for them again. Really, really good deal there. And if for some reason you didn't love them, we do give you a 30-day money-back guarantee on that as well. So I definitely recommend trying that out. Metastock.com/sales chat or metastock.com/Euro deal. All right, so next, let me get my headset on. Hopefully nobody was talking to me during my presentation. Let's see, so I have actually been working quite a bit back and forth with, this is one of our sponsors, Simon, and I'm gonna bring him on today and then kind of let him do the introduction of a guest speaker that he's bringing in, but Simon agreed to help sponsor the event for us. He hosts a lot of live events as well inside of London. I'm hoping to get to meet him here in person pretty soon at one of those events, but for now we've been keeping things virtual. Simon, are you with me?
Bobby?
Yep, hey there.
Oh, you can hear me. Good. I'll just see if I could mimic my picture there, because it was a few years ago that picture was taken, so I have to, this is the real me, I'm afraid. Good evening, good afternoon. Thank you for having us, MetaStock. It's been good. We've worked together, Bobby, of course, and Jeffrey over the years, which has been good. I'm not going to share my screen. We're going to share screens with Adam. We're going to go straight to the slides with Adam, if that's okay.
Yeah, of course.
Just really nice of you to invite us to take part in this event. For those of you that I think some people are here have been on our events already in the UK. We do physical shows for traders and investors, and we also do what we call the Round the Clock Trader Summit, which is very similar to this. In fact, we get together good traders and we have a day of learning new strategies and skills for profiting in the markets, and it's through that work over the years that I've come into contact with my good friend Adam Harris, who you can see here. Hi, Adam.
Hello. Can I do a sound check? Is that good? Is
Yeah,
that all right?
that might be good. I can hear you.
Yep.
Yeah.
The PAL mic.
So it's great to see everybody here, quite a few here in the room, which is great. Where is everybody from? Are we more or less US, or do we have some Europeans or UK traders? Let us know where you're joining from, if you can, in the chat box. It's always good idea to know who we're talking to. Also interested to find out if you are exclusively stock traders, or you venture into other products as well, like forex or commodities or even cryptocurrencies. Remember them. So would love to get some feedback. What we're going to do now is Adam's going to be leading this. Adam's done really hundreds of fantastic webinars. You've tutored trading floors in the City of London. You work with brokers around the world doing training. And you work with me, which is great. Now we do a lot of this sort of training for investors and traders. You are self-taught, Adam, is the best way to describe it?
I would say it's probably more accurate to say an accumulation of lots of different sources. I've been influenced heavily by Larry Williams from a value investing perspective, Buffett, but I'm also technically Larry Williams, but also Mark Douglas, and I attended programs early on in the day. So Trade with Precision, that's Nick MacDonald, who that's also influenced me. So there's a lot of different things. So yes, it's if you take that and then it's my own mix, it's self-taught. Yes.
Fantastic. Well, I mean, when did we meet? It must be 7 or 8 years ago now.
Yeah,
I think.
Yeah, that's right. It was when TWP was still doing retail stuff, so that must be early days, 2014 or longer. Yeah.
And since then, you not only do this sort of mentoring and training online, but you've also managed the funds as well. I think you just mentioned that. So you're entrusted to manage money professionally as well, which is great. So
yeah. So I do. I mean, I'll let you finish, and then I'll give everyone a quick introduction because I've got that slide on the deck anyway.
Great.
So.
Well, let's just jump into it. 3 ways guaranteed to leapfrog the markets. I mean, this is what we're looking for, I guess, tonight. Everybody's had a long day already, so hopefully you can stay with us just for another 30 or 40 minutes. But as many questions as you can. I'll hand over to Adam and let you take it away.
Simon, my apologies. I meant to add your round the clock trader logo in, and in the last few minutes there was a technical hiccup, and so I'm afraid I didn't get the chance. I apologize. Yes, okay, so this is a quick rundown. So thank you very much for including me this evening, and I really appreciate it. Hello, everyone. I recognize 1 or 2 of the names, and Michael, it's always a pleasure to have you join as well. And so so what I do, my core income comes from trading. I trade predominantly. I'm a big believer in trading really strong trends, which immediately should put sort of equities top of the list. But I also trade commodities, so I'm usually looking at gold, oil, and then currencies as well. And I used to avoid, currencies were sort of lower down on the list, but actually my ability to trade the volatility has improved over the last 3 years since quarantine, or post-COVID. And so I probably trade about 50% of my trades are at least in currencies. But the technical skills are transferable, so everything should be kind of relevant for what we do tonight. And so what I wanted to do was, so we'll give you a quick description or rundown of what my average morning is like. I'm usually at my desk at, say, 6:30 a.m. UK time. I'll get the tail end of the Asia session, but we haven't opened in the UK. The UK session hasn't kicked off yet, or the London session. I'm just outside of London, so I'm in Bromley, but if I am ever doing my meetings, it's always in the city. And usually there's a burst of movement, sort of increased volatility in that overlap of those 2 sessions. And often I'll be able to find a few trades. So to give everyone a very broad overview, if I'm doing day trading, then I'm looking for a sense of direction on the 4-hour, and then I'm usually looking for an entry on the 15 minutes. So the reason I'll do that on the 15 minutes is it's not quite as volatile as the 5 minutes, and the spreads, the kind of cost per trade ratio is a little bit better than on the lower time frames. And then I'm usually targeting a 3-to-1 reward to risk. And so my average, it's possible that some of my average trades might be somewhere between about 9 pips from entry to stop loss maybe as high as 12 pips. So usually I'm under 45 pips for my 3-to-1, which is achievable in terms of the kind of moves we get on a regular basis. Hopefully, so far, everything I'm saying is making sense. If it's not, please, I'd love for this to be interactive. Please just, any questions you have, just throw them in. So, and then I'm, if I hit my targets in the morning, I'm done, which means that I might be finished by 8:30 in the morning. And sometimes the markets are not quite where they need to be, and you have to wait until the US session. You can go into a little bit of a coma from about 9:30, 10 a.m. until about 1:30, 2 p.m. when the US session comes online, and then you might get your moves between 2 and 3:30. So it's rare that I'm still trading at 6 o'clock. It's very rare. Usually I've taken my entries and the trades are just playing out. I split my trades into 2 portions. So I will basically take partial profits at 1-to-1 and then target 3-to-1 or the next level, or and I very rarely have to update my stop. I would use a structure, a technical structure, to do that, which is something we can never discuss, and if we have a subsequent webinar where we have time for that kind of thing. So what I wanted to do before I go to this is, and then I have a lot of free time. So in between, I have a lot of free time, and I really love working with Simon because we get a lot of opportunities for me to interact with people. And so this is I hate talking to people on the phone. This is really where I get to communicate and get out of my cage a bit. And so I guess what we could say is the retail trading market is still relatively new. Currency markets was really only available to the public from about 97, even though it's been around since the kind of early 70s. And even in 2000, early 2000s, the technology wasn't quite there. So this is still a very, very young market. And it seems to me that there's a big chunk of it is still institutional, and there's that side of it. But there's coming from the other side is the retail side, which is kind of springing up. And so I would say that I probably my origins are more from the newer, younger generation retail traders coming up from outside the industry and engaging in the markets. And so my approach is technical. I follow price action. I'm a big, big fan of it. And then it becomes about probabilities and letting those play out. So, and real world trading, all right? It is a numbers game. It's high probability. Some of these, I'll give you an example. Patterns, traditional patterns, such as head and shoulders, double bottoms, double tops, bear flags, bull flags, ascending, descending triangles. They have a very high success rate. You could make a living trading just those. You could if you really wanted to. And so what that would mean is that you would just trade head and shoulders patterns, and they have like an 80% chance of success. They've got a very, very high win rate. They don't have a very high profit ratio, which means that they usually give you 1-to-1 reward to risk. That's kind of the sort of, unless you could find a way to leverage that. Excuse me. The point is that there are lots of different ways that you can identify patterns in the markets that you can then trade. Usually what happens when you become a master trader, so the definition I'm using for a master trader, is really somebody who is settled into their way of doing it. And now it's literally just a process that they go through, and then they yield profit over time. But yes, if I had to really simplify it, you could do that. You could just trade head and shoulders patterns, and you could make a living off that. There are some more skilled, more complex arrangements that you can do. So I find that when I mentor people, so I've kind of written a book. I've got the second one I need to kick off in January. That'll be 2023 Future Me's Problem. And then I do a couple of mentoring. I mentor only about 6 or 7 people a year. And then I spend some time in the evenings doing webinars and such. Yes, we had a lot of snow. So yesterday it was -3 or something, and then just suddenly we got about 5 inches of snow. So it started to melt today, but it's been crazy. And so there are a couple of areas where I think that people don't really appreciate that these are ways in which you can significantly progress your trading, and because you can't shortcut it. So there's a couple of things I want to kind of sort of urban myths. I would love to dispel urban myths. They say that there's a million different ways or an infinite number of ways you could trade the market. I don't really think so. You can either trade trends or you could trade markets that aren't trending. And then you can either trade a range from top to bottom, or trade with a trend, or trade against it. And everything should effectively be a variation of that, unless perhaps you're trading a gap. And again, trading the gap is something you would do exclusively with equities, or for example, you wouldn't do it traditionally with currencies because they don't gap as much. And so you're trading sort of a market inefficiency. And so I'm just trying to keep my train of thought here, is I find also that you can't fast track it. There isn't really a way you can say, okay, well, I'm going to be, I'll be a master trader in 6 months. Even no matter how much effort you put in. The reason that is the case is because there's certain experiences you have to go through, and you can't, they're not listed anywhere. You can't work your way through those. You have to go through them, you have to live through them to be able to progress to the next milestone. But there are ways in which you can sort of accelerate it. I find most people are not doing that optimal period. In a perfect world, we would be able to get onto a trading floor if we wanted to learn how to day trade, and we would sit in amongst 4 or 5 other traders who are already seasoned, and we would, through exposure and osmosis, we would adopt habits from them. They would stop us from doing silly things. They would curtail our bad habits very quickly, and we would adopt really good habits really quickly. And that would be, I think in those situations, you'd probably be somewhere along your way in like 3 months. If you were doing that every single day, in 3 months, you'd have gone through it. But unfortunately, the way it is today is we have so much in our favor. The technology, the opportunities are the best they have ever been, and the costs actually are the best they've ever been. However, it's a very lonely activity, and you have nobody to stop you from wasting time going down the wrong path. And so what I sort of keep coming back to is the 3 things I'm going to talk about, and I want to spend some time looking at the markets as well, is the kind of a couple of things that I want to talk about are things that I truly believe, and in my experience, can shorten the time for a person to get to consistent results. That's really what the goal is. Okay, so let's just go back to this. First of all, is using a trading journal. None of these are sexy, by the way, but I hope that they will make sense to you. A trading journal is essentially a record of all your trades. But what's different about the way that I believe it should be done is that having an Excel spreadsheet of the results of your trades is just a simple record of that. It's not as powerful as a learning tool as the correct type of trading journal should be. So first of all, it is a visual activity. What we are doing starts with the chart. If you're doing technical analysis, it starts with a chart. And fundamental analysts believe that we should disregard, or that investors should disregard, the day-to-day market movements because it's noise within the bigger picture, and that ultimately the fundamentals will play out. And that's a Buffett approach, and I agree. The beauty of it is that technical traders operate in that little window of noise. So they will effectively be looking for stuff that doesn't depend on the bigger picture. So it's the inverse. They're operating on whatever the market conditions are of the day without necessarily having to be influenced by the bigger picture, because the two might not be connected. I hope that makes sense. They don't have to be connected. You can have a market behavior today that aligns with the bigger picture, or you can have one that doesn't, but you need to approach it on the day the way it unfolds. So technical trading is a visual activity, all right? We are using a pattern recognition component of our neocortex. It's a big part of our evolution. Patterns are our survival tool. And you don't feel it. It's not like a muscle that you work out, or you don't feel tired after your brain is doing it, but it's constantly there. You've got your conscious and subconscious, and it's part of your subconscious as well. It's just constantly just watching and observing. It's not under any pressure to make decisions. So it's just recording and digesting. And on that note, actually, when we're not in front of the charts, so if you're in front of the charts for a very long period of time, you suffer from cognitive decline. So 2 to 5 hours maximum in front of the charts is an optimal amount where your brain has got enough, and it will, honestly, you'll have most of your progress when you're asleep, when your brain is kind of working through simulations and processing the day, and then when you're not in front of the charts, that's when your brain can actually process it. So the point is that we have this incredibly powerful pattern recognition machine that works. We can't feel it working, but it definitely is. And so if we keep a trading journal that has a snapshot of, let's just say, to keep it simple for everyone today, let's say that we decide we are going to trade head and shoulders patterns. That's what we're going to do. And that's all we're going to focus on. We're going to trade inverse and traditional head and shoulders patterns. So we're going to trade up and down. Those are just, head and shoulders pattern is just a change of trend from an uptrend to a downtrend or a downtrend to an uptrend. And we've had a lot of those lately. We had it on gold, we've had it on euro, dollar, cable, we've had it across the board. And so we decided to do that. So what we want to do is we want to be grabbing screen grabs of every setup we see. Then we want to, before we get in the trade, because once we're in the trade, we immediately become subjective. We're not very objective then. We're emotionally and financially invested. And then we want an outcome, whether it's a winner or loser. It's very important, because if it's a winner, your brain is going to start to identify winning strong setups. A lot instinctively, you're going to start to go, this feels like a good trade setup, because your instincts in the beginning are garbage, like they're untrained. So when you go to the military, you do boot camp, they break you down because your instincts, your untrained instincts, are not necessarily that good, and they're not very helpful when we're in this. So you have to reshape and rebuild and retrain your instincts, and this is a great way to do it. So you need to start to provide your brain with data. It needs to know what bad trade setups are, good trade setups are, and so this is what we do. We capture those, and you might not feel like it, but you will very quickly you will very quickly feel a difference. So I didn't put it in here because I can't brain dump so much that I really want to, and Simon can attest to this. Every slide deck has always got 12 slides, and every slide deck is different. But for swing trading or for higher time frame trading, it's reasonable that if we have, for example, a trend-based strategy, it's reasonable we should on average be able to find 2 to 5 trades per week to give you answers to some of the questions you might not be asking yet. 2 to 5 trades per week, and if traded properly, according to a strategy, managed correctly, should be able to yield a net of, say, 1%. That's reasonable. It's not unrealistic to be able to do that. And for day traders, it could be something similar. It might be 2 to 5 trades per day. So if you're doing something like 50 trades per day, it's probably not great. It's too much. 2 to 5 trades per day is more than enough. Obviously, it depends on your lifestyle, where you are, what your strategy is. And that's across all markets. So the reason I say that is because you have to get a certain number of trades under your belt. And so if you want an honest kind of, what I would do is do something like the 50 trade challenge, where you do 50 trades, 50 head and shoulder pattern trades, until you know, and you'll know very quickly after about 10, your first 10 trades will be mixed results. Your next 10 will be a bit better. By the time you're getting to about 30 head and shoulders patterns, you should actually start to achieve consistency. And because you know what you're supposed to be doing, your behavior is more consistent. You have a plan. You're not all over the place. If you go to the gym and you have no idea what it is you're working out today, you're all over the place and your workouts are inconclusive. But I've got an app and it tells me for the day, you just need to go to the gym and do this. And I'm so much more productive and I'm motivated. You need the same thing in your trading. So you need a plan, like a 50 trade head and shoulders pattern. Sort of, that's my trading plan. I'm going to go do that. And when I've done that, then I'll start looking at other stuff. So don't worry about those, just to repeat that. So obviously what you want to do is include a pre-trade snapshot, post-trade, and I call it like a 30 candles later grab. So this is important because another layer of what you go through is trust in yourself, because this is a solo activity. So you have to learn how to trust your own judgment and have faith in yourself. And one component is, okay, it was a losing trade or winning trade. But that's a separate thing from where you write about the direction in which the market was going to go. So you're like, well, the market looks bullish to me. So you enter a buy trade, you get stopped out, and then you look back 10 minutes later or 2 hours later, and the market has gone exactly where you thought it would go. And that's a really important thing to get. You've got to capture that, because that tells you, hold on, you did read the market direction correctly, which is a win. It's a compensation prize for the fact that you had a losing trade. But then it starts to change the way you think about the markets, because you start to go, actually, no, I'm starting to be able to read which way the market's going to go. And then you start to understand that trading becomes about probabilities. So it's and then you progress to a point where your losing trades are not because you misread the direction, that you didn't misread the price action. It's just that either you got stopped out by an oversized candle, so an engulfing candle, which can happen, or it was just noise, and then you were right. And sometimes you get a false start. You get triggered in, stopped out, then you get another setup, and then the market goes. So you start to realize, you start to not take every last person. You start to realize, okay, now I'm pretty confident that was a good trade setup. So you can't you can't get to that point unless you go through this process. So in order to build up your confidence and trust and faith in yourself, you need a record to show you the things you're doing right. So you can go, oh, okay, actually I am progressing, I am doing that. And then you stick with it, because otherwise you bail if it's a bit too tough. I think that this is a learnable skill. I think it's like learning a foreign language or learning a professional sport. It's a really good way is to compare winning and losing and practice and effort and rest and recuperation with a sport. It's a really good way to do it, because it is probabilities and practice and effort based. And it is a technique, there's skill involved, but everyone can do it. However, it doesn't mean everyone's going to enjoy it. There are people who've kind of figured out how to do it, and then they're like, okay, I just wanted to know how to, I just wanted to see if I could do it. And then it's just not their jam. They don't actually like the day-to-day process. Whereas for me, I love the ongoing challenge. So the next one is, I'm just checking, are there any questions? As everyone's very quiet. Am I speaking too fast? Am I speaking too much? Let me know. I came back. I was in New York last week. I have to tell you, it was absolutely amazing. I'm not sure if anyone is listening in from the US, but it was just such a fantastic. Loved it. Man, I love New York. Okay, so number 2, reviewing all trades. This feels like a painful exercise. So we need to go through our recent trades. Now you could do this. I could do this at the end of the day. I could do it at the end of the week. Eventually you find a bit of a rhythm. You find like you go through a gap, you go, okay, there's definitely nothing else going on today. The markets they've done their move, or you can feel the markets are in a bit of a coma. So you're like, you know what, all right, I'll quickly go through the trades I've gone through. And you're doing that because there's a point you get to where you really get value from reviewing your trades. You start to want to know why you had a losing trade. Like you start to, because first of all, newer traders have to get to a point where they at least believe it's consistent and they can actually, this is going to work. So you need to get to a point after about 20, 30 trades that you're like, okay, so I can see how this is going to work. I can feel it. But eventually you get to a point where you definitely know you can do this because you've just been doing it for so long, and you want to know why you're not making money. So like what happened, or not why you had a losing trade when you were, like how did that happen? And you want to be able to eliminate it. You go, okay, it was a news announcement that wasn't on the calendar somewhere, or it was just a spike. You want to be able to eliminate that stuff, and you find that your peace of mind, because you trade at your best when your peace of mind, like when you're zen, and when you're not distracted. So you start to become very territorial about your peace of mind. Like, I need to know what went wrong. Imagine you're an outstanding chef, and you're very, very good. And then something that you've done blindfolded a million times suddenly didn't go right. You certainly want to know why. Like, was it me? Was it the cooker? Was it the tools? But you really want to get to the bottom of it. And so you get that way. You get that way with this. And it's a crucial part of the internalization of the overall trading process. What that means is, in order for you to progress, to really progress, you have to digest the trades that you take completely from start to finish, not just the live fire. You're in the battle and heats of battle, you get out, you're like, but you can reduce the PTSD as well. You go back, run through in your head, go, okay, actually, then you might come out going, oh, actually that went exactly as I expected it. So it really helps you when you know what your plan is before, like, okay, I'm going to trade head and shoulders. When I see the setup, I'm going to place the order, I'm going to put the stop loss there, I'm going to take profits here. And then in the heat of the moment, you do that, and then you review it at the end. Those are like 3 core things: plan it, go through it, review it. Just doing that, if you just did that 10 times, which is not a lot, you'd be amazed at the substantial difference in your trading, because your next 10 trades will just not be the same. You might find within 3 or 4 trades, you immediately did the same thing. And after a while, the things that you're doing that you shouldn't be doing that are really not helping you start to annoy you. It starts to bug you that you are getting in your own way. You're like, why do I keep doing that? And so you start to correct a lot faster, a lot sooner. It's a really, really good process. So most people don't do this. Now, I know many people know about keeping a journal, but they don't know about the visual aspect of it. That's crucial. And most people are told to review their trades, but they don't really know what they're looking for when they review them. So what you're really trying to do is make sure, does your strategy work? Did it work? Did you execute it the way you were supposed to? Have you introduced, without realizing it, have you introduced a bad habit? Have you started widening your stops or increasing the risk? Have you started is your trailing stop thing working? Those kinds of things. And then finally, the last one, which was back testing. So back testing is usually something someone says, just back test. And it does annoy me when they're these kind of, you should have this and you should have this. And there's never really a great guide as to how to do it and why you do it. But back testing is actually a lot more fun when you realize why you're doing it. So the biggest issue with all three of these things is that a newer trader doesn't want to do this because the market's live and they're convinced that right now there's a trade happening that they should be taking. It's only once you get a bit more experience that you start to realize that, first of all, your trade setups aren't always happening all the time, and that usually you can get a sense of how much time you have before your next trade setup occurs, because it depends on your time frame. There might be every 4 hours, and you realize, okay, there wasn't a setup this morning, so there's nothing. There isn't going to be anything until the US session, which is 4 hours from now. So once you kind of get a handle on what is your strategy, where does it occur, then you kind of have your awareness of how to manage your time better. So backtesting for me is meant to be quite fun. It's in this case, it would be looking for head and shoulders patterns that have occurred on the NASDAQ on the 15-minute time frame this week. Because it's not, if I'm doing it on a 15-minute time frame, it might only have one in the whole week, maybe there were two, but it's not going to have 50. That's just too many. The market doesn't change trend that many times. So, and that would be something that would potentially change on a 4 hour as well. So it's kind of nice to do it, because also sometimes you realize, oh, I wasn't even looking at QE dollar, and that there was a setup there. I missed it. And it was a good one. Maybe it went 2-to-1. So it's very good. It's, in a way, it's good for your confidence as well, because every time you do backtesting, you are also doing a pattern recognition exercise. Your brain is looking for that pattern, and then you learn to see it. So believe it or not, if you backtest regularly, your ability to spot a setup occurring in real time that's unfolding in real time improves, and your confidence improves. You're like, I know exactly what's going to happen. So again, all three of these things are kind of connected. They sort of do that, and there's a massive benefit to this. Doing all of these consistently would bring your behavior very much in line, because you're not going to jump between strategies too much. You're going to focus on the process, and focusing on the process gets you become less of an influencing factor in the whole thing. It's the same as if you created a diet plan. So principally, for example, like banting means that wheat and grain is a human invention, and bread and all these different things that we've derived from it didn't exist. Before that, we used to eat meats and vegetables, just generally speaking. So the carbs we got would have been from either fruit or from veggies. And that was it. There was majority of our stuff was like very low in terms of sugars and very low in terms of like that. You had meats and carbs. So the point is that generally speaking, a diet would consist of quite a amount of protein, a nice bit of fat, protein for muscle and fat for survival, and then carbs, the veggies and stuff for nutrients. And so you could create this diet that would be amazing for the average person. You could say, and a workout routine, so they would be guaranteed to get big if they just followed it. And you could hand it to them. You could throw them out on the street. And a year later, you could ask everybody who picked one up and say, okay, well, have you applied it? And very few people would have made the change. So having a strategy in itself is not the key. It's having a strategy and then applying the strategy consistently. In order to do that, you have to take the average person and you have to get all the things in their life that have to be in order to do it. Okay. But yeah, again, if you took, I believe if I took 10 people, and this was the I don't know how many of you are, I was going to say, were born in the last century, but you might remember a movie called Trading Places with Eddie Murphy and Dan Aykroyd. And it was inspired by the turtle trading program. And I was actually, I noticed that there's a turtle trading aspect built into the platform. And I think you should talk about that as well. So the turtle trading was a program where they took, there was a bet between two seasoned traders that one guy said, I believe you can teach anyone to trade. And he did. The program was a big success. I think it was in the 80s. And that inspired Trading Places with Eddie Murphy. So it can be done. It needs to be simple, and you have to operate in a way, in a room or a virtual environment where your behavior has to be consistent. So very quickly, and then we'll go to the charts and we'll have a look at some of the markets. One of the things I want to have a look at is Tesla. I want to go and take you through a few different charts. So also, the journeys that we go through are not consistent. Not everything happens at the same time. For example, I know people who are incredibly professional at work in their career and incredibly immature in their personal relationships, because there's different things happening there in different journeys, and we grow at different rates, and we have issues in some areas and not in others. So it's the same in trading. So your technical skills is a relatively linear process. Learning how to, put a Bollinger Band on your chart is a relatively, once you've got that, you've got it. So it's a building block. It's like Legos. You just build up and it's cumulative. Your confidence, however, can go through patches. You become overconfident in the beginning, and then you have swings the other way. But over time, you don't tend to become overconfident as much. Sorry, I feel like I'm going to sneeze. So if I do something mute, you'll know why. You don't become overconfident. You start to temper your emotions because you're just getting excited because you're like a kid in a candy store. But at the same time, you also learn to get your lows aren't as bad because you learn to be able to prop yourself up. And sometimes you just have a day where your trades actually weren't that bad, but you feel like they were. It's very dramatic. It's like when you wake up at 3 in the morning and you think your life has just gone to hell. And so that kind of thing can happen when we're suffering from depression or we're stressing. Your psychology is another journey entirely. Your trade management skills really only tend to come in later, because once you settle on a strategy and once you realize, oh wow, if I just stick with this and then improve this, I'm going to get better. Then you start looking at other things then. So now you've got a system that more or less makes money. Now you go, okay, well, and then you get your risk management as well. They start to come under control towards the end because you stop messing around. You just stop messing around. So that is we'll come back to this, but that's kind of how it sort of tends to go. So just want to drop this down. I quite like this. There's a nice little auto layout feature here, which brings a few things in. So one of the things I wanted to talk about, are there any questions so far, by the way? Is that useful? Did you find it useful? Is that interesting? I'm only looking at questions, by the way. So if you guys are chatting, I'm not seeing any of the chats. I'm only looking at the questions.
Adam, I think that trading psychology, it is one of the key tools that everybody overlooks when they jump into trading, isn't it? And it's almost too easy to have a chart and get your broker platform and off you go. But it's the one thing that's always come back. I mean, I've done lots of these, as you know, these webinars with not only yourself, but lots of all good traders around the world, and I see these questions come in time and time again. And it's the people that generally have done sort of a year or 18 months into trading. The unlucky ones get it right for the first few months and think that it's all easy, and then they start to hit the buffers, and then they start to have a losing run, and then they start to see the drawdowns, and that's when understanding the trading psychology kicks in, and so it can't be underestimated. And I mean, all these things about keeping the journal, it's good. I know you know Steve Ward as well, and Simon Cottrell that did the Trader's Mind Journal. They get great.
That's a good one.
feedback.
That's a good one. There's not for people out there. There's not a vast number of trading journals you can buy. So I use Excel. I build my own one, but I do that because I can type stuff in and then it pre-populates a whole lot of things for me. But there's one or two products out there of which Simon has mentioned a couple. They are very good, and you're right. But there's something else I wanted to add in. Every person. So let's talk about self-confidence for the as an example. you can be in a really great place. And if you're around someone who's very toxic, or somebody who and most of us can relate to this, and somebody who immediately starts to try to erode your self-confidence, it can eventually get to you. So it's not just our own mind that can erode our self-confidence, but other people can do it as well. So the reason I mention this is because, believe it or not, as a trader, what you're always trying to do, and this is what the purpose of risk management is. On the surface of it, it appears that risk management is about protecting your hard-earned capital, okay? But actually, that's a secondary benefit. What risk management is meant to do is really to give you a system that protects future you. So in other words, I'm going to be in a much safer place to trade if I'm down 1% than if I'm down 20%. That, like, psychologically, that's much easier for me to recover from. It's the difference between getting punched in the belly or punched in the arm and getting kicked in the nuts if you're a guy. So it's like there's a difference. And so what you're trying to do when you risk manage is you're saying, look, I understand that for my first 20 trades, I'm going to be terrible. So there's no point in risking a lot of money, because actually I'm trying to master the process and I'm trying to master the patterns. Once you do that, then you can start to dial up the money, because now you know head and shoulder pattern works. It works. I know I can do it, and I blah, blah, blah. And so you can just dial that up. So your focus should really be on your first 20 trades, first 50 trades, mastering the process. So the reason I bring this up is then you can dial the money up maximum 1%, for example. But you can start with 0.1%, because your focus should not be on the money. Your focus is on the process. The money is a byproduct. And I find that when people do that, they don't require as much psychological repair, because they haven't done as much psychological damage. So where I'm going with this is if what you're trying to do is always to protect your future self, to think about it like that. I'm trying to make sure that future Adam doesn't have to get himself out of a hole, and future Adam doesn't have to have a bad day. You start to think differently about how much you're willing to risk today. And you find that balance between how much you trust the strategies and how much you trust yourself to execute the strategy properly, and what the outcome is likely to be. So that's why I say to you, get that 50 trades under your belt, because that needs to give you the data so you can go, I know I can do this. And then you'll find that you don't mess around, and I will spare you the amount of psychological suffering you'll go through. But because most people are changing strategies, changing the risk, doing stuff, switching between trading in a well-behaved fashion and taking a punt, because sometimes you do the two. It's like between a gamble and between behaving properly. You introduce yourself, you expose yourself to a lot of bad, hurtful, painful, financial, emotional, psychological experiences, which you now need psychotherapy for. So you then have to help yourself out of that. So you don't have to go through all those terrible experiences. So that's just an interesting, aspect. I'm reading the questions here. Okay, so my issue is I've developed a fear of pulling the trigger and entering a trade, eventually watching it go exactly as my technical analysis indicates it. So you're gun shy. That's actually more common. So I would want to recommend a few books for people, but obviously Mark Douglas's Trading in the Zone is a key book that everybody must read. His second book, Disciplined Trader, is also a key one. So you might find the Disciplined Trader has the answer to that, but you're gun shy, and I get that. So the solution to that is probably focusing on to take a bit of patience. So you need a bit of patience. You need to allow yourself to do 5 trades on a demo account so that you're confirming that you can go through the process, but do the trades, not just set them up, do them properly. Then move to 0.1% for 5 trades. Once you get through that, the gun shyness should start to recede, and then you start to dial up the money. Because you're wiping the slate clean. You're starting with a demo account, you're going through the process, you're rebuilding the confidence, and it should help. That's just an off the top of my head thing, but it should help. Alaska, fantastic. Okay, great. Novice, fantastic. Okay, guys, so let's have a quick look here. The dollar index. All right, so we've had a very strong dollar. So for all the talk that I've heard about the different markets, what nobody really seems to emphasize enough is that the dollar, ladies and gentlemen, at the end of World War II, 1945, the US possessed 95% of the world's wealth. It is the most widely traded currency in the world. So we start with what is the dollar doing. Nothing else matters if you don't start really with what the dollar is doing. So the dollar has been incredibly strong. This is unusual. If you look historically, it had a big move in 2014, 2015, and this is an exceptionally big move. It was very overextended. You could see the exhaustion. It came back. It's had a good correction. I think there's still a good chance it could come back down to touch these old highs or even potentially back down a little bit further. Okay, but this correction was overdue at least. We've got a couple of different levels. And so please understand that this isn't just the euro dollar. People are, institutional people are always like, well, that's just the euro dollar. It's not. It's the dollar against gold. It's the dollar against crude oil. It's the dollar against equity. So it isn't just that, but they're all connected. And by the way, cryptos are now plugged into the same pool of money. So be aware, if people, this is the only concern I have, is that people who follow cryptos sit in an echo chamber and they have to try to explain everything that happens to cryptos without including this. And actually you have to look at all the markets so you can see, okay, the dollar isn't always doing a big move. This is very unusual. In the time that I've been around, I've not seen it move this big. But for an entire period here from 2015 all the way through to the early part of this year, it's been largely sideways. Okay, so then we'll go through, let me just have a look at my other stuff here. Sorry. I'm trying to click on my list, and of course what it's done is, let's just go back to this. There you go. There we go. All right, so there you go. Let me just bring I have a watch list. So let me just bring this, and then, no, it's not going to help me here. Okay, so so that's the dollar index, and let's bring that up. There we go. Sorry, I'm talking to myself. So let's go through and have a look at a few of these ones. So let's start with NASDAQ, and we'll bring up SPY, DAX, and the Dow. Let's go through a couple of these ones here.
That's great. This is all in the MetaStock platform.
Yes, yeah, and there's a really nice auto arrange feature if you want that one. If you are, if you want that data, if you want that look and feel. So what I have done is, for my one, I have a preferred kind of layout so that most of you can see it. I'm using a 10, 20, and 50 period moving average. I'm using those just to give me a general sense of market flow. So let's have a look in here. You'll notice that at this point, the market's not really doing much in this area, and prices on top of the moving averages. And the moving averages just look like those cables behind the back of your desk. This is not good trading conditions. That's not really the point, is that when you have a great trend, when you have something like this, you'll have them all spread out. Price will be above the moving averages. They'll be fanning out. And the moving averages become a location where you can join a trend. They become a very good location where you can join a trend. You can see the DAX here has actually provided some really nice stuff. It's shifted into an uptrend. That was a very, very nice little setup in isolation, and it's going through a bit of a consolidation here at the moment. So that's when you're trading. This is just a nightmare. This is basically saying, just stay away from me. There's nothing to trade here at all. Okay, so this just not a lot going on here. There's just nothing there. And then I've got the MACD. So the MACD is here, but more for measuring momentum. So I'm going to say it very, very quickly, but if the price is trending up and the MACD is trending up, that's great. The momentum is nice and bullish. If price is trending up and the MACD is trending down, you have a bit of a problem. So here's a good example. You can see we've got price kind of principally just heading a little bit higher here. And you can see the MACD has started to trend a bit lower. So usually that means that we're probably bearish. It's becoming exhausted. It's probably going to break lower, usually. On that note, we'll talk about Apple, because Apple might be setting up, potentially, it's too soon to tell, but it might be setting up for a bit of a bullish breakout. So let's go and get, also there's another thing that is underappreciated is the higher time frame. So we're going to have a look at the weekly. The weekly is just a very, very nice kind of time frame to get a sense of what's going on. So if we have a look at this price action here, you can see we've got a slightly higher low. Price has actually produced a high low, high high. Forget about the moving averages for now. The chart is trying to break in, it's trying to move higher. It is technically in an uptrend. It's got some resistance up here and a little bit of resistance where we are. It's trying to work its way up a little bit higher. And so we're currently looking okay. If we have a look at it from a monthly perspective, Can everyone see these charts? Do I need to have a look at that? Okay, so really just trying to, let's just go and do this quickly. Why does that feel like it's off? Oh, that's right, it's my 50. So we've got a very, very nice kind of bullish move here. We're still within a downtrend. We need to see that change. So when we switch it over to the weekly, we get, I want you to see how this angle has changed. The angle here has actually started to change. It's starting to curve, it's starting to slow down. And you can see the MACD is starting to trend higher. So let me just draw these in for you. Here's a low, there's a lower low, there's a lower low, but you can see that it has started to kind of curve around like that. And while it's doing that with this low and this low, this one is higher. So this has actually started to trend higher. That is not saying, it is not saying take a buy position. It's not saying get a position on the other side. What it is saying is the downtrend is becoming exhausted. This is bullish. That's a higher low, higher high. So you've got a low, high, higher low, higher high. That has gone bullish. So what I then need price to do is to shift direction. So that's an inverse head and shoulders pattern, but it's a change in trend. This is a downtrend, then it becomes an uptrend. So you can see here we've got a little bit of a high, low, high, high. Really want to break that. That's going to be a great sign that we're going to continue upwards. And things like this do take a couple of months to turn around. Okay, they do take time to turn around. Yeah, you can see we broke that low. And once we break this, I think it's very, very fair to say once we break that high, we're back in a bull market. Okay, I think it's not crazy to say that because we will have ticked a whole lot of boxes by the time we get to that. How are we doing for time, guys? We've got 10 minutes. We're okay. Is everybody happy?
Yeah, we're fine, Adam. This is great.
Okay, so there's a sign of what we call bullish divergence. That's a very reliable, by the way. But everything I have on here is pretty much all you need. You don't need to go overboard. The most important, in case you're curious, the core technical information that you need. It's less is more. I was actually watching a documentary on Bruce Lee on Disney called Be Water. You can find it elsewhere. And I think if he had wanted to, he could have been a trader because he understood that in the end, it's always about taking things away, like make it simpler, adapt more to what the market is doing. But also, basically, the two core things that you can trade with on a chart, if you take everything else away and still be profitable, is support and resistance, so horizontal levels, okay, price action levels, and candlesticks. Like that's your bare minimum. And so as you become more and more experienced, you don't need as much to inform your decisions. So in the beginning, you need like training wheels. So the moving averages are training wheels. The MACD is a bit of a training wheel. I can start to see divergence in the changes in price now. So here's an example. So price will start very aggressive, small pullback, very aggressive, small pullback, then not as big a move, deeper pullback, not as big a move, deeper pullback, and it's losing momentum. And it's the same on the way down. It sort of starts to do, it just starts to slow down. And then if you look at the indicator, you can see the difference. So over time, you start to be able to see it in the price action. You don't need the indicator as much, but I'm just demonstrating this to you. And yeah, so we're starting to see that shift. Let's go through and have a look at some of the others. We've got, this one's predominantly sideways at the moment. That's on the daily. Let's see what the weekly looks like. Here's a tip. If you can't, not quite sure what's going on, go up the time frame until you can. Okay, so the higher time frame dictates largely where the markets are going to go. It's not the lower time frames, it's the higher time frames. So here we can see the market essentially consolidating at the moment. Let's look at the DAX. The DAX is also looking pretty good. Let's go look at that one. Just get rid of that. Let's look at the DAX, for example. You can see we've come up, we've broken that high, and that high we're looking pretty good. We're above the 50-period moving average. So you'll see generally when we're above the red 50-period moving average, we're generally bullish. When we're underneath it, we're generally bearish. We've sort of just got above it. So we're not doing too badly on a few of these things. If we see it from a monthly perspective, off support, we're heading up high. We look good. Most of that just doesn't look terrible. So then what I want to do is, what else we got here? We got the dollar index. We can chuck that. We can get rid of that. No questions to do that. Let's have a look at a few of the others. So let's bring in euro dollar. Let's bring in sterling, dollar yen. We'll do stocks after that. We'll do stocks after that because I want to talk about those very quickly. So let's have a look here. And I wanted you to see the similarities between this behavior and what's happening on sterling, for example. So if we go have a look here and we switch this up and go to the weekly, there's a lot of similarity, and we'll do, where's this one as well? I was playing with this one. I do tend to jump between I like candlesticks for the most part. Candlesticks are easier for beginners to learn to read the price action. You don't need to overcomplicate things, guys. If your process is very complicated and very convoluted, it's probably not right. My experience has been that the simple stuff executed well is the best way for the man on the street or woman on the street to trade and engage in the financial markets, to not overthink it. It's just that many people feel that that's counterintuitive, but sometimes it is exactly what it seems. Sometimes I like to switch it up for bars just because it is fun, just to change up the visual stuff on it. But here we go. So you can see there's a nice little shift to the upside. Look at the similarity here between sterling and euro. They're very, very similar because the dollar has been the biggest driver for these. And if you look at them now, let's go back to that daily. Let's have a look at what's going on. We're in an uptrend, okay? So we're in an uptrend. Let's just get rid of that trend line. I didn't need that one. Yeah. Okay. We're trending higher, but it's starting to slow down. Again, big move, small move. Then there's a little bit of a flat level here. So it had a bit of a flat level breakout. And basically, it's come back, retested it as support, and it's running into resistance. So it's running into quite a bit of resistance issues here. But actually, when you get some perspective on it, you go look at the monthly, suddenly you get a sense of what's actually going on. There is a level where we are, but if we can break through that level, our next level sits up here. So we can go through from approximately where we are, 106, up to about 109. So that's what it's battling with at the moment. And sterling is on the same journey. So despite the fact that I live in the UK and we're worried about what's going on with the UK economy, the charts itself has been behaving almost identically to the euro. So whatever, there's other parts of the economy, the bonds or other financial instruments, which have different stories. The bond market and gilts, that's a different thing. But the currency markets are behaving roughly the same. The dollar was the guy who was kind of like leading the way. And dollar yen as well. This is where it was interesting, because in addition to that, the dollar yen has been going through quite a bit of its own thing, Bank of Japan. So that's actually starting to look more and more bullish. Now, it is possible that dollar yen will do its own thing. Bank of Japan is capable of, they have policies, their biggest import partner is the US, they have policies they can change, they will focus. So they want to do its own thing. And so overall, that is looking a little bit bullish. So if we compare that, so if I just chuck some of these out, so let's get the NASDAQ out, let's get this out, and let's bring in Kiwi yen, pound yen, what are the others? Euro yen, let's bring these in. You will see today some good money to be made, all looking really nice and bullish. Nice little flat level breakout on Kiwi yen. Euro yen also looking really nice there. And you can see also sterling as well was looking pretty good. So Kiwi is quite strong at the moment, and so I would just go straight down to show you this, go straight down. You can even see it on the 1 hour, looking good. And I wouldn't take a trade now because we're going into the overnight session, which gets a bit quiet, but in the morning, I would love to come back and see if prices pull back into an area here, possibly pull back down overnight, possibly find a nice little support, set up a bullish candle, or even a 4 hour, and then look to trade it to the upside. So you can add little custom timelines there. So if you want a 2 hour chart, for example, you could do that. And that's powerful. People think it has to be one or the other, but any time frame you can get that trade setup is fine. Then, lastly, because we've got 2 minutes left, let's have a look at a couple of stocks quickly. So right now, it looks as though the dollar is looking a little bit weaker. I have my suggestion for those of you who want to improve your technical skills, or if you're still not sure if that's the way, like if that can be done, find my YouTube channel, which is just look London City Trader. Just look at that on YouTube and watch the last 3 or 4 weeks worth of, I do a weekly market analysis, and you can see how consistent the success rate is and accuracy it is in reading the markets. So what I want to do here quickly, bear with me, guys. I know we're limited on time, and I want to make sure I cover a couple of these. So first of all, gold and silver. And then let's bring in a couple of these ones. Tesla, Costco, Microsoft, Apple. I left out Amazon or a few others. Where am I? Silver's nice and bullish. Okay, silver looks pretty good. Run into a little bit of resistance temporarily on the daily. So my daily's the default. But look at how the MACD is trending higher. And you don't need this. You don't have to have the MACD on here. You can see it's, trending higher, but it looks pretty good. The monthly is fine. The weekly, let's have a look at this. Nice little uptrend on the weekly. Very nice sort of triple bottom. Yeah, it looks good. It looks like we've passed the major level of support and resistance where we are here. And the next one is kind of up here. It's got some room to move. So it should be able to continue up. And to me, right now, I thought silver was looking a little bit better than gold. Usually gold is the leader, but gold is struggling, as you can see here today. It is struggling a little bit. So it almost looks as though it's struggling. It should, the key thing, ladies and gentlemen, is it must stay above these highs. It can come down as far. This trend is still intact, even if it comes back down to here. If it produces a nice little green candle and then runs back up, that's a double bottom. It's fine. It's a double bottom in an uptrend like here. Same thing. It can come down again and go up, come down again. It can. Obviously, $1,800 is a toughie. So this is fine. However, should it break through that, then the story potentially starts to change. So this doesn't mean that the game is over yet at all. It could come down, provide a nice buying opportunity, and carry on back up. And so that could be the story there. Now, let's get rid of those. Let's have a quick look at a couple of these. So let's have a look at Tesla. I own Tesla stock, and I'm this close to selling because I don't understand why the CEO is not paying attention to the companies that he's doing and instead spends his whole day tweeting conspiracy theories. And when he starts forwarding QAnon stuff, I'm close to just bailing. So it's just highly unprofessional, and I don't understand it. I'm sorry, I don't get it, but that's not where I would rather put my stock. So I'm very close to selling my shares. And interesting enough, the biggest seller of Tesla stock is Elon Musk, and that's also not a good sign. So this is coming back down to test these levels. It looks okay, but if this starts hitting lower while this is still testing this level, this is going to break. And the next level for this is somewhere in the region. It's quite a bit lower. It's somewhere down towards, let's just quickly look, and then we'll just give me 1 more minute and I'll wrap everything up. But yeah, if it heads down and breaks through that, it is going to be, we're going to start to come back down towards towards these levels. Let's go to the weekly. And I can't, it's not working for me to do that. I keep asking myself if Warren Buffett would get on Twitter and start talking to everyone. I don't get that. But there we go. There's a level of resistance that could be support down at 27.79, and if it breaks that, then it's back down to 20. And it's currently close to having given 60+% off its highs. This company's in trouble. Like tech stocks in general are in trouble, but this company needs somebody to manage it, and I don't know where the guy is. So sorry, minor rant, but like it's just unacceptable. Anyway, maybe it's just burning out. Who knows? So then we've got Kiwi yen we don't need, and then we'll just have a look. So here we've got Costco, for example. They do very well during recessions, if there's a recession, because people cut budgets and they go and they buy stuff from Costco. So they do incredibly well. And overall, you can see how stable it is. You can see how it pulls back, bullish candle pushes up, bullish candle push up, bullish candle pushes up, struggling to get past that 70 mark. But if it breaks through that, it's going to go straight to 80. Overall, looks pretty good. And then we have Apple as an example. And Apple also looking pretty good. Amazon has taken a hit, and which is interesting to me because Amazon have so many more businesses. They should be doing really, really well. But anyway, and I have shares in all of them. I've got Hershey's, phenomenal, Estee Lauder, I mean, you name it. I've got NVIDIA, Tesla. I'm shareholders in all those. And anyway, and those are that's the investment stuff. So my day-to-day stuff is trading to generate cash, which is a monthly income earning thing, and then pay the bills, take a bit out, put it into buying stocks for your for your pension. But yeah, you can see where the bottom is. You can see where this is. Oh, and so I wanted to talk to you about this. The last thing I'm going to say, and then we can wrap this up, is that this is forming a potential breakout to the downside, because they're still concerned about there being a possible, like with a recession or things are going to get better or worse. Prices come down and is forming this pattern, which could be a possible descending triangle. So there's the bottom of it, and there's your potential pattern. And so should price come down and up and down, for example, and continue to produce lower highs, and this you can see is currently trending bearish. If that keeps happening, we're going to get a high probability we're going to break out that'll come down possibly quite a bit further if that's going to happen. However, should price go from anywhere in here and break up above these highs, start to work its way up to there, then the pattern is broken and is unlikely to unfold. That is it from me, because I feel like I have jibber-jabbered a lot.
Thanks, Adam.
Yeah,
Can I ask the question that nobody else has been brave enough to ask? What is the big brown jug of goo that you're drinking from time to time? It can't be coffee.
It's tea.
It can't be coffee because it'd be cold now.
No, I've started this. It sounds ridiculous, but I'm trying to fast from 6:30 through till 11:30. The earlier I start my fast, the earlier I can eat, which is really what my goal is. And so I can drink tea, and peppermint tea I have discovered is very drinkable. Yeah, it's quite tasty. So I need a big amount of it because I'm quite thirsty when I talk. But yeah, that's it.
Wow, fantastic. Well, thank you so much for that. Great. Any other questions before we wrap up? Hand it back to Bobby. And yeah, Sterling saying personal opinion. Elon Musk is classical signs of PTSD. Twitter and it wrecked him. Yeah, we're all watching.
He might just be overworked. He could just be like, he's just overworked. He needs to take a break. I mean, I'm a big fan of Tesla in principle, the idea of electric cars, and a big fan of Elon originally. The guy that I see in the last 6 months he needs a holiday, man. The guy's got to take a break or something.
I think the whole world needs a holiday. It's been quite a year, hasn't it? It really has been.
Yeah.
Awesome. Thank you so much, Michael. Nice to see you. Thanks for attending. Yeah, it's been great, and thank you to MetaStock for having us. Obviously,
I have a question from YouTube.
Yeah, bring it.
Yeah, so Abdul wants to know which moving averages you were using on your charts.
So I added individual ones as opposed to using a ribbon, and I used 10, 20, and 50. So I don't need the 200 because you can, but it's not required for the speed at which I'm moving in the markets. And they were simple. You can use exponential, you can use simple. It's dealer's choice. They would not change the head and shoulder patterns. They won't change those, as an example, or the ascending or descending triangles, because they're a secondary kind of thing. Yeah, hopefully that answers that. Absolute pleasure, guys. Thank you. If you have questions, just email me, by the way. It's not, you don't have to if I can assist in any way, I will. Obviously, I need to, who do I hand back control to at this time? Because...
Yeah, I can go ahead and just take over if you're finished.
Yeah, I think unless there's anything anyone wanted me to have a look at, but I don't want to impact your next speaker, and we've already run over by nearly 10 minutes, so...
Oh, that's okay. You were actually the last speaker today, so.
Well, okay.
You saved the best till last.
Thank you. Yep. I really appreciate that.
Hey, thank you for the demonstration. You did a great job, and it was really interesting to watch everything you had to show. So, hopefully we can have you on again in the future.
Yeah, I'd love it. I'd love it. Yeah, we should. The options are wild. If you wanted to do a day trading program or anything like that, anything, the options, Simon knows. Simon's my agent.
We'll do something. Yeah, we'll do something around the clock trader again. I'm busy making all the plans for next year. So Bobby, let's have a chat offline about that before Christmas, and we'll get some stuff worked out. I can see a few of the names here from around the clock trader, so it's nice to see you, and nice to see so many new places and faces as well. So great. Okay, many thanks and good night.
Yeah, thanks, guys. Have a good night.
I enjoyed it. Thank you very much. Oh, I was going to talk to you about that, ask you about that turtle trading aspect. I think it's a feature on the platform. I thought people should know about it. It was pretty cool. I think it highlights turtle trading setups or something. And yeah, you could mention that.
Yeah. Oh, that's fantastic.
Wonderful.
Yeah, Richard Dennis was one of the pioneers of the turtle. Yeah, and it's worth looking up. There's been several books written on it. A lot of them are not official. People are being ghosted, but it's a fascinating part. And like you said, it inspired the Trading Places movie, which goes a long way. Lots of other good movies as well that teach about trading. What other movies do you like, Adam? Anything other?
I think The Big Short was great because I think it's just a phenomenal movie. It's so good you can watch it several times, not because of the story, but the way it's executed and stuff. I think. There's so much more to this industry. There's that people think that trading is the whole industry in itself. It's not. I mean, there's people who create the exchange and people who write the software and people who build who develop the technology, and traders are just a small component of that market. And when people are physically buying and selling gold and pork bellies and orange juice, there's a physical market. People are buying and selling Apple phones and Apple products. It isn't always about traders moving Apple stock up and down. So we need to understand that we're a small cog within a bigger system, and retail traders, which is still a growing market, is actually very much still, I believe, a new unfolding market for us. We can carve our own way.
Yeah, but I mean, this is where the Reddit forums and things, though, there's things balancing up, isn't there now? I mean, you saw that with the GameStop debacle and lockdown, where retail traders are able to democratize themselves now, and they have a larger voice now than they had ever before. So absolutely, it honestly is so much better than it ever has been. But the people are still very similar. The way the mistakes they make and everything are still the same mistakes, but the environment conditions are so good. So. Still, they said Too Big to Fail was a good movie. I think so as well.
I feel like I'm leaving out a very obvious one. That was great. But Limitless, I loved some of the fact that he did some trading in Limitless. Was the very first thing he went to. Because a lot of the movies out there show the big cogs. They show institutional things, not so much from a retail trader's perspective. I'd love to see a film where you've got some retail trader stuff going on in it.
Margin Call for me was very good. That 24 hours
great.
Lehman Brothers goes down, or supposedly Lehman Brothers, of course.
Good cast as well.
We could turn it all night. It's great. Thanks again, Bobby and Jeffrey. I know you're there as well. Nice to see you. Thanks for the opportunity, and thank you, Adam, for a wonderful talk. I'll hand it back over to Bobby. Thank you.
Thanks, all right, great. Have a good night, guys.
Thanks.
Bye.
Bye.
All right, everyone. Yeah, so it looks like that pretty much rounds it up. If I have just a couple of slides to show, and then we'll end it off for the day. If anyone has any final questions about any of the speakers or anything, I'd be happy to address it now. Or of course, we have an entire sales team available that can answer all of your questions as well. I want to say thanks again to Stocks and Commodities Magazine and Round the Clock Trader, or London Investment Week, Simon's Companies, for helping sponsoring today's event. Also, I wanted to hit one last time, we did put together a package today from all the different speakers that we had presenting that have add-ons available in MetaStock, and we're giving you almost 50% off a bundled kit of all of those. I mean, this is unheard of pricing, and it comes with like our most popular add-on in the last few years, the Candle Profit System 2.0. Our newest release, Daniel Sinnig's Power Bundle 360, that has the auto optimizations, and it's been an extremely well-received system. I wish we could have gotten it many years ago, but it's been the top seller lately. And also Colin Abrams' Paragon Trading Toolkit, which has been an established system with us for a while, and we put together a 6-part training course for that one as well. So you can get all of those add-ons at no risk, because you do have a 30-day return period on them. Plus, you'll get 2 years access of Stocks and Commodities Magazine and the Unleash the Power of MetaStock book and videos as well. All that for just $1,996. We have guys ready to help answer your questions or help set up your MetaStock account, or if you're just interested in one of those strategies, chat in metastock.com/sales chat, or if you want the whole bundle, you can go to metastock.com/euro deal, and we'd be happy to help you with that. Don't worry, this recording will be available on YouTube afterwards. So youtube.com/metastock, and you'll be able to find the video there. Or if you registered, you'll get a copy of it sent to your email as well. But I highly recommend taking advantage of this Summit Traders Pack that we put together, because normally we can't give prices that are that heavily discounted. But as a group with all the speakers, we decided to put together this full kit. If you get everything, it's near 50% off. So thanks again, everyone, for joining us today. If you're out there in London, have a good night and a good evening to you guys here in the States or wherever you may be out in the world. We wish you all the best. Thanks so much for attending. Bye.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.